Wednesday to you both.
Hello.
Hola.
Hola, Sosnov. How are you today?
Great. Never been
Why are
better.
you at home today?
They're delivering my laptop.
Ooh, the government?
The government.
From your rookie move mistake that you did on the plane.
From my rookie move mistake, and I have to be here to sign for it and to collect
Wait,
it.
what happened?
Because you don't live in a desirable enough
didn't hear
neighborhood
this?
where you could just
No.
leave something on the porch.
Oh, Tony was distracting me and I left it on the plane.
You didn't hear this, Vanetta?
No.
Oh my God, it was the biggest rookie move I've ever seen anybody do in my entire life. I mean, he's been doing this for, what is it now, 25 years, 30 years, traveling, doing everything. How do you forget your laptop? It's like...
The flight attendant he didn't really yell at me, but he told me to put it away in the thing. And
he did like his job. When he told you to put something away, you put it away. He was very...
He said, put that in the seat thing. And I'm like, yeah.
The seat thing.
Can you use a noun in the seat back pocket?
Yes.
That's what it is. He doesn't know his nouns. You're exactly right.
So I put it in the seat back pocket, and then Tony was supposed to remind me and he forgot. And he distracted me.
Why was it Tony's job to remind Tom to bring Tom's laptop for Tom?
Because I had to help him get his bag down because he doesn't know how to do all this stuff. And, and I just forgot.
No. You see, as I was walking past first class, Tom was nice enough and gracious enough. He said, I'll keep my bag under because I have so much room here in first class. Look at me, Pat. I can almost fit another person in here. Why don't you stick your bag above my area and I'll just tell everybody it's mine. So that's what I did. I stuck it over his seat. I walked back by the bathroom where my seat was. And then when I came back out, he was gracious enough to wait for me because he couldn't lift my bag out.
It was so nice. I let him use the first class bathroom.
You did let me use the first class bathroom. A couple of people stared at me, but you know what? I just proudly walked through.
Anyway,
where is this story going? Okay, back to now.
I just left it on the plane.
Okay.
And I realized it when I got to the hotel because I had a show that night and I needed my laptop and I was like, oh, I knew it instantly. And then I was like, all right.
Well, no, knowing it instantly would have been you recognized at the jet bridge that you didn't have your laptop. That's instantly recognizing you didn't have.
Yeah, when his bag was so light.
Right. Several hours at the hotel later is not instantly recognizing.
I knew it instantly when I was leaving my hotel room that night. And so,
okay.
And then
he had to make the phone call. He made the phone call to me. It was so sheepish. Like he was like, oh, you want to hear what I did?
Did you know who to call to get your stuff back?
Brittany.
Yeah, Britt.
Okay, there it is. Okay. I was going to be like, because then I was like, how did you then coordinate getting your stuff back? Because like, you don't, because I just see you talking into your phone like, Alexa, get me my bag back.
he called his adulter is what he did.
Yeah,
I called my adulter.
Well, the reason that that's crazy. Okay.
And she took care of it. And then the next day when we were leaving, they texted me as we were already through the airport. So, and then said, hey, we got your laptop, do you want to come pick it up? And I couldn't because it was a different terminal or they could send it. So they're sending it, which is very nice of them.
Well, they do their best because they realize that, sometimes
there's a lot of imbeciles who fly with them.
No, people at your advanced age sometimes have memory issues, and they're very sensitive to that.
Well, that's the way it happens. So today they're delivering, and I need that laptop because everything I own is on that thing. So that's...
How many laptops is this for you lost on public transportation in your stint with this company? My count's up to 4. How about for you, Bat?
I've never lost one.
What happened in Sweden?
Yeah.
That was stolen.
Same thing.
It's company property that
you kept your eyes on from
you.
It was Brussels anyway. It was Brussels.
Okay, I'm so sorry. My bad.
But I have a bunch of laptops. I just only use that one, and it's probably, I don't know how old it is, but it's old.
Yeah.
But I don't want to get rid of it.
Does it have any Bitcoin on it?
It doesn't have any Bitcoin. Believe me,
Darn.
if it had Bitcoin, I'd have sold it a long time ago.
Darn.
No, but it has his top tier coleslaw ranking list on it.
That's true. That's true. It does. That
He
does.
needs that.
It has a very strong coleslaw ranking list on it. Yeah.
You and Jules made it. You need it.
Yeah.
Still has it.
I'm
Still
still
has it.
kind of rating Choppers #1, but that's just me.
Gross. Is that place even still in business? It's been blessedly shut down by the health department.
Oh, it's still in business.
Are you sure?
It's great.
It is not. It isn't.
hmm
It is not great. So what'd you get up to last night? You didn't have a laptop, so you just
Last
had to
night,
entertain yourself with some TikToks.
No, I've been out for like 5 nights in a row. So last night I chilled.
Thank the Lord.
Yeah, you were
Yes.
getting a little grumpy yesterday. I could.
Yeah, last night was a not going out night. Tonight's not a going out night, and then we go back out on the road. So on Friday. So
Yes. Tell the people
Wait a
where
minute.
you're going.
This Friday we're leaving.
no, I'm leaving this Friday for the
Oh, whew.
I go on the road with Tony next week. I think we're leaving Thursday.
That is correct. That is correct.
Yeah.
I will be doing the show with Nick on Friday. Blessed be. Oof. My
Blessed be.
man.
Yeah, I have a 6 a.m. flight, which is a early. There is no. You would think at 6 a.m. O'Hare would be like kind of quiet. It is out of control at 6 a.m. 5 a.m. 6
It's not.
a.m.
I've flown out of O'Hare to New York at 6 a.m. and it's not out of control.
It is.
Did it in April.
It is so busy at 5 a.m. It's worse at 5 a.m. than it is any other time of the day.
That's demonstrably false.
You don't fly enough. You do not know. It is
Okay.
way worse at 4:30, 5 a.m. than it is any other time of the day.
What makes it way worse?
The lines at 5 in the morning at O'Hare are crazy.
But I thought that they knew who you were.
Yeah, don't they know who you are? Don't you have Clear or something like that? Or
Don't you use the celebrity entrance that like Oprah uses?
Yeah, like the local celebrity coming through.
I do not have Clear. I should get Clear. I don't have Clear.
Yeah, you should. It's easy. It's
You
good.
can't even spell clear. You need help. You need
maybe I
your
will get
handler
Clear.
to get on it.
Maybe I will get Clear. I like it. Yeah.
Okay.
Oh, that was easy. We solved that problem.
Yeah, there we go. Good job. Good job, everybody. Well, then how about you, Bat? What did you get up to last night? Or probably more accurately, what did your son get up to last night?
Yeah, conditioning last night for him, but I got the phone call I've been waiting for a week. That's right. The electrician's coming today. He's putting in the sauna, hooking it all up. That's right, Saz. We'll be sweating by 6:30 tonight together in our underwear.
Oh no.
Okay. I'm never. If I'm in that sauna, you kidnapped me and drugged me because I'm not going in that sauna ever.
Schloss has a free pass too to come in there because they did a little landscaping work. So me, you, and Schloss will be sitting there in our underwear tonight, 6:30.
Gross.
Be there, be square.
Oh my God.
I'm gonna call the Glencoe Health Department.
I don't even know if that's legal. I don't even know if it's legal having your own sauna.
Sure it is. You kidding me?
Did you talk to your HOA?
It's better to ask for forgiveness than permission, Vanessa. Just remember that. In life,
It's gonna be 82 degrees today.
Yeah, you'll cold plunge in the pool. That'll be 90.
Oh my God.
Could be good.
I guess.
Can't wait.
I love that for you then. Then you know what? You do you. Congratulations.
So excited. So excited.
I'm predicting
The
you're going to use that
enthusiasm in
sauna.
both your faces.
You're going to use that sauna 3 times in the next year. Tonight, the day you buy it, a couple of weeks from now, and then in a year from now.
And a year from now, before you dismantle it.
before you take it apart because you don't want to fix it or whatever it is.
Oh yeah, remember your pandemic palapa?
I used that for years, and I would still use that. My wife is the one that she's the one that said I'm not allowed to use that anymore. She said it's an eyesore.
But this giant whiskey ass barrel in your yard, this is aesthetic chef's kiss.
Beautiful, beautiful, beautiful.
Cool.
Yes. Absolutely. Absolutely. Got some lights around it. Very nice.
Oh,
Very
God.
nice.
No, I'm happy for how much is it going to cost for the electrical, if I can ask? Like
I
what?
mean, if you got to ask that question, you can't afford to have it. I mean, who asked that
I
question?
don't think it'll be anything. I think it's nothing.
No, it's like electrical work is expensive.
Oh, to pull the electrical, like $1,500. That was
Whoa.
it's going to cost to run it. Yeah.
Oh, yeah. I meant to pull the electrical. Wow.
I'm
We're in
thinking
the
about
wrong
getting
business.
solar panels on my roof, but my wife won't let me do that either. See, my wife is she runs a tight ship here. She says they're an eyesore also.
Wow. I mean, in northern suburbs, you don't really get that much sun anyway.
No, I got a south facing. I get a lot of sun. I got a
I'm
south.
just saying, being where we are in regionally, like we
Oh,
don't get a
yeah,
lot of
yeah.
sun, like that. Okay, I don't.
My neighbor's bill is $13 a month.
For his sauna?
No, for his whole house because he has the electric.
Wow.
He has the panels.
That's what he told you, but he really just tapped into your line.
No. He's a Jewish fellow. They don't do that kind of stuff. You got to leave it to the Italians to do that.
Ooh, hey, okay.
Yeah.
Hey, everyone, let's keep it classy, San Diego. We got a great show for you today. Just shenanigans all around, and I don't know what to do about any of it. But it is a wonderful Wednesday here on Tasty Live, and that means a lot of really good segments coming your way. At the top of the 8 o'clock hour, we got Options Jive. What happens after iPhone launch days? Ooh, this is exciting. I am very excited. Normally, Apple just disappoints everybody. But we are looking research back segment about what happens statistically in Apple when they have these big product launches.
Apple's disappointing now, down $1.
Yeah,
It's funny. We went back and we looked at the research team just wanted to have some fun with this. So they went back and looked at every single big Apple announcement.
Yeah.
Yeah.
How many iPhones have you had? Because I was thinking about this last night. And so my first iPhone, because I have Verizon, my first iPhone that I was able to get was the 6. So I had the 6 Plus, and then I had the 10, which was my favorite iPhone of all times, the iPhone X, iPhone 10. And then now I have a 13. But my work phone is a 16. Nice flex by me.
I remember my favorite phones. You talked to them almost like they were boyfriends or something like that.
They've lasted longer. They're more reliable. I can instantly see where they're at.
I don't know how many iPhones. Probably 4.
Okay.
You've
Maybe
had more than
5.
4.
Maybe 5. I don't really know.
I was just curious because, like, some people get them every cycle.
No. I usually do
every other
4 years.
Yeah. Okay. Well, we're going to look at what happens in Apple after a launch days. That's at 8 o'clock. Then it's a wonderful Wednesday. That means it's What's Your Assumption at 8:40. So where viewers write in, they have an underlying, but they also have a directional bias. Tom and Bat are going to do viewer submitted trades. That's at 8:40. Then 9 o'clock, we have market measures, risk reversals, synthetic directionality, and skew.
No,
shame on y'all for making me read that without caffeine.
That's a Jacob piece.
Yeah, that has Jacob written all over it.
He's going long call,
synthetic directionality. Yeah, I clocked that.
Long call, short put, different strikes, weird deltas.
Okay. All right. It is a skinny on options math, I'm being told. It is not a market measure. So, yes, that makes more sense. And then Nicky Bat, fan favorite, he's coming in with his Johnny trades. If you have a smaller sized account, like us normal mere mortals, not a Sosnoff sized account, Nicky Bat has trade ideas for the average Joe and Jane. So tune in at 9:40 when Nicky brings his trade ideas and market knowledge to the table. That's going to be around 9:20, 9:30 Whenever you guys stop yapping.
The Sosnoff sized account is reduced this morning.
Oh no, Oracle. Yeah, I clocked that last night, baby. I was like, oh, this is not good.
Anytime
Not good.
Sosnoff says, we all should know this, shame on us, not shame on him, shame on us. Anytime Sosnoff says, well, last time this one had a big move, so there's no way it can have a big move this time, we should be playing for a big move.
Well, anyway, that is our run of a show for today. Hey, in the meantime and in between time, do you want, oh, sorry, truth or skepticism today, you and Dylan. I'm sorry, I was remiss in mentioning that. What are you talking about with Dylan today? Do you know?
Oh, there's 3 topics on the table.
And they're all inflammatory.
They're all, well, 2 of the 3 are inflammatory.
Great, love that.
So we haven't picked the one we want to do yet. It's there's a little debate going on, but
okay. Well, that's gonna be live, 1 o'clock. You and Dylan.
Yeah, but I won't. I mean, I don't have time to talk to Dylan until after the show today. After our show.
That's fine. Also on our YouTube channel, and hi to everyone in our YouTube chat today. Make sure you hit that like and subscribe button and that bell notification so you never miss any tasty live YouTube content. Hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Let's jump in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's September the 10th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Ready for the news. Earnings, Mr. Bat.
Say again? No earnings. Coming to on the 11th, which will be tomorrow after the close, we've got a couple, but nothing for today.
Okay. Good. Duly noted. Hey, key inflation reports this week are expected to show that prices accelerated again in August, though not in a way that would keep the Fed from reducing its benchmark interest rate. Economists expect the reports to show increases of 0.3% across the board, including the headline all items indices, as well as critical core readings. I believe you're going to get PPI today and CPI tomorrow. You get that little tingle in your dingle because it's CPI. Are you excited?
I get a little tingle in my dingle because it's 3 a.m.
Gross. No, what are the expected move over today and tomorrow or whatever? What are you anticipating? What are you looking at, especially maybe in terms of treasuries? Let's talk about that.
Even the S&Ps are 20. Remember, they've been around 17, 19 the last couple of days. They're 20, so it's up ever so slightly. Volatility is basically unchanged at 1838. You can see the futures rolled there.
I mean, the expected move in the bonds for the next 2 days is less than 40 ticks. So it's not going to be that big a deal. So, I mean, we're talking maybe
0.85, not even a full point. You are correct.
Right. So we're probably talking 16, 18 is the range, the outer limits of the range. So I did buy some notes this morning, /ZN.
Okay.
Just because they traded down to, I bought them at 7.5. They're 8 right now, but they traded up to about 19 yesterday. So we'll see. I don't know. Just a stupid shot.
You did some put rolling in the yen. You did a bunch of small things. 4 or 5 trades.
Oh, yeah, because the yen and the euro, they're getting close to 21 DTE. So rather than adjust the trade, I'd rather just roll it out and adjust it, kill 2 birds with one.
You want to keep the risk on, meaning the directional delta.
Keep the risk on, but rather than adjust with a day to go, I'd rather just roll it out to the next month and just adjust there. It's the same. There's no difference.
Yeah.
Okay. Well, at least something, hopefully, to look forward to. This is an odd headline. Regional bank stocks are hot. What? PNC, I guess, Pittsburgh-based PNC is making its largest acquisition in 4 years with the purchase of First Bank amid a surge in tie-up talk among banks. PNC is going to acquire Colorado-based First Bank for $4.1 billion. Let's talk maybe KRE, I guess, or XLF. But regional bank stocks are hot, you guys.
Yeah, PNC Financial, I'm assuming it's the same thing, down around $2 or so.
Yes.
KRE, $64 and change, looks unchanged also. Nothing happening on this. Going sideways.
We've never traded PNC.
No.
And
I know, but you traded KRE a little bit when there were when all the banks were like Signature Bank was like exploding. That was fun.
Yes, it was.
Yeah, I mean, we used to have. Well, back when we built Thinkorswim, one of the guys who was vice chairman of PNC Bank was on our board, but that's the closest thing we ever got to PNC.
No. Or you've been to PNC Park? No.
I have never. I've been invited, but I've never been there.
Whoa. Okay.
I wanted to go really bad, but our trip got canceled due to bad flight. We had a flight planned out there to go to one game against the Cubs Pirates, and because my buddy had they had season tickets, and our flight got messed up out of Midway, and so we never made it.
Oh, rich guy problems.
What happened? The PJ had a bad engine or something?
No, it was the Southwest flight, and I really wanted to go because I'd never been to that stadium. Sure, it looked like fun.
Sure it was.
But I've been to Pittsburgh, but never been to PNC Park.
Well, maybe that's something that you could take up later in your life is you could go to like all of the ballparks or stadiums or all of the national parks, like, you know.
Can you imagine being a Pirates fan, though? That whoever owns that team, they haven't even given it a shot, like for 30 years. When was the last time the Pirates were relevant? Like when Roberto Clemente was still around? I mean,
man, they mentioned a good one there.
I know, but when was the last time they were relevant? I can't even remember when they were in the playoffs. You know,
they're doing their best.
No, they're not. Their owner doesn't spend any money.
No, all right. Yeah, I don't know. Okay. Hey, this is fun. Vista Shares is launching an ETF that tracks the stock bets of hedge fund activist Bill Ackman. Who asked for this?
Stupidest thing I've ever heard.
The Vista Shares Target 15 activist distribution ETF. I hate everything about this. Made its debut yesterday. There is a Buffett following fund. So I guess this is in the same vein as that. Bat, it's ACKY. I don't know if you can find that.
I wouldn't trade that stock unless I had to get shorted with your money. That's the
what did you say the symbol was? ACKY.
Aki.
Yeah, it's just trading now. $23, 20-ish bucks. I don't know. Hard to tell. It's just open.
Sure. Yeah, it just happened.
I would like to bet a lot of money that fund does not exist in a year. I mean, a lot of money. Yeah.
Well, the Vista Shares Berkshire Select ETF has pulled in $475 million in assets in the 6 months since its debut.
That's surprising, but I can see how Warren Buffett might attract more money than Bill Ackman.
All right. I'm just putting it out there. I just thought it was a funny story. I just wanted to rile you up. So this delights me.
That is such a sad commentary where we are today that people have to create an ETF around what Bill Ackman does. Oh my God.
I mean, if you're going to do something, at least make it around the legendary Carl Icahn. Yes.
I think Carl Icahn might be in a home right now.
Whatever. Finance daddy.
You know, if somebody listened to you, you're too funny.
I'm deeply disturbed, but that's fine. I like it. Hey, NASDAQ is announcing they're going to invest $50 million in the Winklevi-founded crypto exchange Gemini. Gemini will also become a distribution partner for NASDAQ's trade management system known as Calypso. In other Gemini news, Gemini lifted their IPO price range, and they're now targeting a $3 billion valuation. What are your thoughts that Gemini is getting hot?
Zero interest in that offering as well.
Okay. What about the partnership with the NASDAQ, though?
Okay.
Okay.
I mean, it doesn't do anything for me, but okay.
All right. Are you doing anything in Bitcoin or digital assets as a whole? Whether that's IBIT, Coinbase,
No,
ETH,
nope,
Bitcoin,
nothing.
Okay. Well, let's get to the big matzo ball in the room. That's Oracle. Oracle popped 27% on strong cloud growth projections, even as their earnings missed estimates. Oracle brought in revenue of 14.93 billion, missing that 15.04 that was expected, but shares still spiked 27% as the database software maker indicated hefty growth prospects due to new cloud contracts.
Oracle up $75, maybe 80. Big move in Oracle.
Gross move. I mean, hopefully, this is classic bubble talk. I mean, this is classic what we're going through right now. But we got to play a little defense today. We'll be rolling up puts early on.
Yeah.
Roll up your sleeves, boys.
Yep.
Yeah, but yes, good luck to everyone who is stuck in a miserable Oracle position right now. In other earnings news, GameStop reports a rise in second quarter revenue. GameStop reported a nearly 22% rise in second quarter revenue. That's pretty good. Shares are up around 3% in extended hours. The company's revenue increased to $972 million compared with $798 million a year ago. Hey, hey.
Hey, hey. What do you say about that?
Hey.
That's it.
What's GME doing? Somebody help me.
It was up like $2 earlier. Let's see.
See, this is a talk show.
It's up $2.
Right at the expected move, 250.
It's up $2.
Did you trade it or no?
We did not.
Okay. Are you going to go through your plan to short the bleep out of Ryan Cohen?
I always go through the plan to short the bleep out of Ryan Cohen.
Okay. Oh, did Chewy have their earnings or no?
Chewy did.
Chewy did.
How's Chewy?
I thought I saw it up $2 after the market closed, but it's down $3 or $4 to 38 and change.
Maybe it came out this morning. I didn't see it come across last night. So
Chewy came out this morning. Yeah, it was up first and then down.
Well, hey, you are lucky because we are covering this from a research perspective later today for one of our research segments. But I do have everything Apple went over yesterday. If you'd like to hear it, here it goes.
Sure.
Apple announced the iPhone Air, the thinnest iPhone ever. Tom, look at it. Oh, it's dead sexy. It's dead sexy.
Oh, no. Oh, no. She's
Dude,
lost.
that's cool. That's the thinnest iPhone ever. So, but you can also just get a regular iPhone 17, but this is the iPhone 17 Air. And you can also get like a really slim battery pack to put on the back of it that can like bring you to like 27 hours of phone battery life. That's pretty cool. No, 40 hours of video playback when combined with the iPhone Air. It has dual capture video. They upgraded the iPhone Pros to be better for content creators. The AirPod Pro 3s have live language translation. But what I like about Apple, and they have a new Apple Watch that's also thinner. But what I like about Apple is a lot of the new features are going to get rolled out to older generations through just a software update. So even
I
though
don't believe them.
what? No, it's cool. So even though I only have the AirPod Pro 2s, I could get the language translation, finally find out what they're saying about me at the nail salon. Remember that episode of Seinfeld where Elaine has to bring George's dad, Frank, to the nail? No? Okay.
I guess not.
Crickets. Hey, I'm out here working hard, everybody.
Apple's down $2. I mean,
all right, there you go.
Under
The number
underwhelming.
just came out. Bonds are a little higher.
The S&Ps are higher. They're up around 20. They're up 30. Bonds are up higher too. They're up 3 ticks after trading under 117. They're 117.07 or 8.
Yeah,
Bitcoin up 2,300.
We just sold
Oil
our
up
notes
70
out.
cents.
From,
Up and away, Saznov.
just sold our notes out from this morning. S&Ps here.
It 65.52, Saznov, above your maybe interesting area from the other interesting.
No, this is the right here. This is where you gotta. Do we whack them and how?
Fade the first move.
I haven't yet, but we'll
Usually
see.
got to wait 24 to 48 hours.
We'll see. We'll see.
Happens, and also another number tomorrow. So just keep that in mind. Pace yourselves, boys. Bat, are you gonna get this sexy phone?
You know what? I think I got a 10 still. I am due for a phone. I don't know if I will get that sexy phone. I do like the thinness of it, although
I like the thinness of it, except I really kind of want a flip phone.
Are you gonna get a pager too? What year is this?
you're going backwards, Saznov.
No. I
No,
just
I know
don't
they're coming back. Flip phones.
I don't like
they're
all the
like a
butt
tablet.
dials. Maybe I'll get a foldable phone. I just don't like the butt dials.
Okay, all right.
Butt dial.
Butt
I
dials.
haven't butt dialed anybody in years.
I butt dial every day.
A new update, Klarna raised $1.37 billion in their IPO, setting the stage for a market debut that could set the trend for high-growth fintech listings. The Sequoia Capital-backed Swedish company and some of its existing investors sold 34.3 million shares at $40 each, above the targeted range of 35 to 37. This values the Klarna at $15.11 billion. This is fun, though. I looked it up. They were valued. Do you want to guess what they were valued at in 2021?
20 billion. I'm just going to guess. I don't know.
What do you think, Bat?
I'll go with my man Saz because he's always close, because he's an ex-market maker.
Well, so they're valued now at 15, but in 2021, they were valued more than $45 billion.
Wow.
You talk about a write down.
I did not know that. Well, that's
I thought I was like, let me
in
look this up.
2021, they weren't going public, so that was just what Sequoia was trying to tell you people they were worth.
Okay, well, be that as it may, that is quite the haircut.
Yeah, but again,
That is a haircut.
when you're a private company and you just have huge investors like Sequoia, they just make up a number so they get other people to give them money. It's just all bullshit.
Well, we will see what happens. In other IPO news, stablecoin issuer Figure Technologies is upsizing their IPO as demand for crypto-related stock soars. The company is now considering a new IPO price range of $20 to $22 a share, up from 18 to 20, and raising the number of shares to 31.5 from around 26. The new pricing will raise roughly $693 million, targeting a valuation of around $4.1 billion.
Crazy.
Have you heard of this company?
No,
I haven't.
not
You
at
have
all.
that?
No, I haven't. I said no.
Oh yeah. Well, I guess the best analogy, straight line analogy, is Circle. That IPO. What's Circle doing today?
Let's take a look. CRCL trading at 120 and change on the bid, up about $2. I mean, the market's higher, but up about $2. Let's see what Chewy's doing. Just see if this market's done anything to Chewy.
Chewy's down 4.
No, yeah, Chewy's a PIG pig. Oracle's still up.
Okay. Hey, in other news, this story I put in here just for me, so bear with me. Chinese-based Unitree Robotics is planning an IPO that could value the humanoid robot company at around $7 billion. Look at his little face. He's so proud of himself.
I don't know if I like this.
Oh, I love robots. Oh my God, shut up and take all of my money. Oh my God, his little face.
Yeah, I don't know about this.
I don't know about this either.
Look, Bat, when a robot is taking care of you because none of your children can be bothered, you're going to change your tune.
You're 100% correct. I never thought about it like that. See, I'm not thinking properly. You're right. I love this.
Yeah. But Tom, do you have any thoughts on a Chinese humanoid robotics IPO?
No.
But conversely, I'm going to bring this back in line. Tesla and Musk's new pay package, where he needs to get to hit all these milestones. The main way they're saying that he's going to do that is through Tesla's humanoid robots, and saying that like that market is basically an untapped market that could get Tesla to several $1 trillion worth of sales. Do you think that that's true?
I think it's ridiculous, but it's a carrot, so who cares?
Okay.
350 up $3 Tesla.
Ooh,
How do you
okay.
rank is only 6?
AI firm Mistral is now valued at
Menstrual?
Mistral. I know. I was like, this is the mistrial? Mistral. It was just the worst name. Mistral is valued at $14 billion as chip giant ASML takes a major stake. The Dutch chip giant gained 11% shareholding in the French company. The investment round now doubles the
Who
previous
is
value.
buying all these things?
Yeah, I don't know. But every day I was like, what? Who? What?
Who's not buying them? So enough, all the cool kids are doing it. Where are you?
I guess.
NVIDIA also had backed the company in an earlier round of funding. So just everything is crazy.
Yeah, don't mention NVIDIA these days. NVIDIA's
Well, NVIDIA, let's go to the next story. NVIDIA's unveiling new AI chips for video and software generation, dubbed Rubin CPX. They will be built on NVIDIA's, I'm going to the next story here, John, on NVIDIA's next generation Rubin architecture, not that kind of Rubin, Tom. And it's the successor to their Blackwell technology. What's NVIDIA doing?
NVIDIA's catching a bid now, up $6, 176. This is going to put it closer to its recent highs of 186 or so, after going down to around 166. Put it in the middle of most recent range. So
Gotta just always buy those NVIDIA dips, man. What are you doing in NVIDIA, Tom?
I don't have a position. We were a little tiny bit long, but to be fair, the stock has had a super low IVR.
That's fair.
Yeah, it was under 1, Tom.
Yeah, so I covered it about 2 days ago. Like I said, we were just a little bit long. We were short some like 162.5 or 165 puts, and I just covered them because at that point there was nothing left there. I don't think.
Yeah.
Block, the artist formerly known as Cash App, which are Square, which is now XYZ. I hate this so much. Block has defeated a shareholder lawsuit over the 2021 Cash App data breach. The technology and financial services company, led by Twitter co-founder Jack Dorsey, won the dismissal yesterday of litigation claiming it misled shareholders in connection with a large data breach at their Cash App mobile payment service. Like I said, it's Square, Block, XYZ.
Saz, what do you think here?
I'm not touching Cash App and not interesting to me at all.
Okay.
All right, that's the end of that.
I mean,
I'm shooting my shot. I'm trying so much.
Really crappy ass platform. Nothing interesting there at all.
Hey, here's something interesting, and I kind of don't hate it. President Trump's administration yesterday rolled out a memo aimed at limiting direct-to-consumer advertising for pharmaceuticals. One senior administration official indicated that recent Hims and Hers ads stood out as an example of what should be prevented. Doctors have been frustrated for a long time with direct-to-consumer ads for drugs that end up distorting their relationships with patients. You can't even watch the nightly news without being bombarded by 15,000 drug ads. America, ironically, is the only country where pharmaceutical advertising is legal, but also conversely, working for a pharmaceutical company paid for my house. So do with that what you will. I'm playing both sides, baby.
Hims is actually up a couple dollars on this news.
Okay.
Hims is up. It's just up. Hims is trading $49, up about $1.50, almost $2.
But it could also affect a major company like Eli Lilly, who's a massive marketing budget. LLY.
LLY, always one of the leaders in the clubhouse, is trading at $7.47. It's actually down about $2, 2.50 maybe.
There you go. From the Who Asked for This department, there is now, in partnership with Carnival Cruises, Van Leeuwen Ice Cream is now releasing an SPF flavored ice cream. Oh my God. The sunscreen flavored ice cream is to honor the end of summer. No. The flavor is generating enough buzz. If it generates enough buzz from the marketing campaign, it could have a wider, limited time release. Nobody wants this.
Why would anybody want this flavor? I'm just curious. Like,
I don't know.
I'm
Maybe it tastes more just like coconut. I'm hoping it's more just like a coconutty kind of like. I don't want anything that tastes like sunscreen.
Yeah, right. Doesn't seem
No.
right.
I
It
mean,
does not. But
yeah, if it tastes like
CCL.
if it tastes like coconut oil, then yeah, sure.
Yeah,
Go for it.
CCL, Carnival Cruise Line bad. I don't know what CCL is doing.
Oh, that's the one that was going bankrupt that Tom told us about.
Yes, exactly.
It hasn't gone bankrupt if you've been looking at it. It's trading $31 and change. Looks like it's up 10, 20 cents, something like that. But it has a good market cap. Not bankrupt yet.
Finally, I know I've had like miss after miss for my stories this morning. Tom has not been impressed at all. Can't even get him to crack a smile, but I have a little ace up my sleeve. This might do it. Shake Shack is launching French onion soup items as they lean into premium promotions. They had recent success with their Dubai chocolate pistachio shake, but they're now launching a French onion soup burger. Ooh, Tom, what are your thoughts?
At first glance, I'm hearing about it for the first time. I think I'm all in on this. I like.
So it's a 1/4-pound beef patty topped with a Gruyere cheese, caramelized onions, crispy sweet onions, and roasted garlic Parmesan aioli on
Yeah.
a toasted bun.
That works for me.
You'd be able to get into that?
Yeah, I mean, I don't really. Yeah. I mean, the next place I'll see a Shake Shack will be New York City at LaGuardia Airport. I'm not sure if it's the same.
I love a good Shake Shack. I think it's
I will have to say though, Tom,
the
in
best.
order to get this French onion goodness, you have to order through the app.
Oh,
Oh,
I'm
hate-
out.
I'm so sorry, boomers. It is
I
not
hate
boomer friendly.
Why can't we just I hate ordering over an app. Why can't I talk to
I
anybody?
like to walk up to the counter and order it myself.
I love ordering through an app and I don't have to talk to nobody.
That's the problem with your generation and the one previous to you.
Yeah, well, what
I
are you gonna
don't
do?
like the whole concept of having to order through an app because then I got to have all these stupid apps and passwords and and they don't even let you log on as a guest. It's like so ridiculous.
And I don't need the free fries after I order $750 worth of food.
I'm so sorry, boomers. I'm so sorry.
Yeah. Plus, I don't know where I'm going. Like, I'm not, I'm there. I just walk by the place. I want to go in. I don't want to have to make all those decisions ahead of time.
You'll have to have your daughter order for you now.
Plus, when I get there, I'm going to want something different.
Okay. I think maybe later it will be more widely available, but at first it's just on the app. So,
Hard to tell. Not a lot of stock is traded. Only 86 shares have traded all morning.
I'm boycotting it then. I'm boycotting it till it's fair for everybody. I'm all for equal fairness when it
You're
comes to
such a
ordering
man of
your
the
food.
people.
I'm a man of the people.
well, in other restaurant news, Cracker Barrel is suspending their restaurant remodels after their logo controversy. The chain had only remodeled 4 stores with this more modern design. I kind of really just hated it too. It's just so sterile. I love when it just looks like you're eating at a hoarder's house. But Cracker Barrel is.
I mean, isn't Cracker Barrel design like so old and kind of?
I love
It looks like a country store. Yes.
Yeah, I love the kitschiness of it. That's the thing. So the reversal follows. Cracker Barrel unveiling a new logo, which again nobody asked for, which received backlash across social media, and then that returned to its old branding. The stock kind of still can't catch a break. CBRL.
CBRL, not something I've ever traded. $50 or so on its butt after everything, going from around 60 to 50 after being around 70 in July.
Ouch. Ouch,
Mm.
ouch. But now I just want chicken and dumplings, so. Finally today for my viral video of the day. Anyone who knows me knows that I love animals, and I love cats and dogs equally. Cats living with dogs, it's chaos. But I also like how they're very distinct personality wise. Cats are cats, dogs, dogs. Anyway, but this is just a funny video illustrating one of the funny differences between the two. Watch this. I'm trying to give the cat a pancake. The cat's like, what is this? And the dog eats the whole thing in the napkin.
It's so good.
Well, that's a retriever. Those things, they eat everything.
I was like, yep.
Reminds me a lot of Sosnoff back in the day. I remember watching him eat that.
Reminds me a lot of
cellophane on
the
it.
black lab I had that would eat the paper, everything. He didn't care.
Was that Bob?
Bob would eat the paper, the plastic. He'd eat a shopping bag to get to a bird.
And that's who I'm named after on the follow page. That's right, Bob the Trader. That's me. I'm named after Sosnoff's dog. So I really appreciate that, Sosnoff. Can't have my own identity, but I appreciate you naming me after something that you love so much. We're going to take a quick
By the way, our own Tim Knight has a little puppy black lab, which he brought to the show. Very cute.
What? Give it to me.
Yeah.
Oh, you would have liked this dog. Beautiful black lab.
Oh, puppies. Okay.
We're going to take a quick, you girls done?
Yes.
We're going to take a quick 90-second break. Come back. We got more Tasty Live after this. Confirm and send next.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with forex, now available on Tasty Trade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Come on, Tomas, we are back. You see how that happens? The powers that be, Sadnov, bring us back in and out. Thank our production team, Saz. Say something nice about them.
Ooh.
Great job out of you, Sadnov. That's right. Thank you, production team, for the last 14 years. You guys are amazing. Even the S&Ps are amazing, too. They're up 30 handles, Sadnov. They're just about 12 or 13 handles off of their highs. Trade up to 56.65. They're 65.52. NASDAQ up 123. NASDAQ and even the S&Ps have been up all morning, at least since I've been watching the market. Russell and the Dow have been the two weakest. The Russell's up around $8 right now. That's a decent sized move, equal to the even the S&P move. And the Dow, which has been a lagger yesterday and then caught a bid later in the day, is down $17 right now. Volatility in by 15 cents. You might notice a new front number here at 18.29. That's because the volatility futures have rolled, but you'll notice they're still on their lows, down 11 cents. Bonds completely unchanged, 117.04 after trading up to 09 and under at 116.22. They're sitting right in the middle here, a little bit higher end to the middle at 117.04. Bitcoin up just about 1,700 after trading over 114. It's 113.4. That's a good 1.5% move. Ethereum doing just as well, up 68 in tandem with Bitcoin. Oil up 54 cents. You'll see the last 3 or 4 days catching a little bit of a bid here. Gold, it's not down, so it's up 60 cents, sitting sideways right now after trading almost up to 3,700. It's 36.80 right now, mid-range for the day. Silver up 12 or 13 cents. Oracle is the big one to the upside today. Sadnov, 318 on the bid. That's going to put it up, I don't know, let's round up $80 or so. That's all I got. Chewy down 3 or 4. GameStop up around 2. Oh,
Yeah.
they're taking you away, Sadnov. They're giving you the bat treatment here for not saying nice about the production team. See how easy that was, Sadnov? See how easy it could be eliminated?
Bonds, after that, quote, big number, basically, I don't know, unchanged down 2. They didn't even move.
Yeah, it's basically all quiet on the Western Front.
Yeah, notes upticked a little bit. Like I said, we bought them at 7.5 this morning. They're over 11.5 now. That's it. Nothing really.
No
They sold
change
off
to this
natural
bull
gas
market.
a little bit. Natural gas a little lower, gold's a little lower, but that's it. Nothing really.
Yeah.
Well, this is the gap up I was looking for.
Okay.
I haven't sold them yet this morning,
I can see that.
but I did sell some yesterday afternoon.
I saw that.
So we'll see what happens. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live, and here we go. Let's see a little confirm and send. It's 7:53 Central Time. We are located in Chicago in the West Loop, and thank you for joining us.
Thank you for joining us.
Let's see what we got here. These are emails that came into us overnight. We get a ton of them, and last night was mostly Oracle for me.
Yes.
But,
yeah, my emails were dominated by Oracle.
But I'm not going to dominate these by Oracle, so let's do this. If I have a covered call where the short call is right or in the money, right at the money or in the money, why wouldn't I continue rolling out in time so long as I'm collecting a credit? Am I just trying to think of why I wouldn't want to do that?
No, you certainly can. If you want to keep the bullish position on, right at the money is always going to be for a credit. Not if, it's always going to be at a credit. Same strike, always going to be at a credit. So yeah, sure, go right ahead. I have no problem with this.
I have no problem with it either. Why wouldn't you if it's working for you? And, I mean,
I don't think we've ever said anything to the contrary.
Yeah, in fact, we'd be fine if you wanted to roll up the strikes and pay a small debit. We don't care. We'd be fine
Yeah,
with
that would give you a little bit more long delta if that's
Yeah.
what.
We don't care if it's a credit or a debit, actually. But the only reason that we wouldn't do this is if your assumption on the stock has changed.
That's
So
correct.
if you think the stock's going too far and you just want to take your profits and close out, then just take your profits and close out. But if you still want to hold the position because you're still bullish on the stock, yeah, do it for a credit, do it for a small debit, move the strike up, whatever you want.
Sure.
We would never get out of that position if you didn't want to. Let's go next slide. I have been playing around with the backtester on Tasty. And for the most part, all the short premium strategies have had a lower P&L over time versus buying and holding. I know that selling premium is profitable in the long run, but what am I missing?
The most for short-term strategy had a lower P&L versus buying and hold. I don't know if you're missing anything. I don't know what kind of back testing time frame you had on this. I mean, we're at all-time highs. You know, if we back off of all-time highs, I think you'll see that kind of reverse or get more in line where the premium selling will show a little bit more profit than the buy and hold. Again, it's too hard to tell here, but at all-time highs, buy and hold is going to beat just about everything, except if you were to do something like, you know, a sell a put spread, buy a long call spread, or naked call or something like that, which is a double long, which we would call a stupid, whether it was double long or double short, just because both sides of it. I mean, I can give you option strategies that would make buy and hold look silly if you tell me what the market's done.
Yeah, the simple answer here is that if you backtested for the last 10 years, which is probably what I'm guessing that they've done, or if you backtested for the last 10 years, or you backtested just for, you know, parts of maybe, you know, if you cherry pick 2025, sure. I mean, anytime, Tony's right, anytime the market's at all-time highs, or anytime you have certain stocks that have gone up, you know, 100 or 200% off their lows, you know, I mean, yeah, nothing's going to really compete with that. Talk to me after the market's had a 10% sell-off at some point, maybe in the next 100 years. But I mean, there's a lot of times when stocks don't go straight up. You know, that's all. Strategic investing is not designed to compete with passive investing. They're two completely different things. Yeah. But again, you know, take stock market bubbles out of there. Yeah, listen, if you could have asked the same question in 1999 and 2000, and you would have got two different answers. If you had asked it in January of 2000, there's no way you would have done anything but passively be long. Right. But if you had done it in 2002, every single measure would have shown, you know, that buy and hold was the worst. Right. And then the same thing in 2008. You know, it just depends. So yeah, don't overthink this. Doesn't matter. Let's go next slide. I got a poor man's covered call on the stock that is going parabolic. I have a deep in the money leap. That means they're long a deep in the money leap. I've been continuously trying to roll the short call up and out, but I can't keep up with the stock. In general, what is the best way to manage such a position?
So I hope that they've been able to. So here, look. So they're buying synthetic stock. They're buying a deep in the money leap option. That's their synthetic stock. Yep. And they're synthetically, or they are selling a call shorter term, further out of the money. So let's say the stock is 100. They're buying the 70, 80 call, and they're selling the 110, 120 call somewhere closer in time, and the stock keeps running. I hope they've been able to keep rolling that short option up. You leave the leap option. Leap option is that synthetic stock. You keep that where it is. They say they have a hard time keeping up with the stock. As long as they've been rolling, man, this is a high class problem. This is exactly what you want it to happen. Kudos to you. Keep it going.
Yeah, this is, you know, anytime you do a poor man's covered
ride the wave.
Anytime you do a poor man's covered call, you are long delta. And if you're long delta, you should not have a problem with the stock going parabolic. Yep. I mean, if you're complaining that you didn't make enough money, or that, you know, that's a different story. It's hard to keep up because the stock, I mean, it's a very difficult question for us to answer, because this to us would be the best case scenario. I mean, you don't get spoiled by the fact that you didn't maximize every single trade. You know, of course, if you do a poor man's covered call and the stock goes parabolic, you would have been better just holding the long leap. But you don't know that. Right. Of course not. You know, in advance. So this is a high class problem. I would not worry about it. Let's go next slide. Yep. When you roll out a trade to the next month, is there a checklist of things you consider when deciding if you want to keep the same strikes or widen them out?
Sure. I mean, Delta's going to be the first thing. Again, I'm going to throw out and keep that there's tight liquid markets and the implied volatility is high. It's something that you always trade. You like to trade. Those have got to be given, I think, kind of common sense. Remember, high IVR is what we always do when we look at the sell premium. After that, it just comes down to delta. Do I have the delta that I want, whether it be delta neutral or a little bit short or a little bit long? So for me, the only reason I would roll from 1 month to the next month and change the strikes is if the delta is not correct.
Yeah, Tony's exactly right. I mean, when you roll out a trade to the next month, there's the only time we wouldn't roll out is if the IBR drops super low or if our assumption has changed on that stock. So there might be a binary event coming up, like earnings. It might be marginal because of low IBR, and also the strikes might have gotten very narrow. And sometimes when the strikes get very narrow, we like to widen out the strikes. I would say that most of our rolls, we do not keep the same strikes. So when we roll out from 1 month to the next, most of the time we will adjust the strikes because over the course of a month, you're going to make certain intra-month adjustments. You're going to, the stock's going to move, and there's almost no chance you're going to use the exact same strikes. Like this morning, I've already rolled my yen position from SEP to AK because the future's a little different, and I've rolled my euro position from SEP to AK. Both of those, I changed the strikes because the underlying has moved over the last month.
Right.
And it's no more delta, this or that. One was a credit, one was a debit. It doesn't make any difference. I just widen the strikes, recenter everything, and start over again.
Perfect.
Let's go next slide. I recently ran a back test, a lot of back testing today on the platform, where I sold an at-the-money put spread and bought an at-the-money call spread. That's kind of
this was the stupid I was just talking about a moment ago.
Okay.
Not because of the directional bias, but because it's too longs or too shorts. But go ahead.
Yeah, so they sold an at-the-money put spread, bought an at-the-money call spread. Over the past 13 years, it has been very profitable, for sure. What do you think of this strategy?
I think it's phenomenal. If we have another year like we've had this year, it will be the soup du jour, the one to have on for those who participate. I mean, short put spread is long delta. Long call spread is long delta. It's a double long at market highs. That's the obvious it's going to work and work well.
Yeah, I mean, listen, this is an absolute classic. This is, the market's up. These are double long positions. Over the past 13 years, this strategy would have killed it. I mean, but that's hindsight.
Yeah, right.
If you could tell me what the next 13 years are going to do, I can tell you what strategy to use. If you could tell me we're going to be 13 years from now, sure, I'll be good. So that's all. I mean, this is kind of your cherry picking here.
Yeah.
Let's go next slide.
Hey, you should have done a naked call. Forget about the spread. It would have been even better.
How do you judge if you're having a successful year trading? Is it simply P&L, or are there other things to take into consideration?
You know what? The end of the year, when I look back at my trading, is always melancholy. Like very few years in the 40 plus years I've been trading did I say to myself, man, I killed it. I did way better than I expected or ever wanted to, that kind of thing. I'm always judging myself and thinking I could have done a little bit better. I got caught here, I did here, but that's trading. That's real trading. That's the way it is. So is there anything I judge it by? I mean, I've been fortunate enough to see Sosnov's portfolio for the last 20 some odd years, and I beat him every year. So it makes it a lot, I've been fortunate enough to have that. Someday in the future, I'm sure I won't be able to see that anymore, and it'll be a much more depressing time for me.
Oh, I'm taking you off all my accounts today for that comment. It's kind of this is the way. The reason we put this in here is because I thought about this for a sec, and what's kind of interesting about it is even when I've had my best years ever, I was still mad I didn't do more.
Yeah, sure, right. Always.
I'm not mad, but I was still like,
You
Oh,
feel like you
man.
missed out on an opportunity. Again, I feel the same way. But go ahead.
Yeah, I mean, throughout my career, trading, like, I've had some years that were really good and some years that obviously not as good. And but every time I had a really good year, I was like, oh man, I could have done so much better if I just done this or this or this. So I'm like Tony. I don't really judge a successful year because for me, it's been a 44-year grind.
Yeah, it's
Like,
been a journey, man.
this is what I do. So I don't think about it in terms of, like success like that. I do think differently for, investments that we've made or businesses we've built, things like that. I think a little differently. But for the trading, no, I never feel like I maximize what I should. Never.
Of course not. And I think that's healthy, but listen, I digress. We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up next, Osnoff?
I have no idea.
That's right, an option jive. Good job out of you. We'll be back in 90 seconds with Tasty Live. Woo-hoo.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive. That's right, Sosnoff. It is time for an option jive. Even the S&P's up 32, jive into the upside. But you know what? Let's see what the guys have come up with here.
Well, today they had a little fun. They decided they wanted to take a walk on the wild side and look at a little Apple be Snapple. It looks like Apple's down $1 today. It's been down every day since they've announced their little, WWDC, whatever it is. Who knows?
Yeah.
But let's take a look. First of all, what time is it? 8:11. We got plenty of time.
Yep.
iPhone launches. It's funny when you do this. The reason we do some pieces of research is because there's like a little binary event, and you think that little binary event's going to have like some impact on the market, because they've been building it up for a while, and then you realize that nobody cares, and the real, the market cares way more about like Oracle today and all the little tech stuff. Doesn't care about Apple. I haven't heard one thing about the Apple launch. I mean, Vanetta cares, but she also cares about Taylor Swift and Travis Kelce. So different world.
You're so rude. You're so rude.
It's not rude. She cares. There's certain things. She's an Apple girl and she's a Swiftie. And so she cares about certain things that are different than the things you and I care about. I care more about that, the
brisket sandwich somewhere. Yes.
Yeah. I mean, I care more about the onion soup burger than I do care about the Apple, whatever you want to call it, Apple launch. I am about, I finally got filled.
You did get filled.
I'm about to sell futures at 56, which is my first sale today.
That's where you did sell, 56.
I know. I wanted to get short, so you got to put your money where your mouth is.
Yes, you do.
Let's do it. iPhone launches, a historical review. This is kind of fun because we decided to look at company binary events. Let's go to the first slide. So Apple 17 launched yesterday. We examined 11 years of data across every iPhone launch, from the iPhone 6 in 2014 through the iPhone 16 in 2024, to focus on price behavior of the stock and the volatility dynamics around the launches. How did they only go through from 6 to 16? Well, I guess one a year, maybe. All right. Let's take a look. Go to the next slide, John. So the price behavior around recent iPhone launches, 1 month before to 1 month after, 4 out of 5 of the 1 month returns were up.
That's good. If you like the stock, right?
Yeah, meaning that, isn't this kind of like the classic buy the rumor?
Sure.
Yeah, 1 month prior, and which is exactly what happened in Apple this year. 1 month prior, stock went kind of straight up. All right.
Yep.
So it's for sure a buy the rumor. Let's go to the next slide. When we look at 15 days out, the distribution skews negative, with 58% of the post-launch moves negative, which follows a sell the news phenomenon.
Yeah.
And that is exactly what we saw this time as well.
Yeah.
It was a buy the rumor and it was a sell the news. But as we've shown in previous slides, the markets have a tendency to lean bullish 1 month out. 67% of the price moves fall between -3% and +2%. Man, that distribution curve never fails.
Yeah.
Numbers,
so funny, right?
Large numbers seem to come in right spot on all the time. Let's go to the next slide. So this table compares annualized volatility before and after launches. Mixed outcomes. There is no guarantee for a vol spike or crush, so beware of overpaying for implied volatility. So let's just take a look here. Kind of pre-launch volatilities from 16, 15, 14, 13, and 12, and then post-launch. You couldn't draw a single thing from this.
I was going to say, what do you make of this?
Nothing.
Okay.
Nothing.
Because I don't see anything there either.
This is the argument for this whole piece today is the argument for buy the rumors on balance. Buy the rumors, sell the news, buy rumors, sell news, and understand that many of the results are incredibly random.
Which is exactly what we talk about all the time, right? I mean, we're always looking.
Stop.
Right.
But sometimes you need.
But we concentrate more on selling the news than buying the rumor. I mean, it's rare.
Oh, yeah. Yep. But there's not even a volatility play here.
Right.
Let's go to the next slide. So some of the key takeaways. First of all, price action is more muted than expected around launch days, as most price moves were within 3%. Now, when you're talking about a $230 stock, a 3% move, still a pretty big move.
Sure.
But, it's 5, 6, 7 points, whatever. But on a percentage basis, nothing much. Sell the news, bias dominates. There's downside skew in price with an average price move of down at least 0.5%, 15 days post-launch. Okay. And volatility is inconsistent for each launch. This has 10 years of data. Option traders should stick with tactical frameworks like debit spreads and iron condors or whatever else you want to do, but there isn't necessarily a pure play volatility play at all.
Very good. Sweet, concise.
It's a fun little piece talking about apples. We wanted to do the research. It takes a long time to do all that research, but it's cool.
We'll take a quick 90-second break and come back. We'll have plenty of time to catch the opening bell right after this. It was Tasty Live. Even the S&P's up 35 and change.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
It
was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal. Look at
that's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. Let's say we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
oh, here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Global markets never sleep. Explore them with forex on Tasty Trade. Get in on 80+ forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on 1 second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area. I'm washing, and the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
Well, there's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing. So I stop washing my hands and I'm grabbing like towels to clean. I'm listening to what he's listening to, and I hear your voice.
Why didn't you go knock on the door and say,
he's taking a shit, all right?
I know. Oh, why didn't you knock on the door and say, hey, Tony Batista here?
I mean, what am I doing? Hey.
Right, autograph session happening right now.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live at the opening bell. The moment we've been waiting for. Even the S&Ps have been steady, up 34. NASDAQ up 135. Russell up 380. And the Dow finally turning green by $3. There we go, down $1 now. Volatility in by 15 cents. 18.25. Bonds back near their highs, Sadnov. 117.10. That's been the trade that keeps on giving for you, up 6 ticks. Notes are also up on a percentage basis, about the same. And Bitcoin's having a big 2% move, over a $2,400 move to the upside. 114.1. You can see here, been going sideways between around 114 and around 111. For some time now. Ethereum up $83 and oil up 42 cents. Gold up $4.50. That seems to never go down. Look at this move in gold over the last couple of weeks. It's been stellar. Oracle is your other one to the upside today. Oracle set to open around 320. That's going to be an $80 plus move. That's going to be a big one.
Yeah, the best move we made in gold was closing out our position.
Yes, I still have a GDX trade that's giving me a little bit of fits, but I'm hanging in there, Sadnov. I'm hanging in there. I'm trying.
Yeah, GDX is not nearly as bad as GLD and GC. Those were the painful ones. Yeah, that's all I got. I'm ready to go. I got.
You got about a minute and a half before the market opens here, Thomas.
Yeah, I got to figure out what we're going to do in Oracle. I mean, obviously, I'm short puts that are death trade.
Short calls.
Short calls are death trade. I'm hoping that the stock is at least $10 or $15 lower once we get going, but I don't know.
Hasn't had a downtick pre-market so far, but it
opened at 267. I thought we were totally safe, and it's just rallied the entire night since, which I don't understand at all.
It really hasn't stopped.
It hasn't stopped.
No.
I am long. I'm short the 200 puts. I'm probably going to have to sell some ridiculous put. God knows what.
I mean, you're probably going to be up in the 300 handle, 290.
Oh, 310.
Yeah.
Oh yeah.
Mm-hmm.
I mean, I'm going to be trading the options.
In scramble mode right now, Sadnov and Oracle.
Scramble mode. This is when you hit the ball into. This is not true scramble mode. Is when you hit the ball kind of behind a tree. This is when you hit the ball into basically a lake. You're
deciding whether you want to like roll up your pants. Even the S&P is only up 23. Oh, there you go.
Now that's weird. Got filled.
Yeah, well, even the S&P is at 547, 546.
Yeah.
Got filled. Mm-hmm.
Let's see. So this stock, Oracle opened $10 lower. Doesn't surprise me.
Oracle opened $10 lower.
$10 lower from where it was trading pre-market.
Oh, that's the way a person with short delta looks at it. I got it. Otherwise, somebody would say it's up 73 or $74. I get it.
Otherwise, somebody would say that, Tony.
Otherwise, somebody would say that. That is correct. Oracle is going to be a little bit of a pain here, Sosnoff.
It's going to be a little more than a little bit of a pain.
Mm-hmm.
A little bit of a pain would be literally a little bit of a pain. Oracle,
a comma or so less. Yes, I agree with you.
Yeah, comma less. I did buy some stock last night. Don't ask me why. I bought some stock at 290-ish.
Yeah, not nearly enough.
Oh my God, no. No, not nearly enough, said the...
You did roll up to 710 as you discussed pre-market.
I did roll up to 710.
Mm-hmm.
Not enough, but I rolled up to 710.
Yeah.
I have not sold my stock out because I still have too many short deltas. Oh, not a good look for the good kids.
No, not a good look for the good kids at all.
Yep. And I may have, let's see, what do we got here? OC 185. Oh boy.
Not even your scalp of the even the S&Ps there is going to make up for this.
No, not even. Nothing is going to make up for this. There's literally nothing in my life that's going to make up for this. The only good thing about this is
even selling them just off of the highs. It's not
the only good thing about this is it's not my worst trade ever by far. It's not even close to my worst earnings trade. But I just rolled up my OC puts. I have rolled up my 2-day puts. I mean, what are you supposed to do with the 2-day puts?
Take them to October eventually. I mean, to either after the show or
take a look
during the show.
What else is troubling here?
Let's see what's a bucker so far. Bucker, you got Humana down around $10, Meta down around 8 and change, Netflix down 6 and change. These stocks usually don't see lower with the market higher, but you can see the NASDAQ selling off by about 100 here, only up 66. Chewy up, down $5.60. That's a big 13% move to the downside on Chewy. Apple down almost $4. Amazon down almost $4. UNH down 2 and change. Vanetta mentioned Lilly earlier this morning. It's down 3. JP Morgan and BABA down around 1.5 or 2. IBM down 50 cents. Google down 50 cents. You had a couple of buckers here, Sal, enough popular names, but you do have Oracle up 82 now. CRWV up $18. AVGO, you know it as Broadcom, up another $18. Broadcom has been on a tear here last couple of days. Reddit up 6 and change. NVIDIA up 5 and change. And Tesla up 5. Coin up 3. So you got a little bit of some stocks that are to the downside, but you still got your solid market to the upside. Sadnov, what are you thinking here? Rotation out of some stocks back into others? Volatility in by 15 cents. That hasn't moved.
Apple down 370. Like, this is such a weird start.
I agree.
Apple down 370. I mean, some of these other stocks, wow. Haven't really,
bonds are up 5, 117.09.
We're lucky we got that stuff off in Oracle on the opening, but it's not even going to be good enough at all to.
Sure, it's a good roll on a horrible trade.
Right, good roll on a horrible trade is exactly right. Doesn't help.
No, it does not.
let's take a look here and see what can we possibly
what can we possibly do?
Yeah, what else can we do here? I'm just looking to see what is going on this morning. Oh boy, Mr. Batista.
Yep.
Let us see if we have anything else that's kind of jumping off the screen. Yeah, you mentioned GDX. That stock sucks. Hate that stock. Oh, Reddit. Reddit is a little bit of a thorn in my side. I ain't gonna lie.
Oh, I know. RDDT, Reddit, up almost $8, a little over a 3% move here to 248.
Little bit of a thorn in my side. Time to say goodnight to live cattle, just so you know. So I have been fighting this live cattle position for the first time this year for the last 2 months. I got to see if I made or lost money. Okay, so I've been in this battle with /LE. Where are we here? Oh, I guess it's about a wash. All right, nothing. I thought there was something there. Nothing. It's about a wash. I've been battling that. I've been battling that sucker for months. Here's my take on /LE. If you're going to trade
no bueno.
You're going to trade it directionally. Like take your shot up or down. But it's a hard stock to sell premium in.
Yeah.
Not impossible. It's not. It's better than like copper, but but nothing special. All right, so let's see here. What do we need to do?
GME for earnings, up $1.18.
Yeah, that's really pretty much a non-event. Looking around at other stuff, I'm going to say pretty much nothing.
Nothing, honey.
I mean, Chewy's outside the expected move to the downside. GameStop's inside the expected move. Obviously, Oracle is,
that's the big one.
That's 3 times the expected move. That's a bit of a
huge one. Yep.
Yeah. Last night I was watching the stock. It's trading under 270 after the number came out. And I'm like, I'm not going to do anything. Then when the stock got through 275, I'm like, you know what? I'll buy some stock here. I hate it because I think it's going back to 270. But I hated it. And then I tried to buy some stock at 275. I missed it. And 2 seconds later, it was 285. And now I'm like, oh, great. This is going to be one of those moves. I got some stock at 288 and 290, but not nearly enough. Not even 10% of my position. And then after that, next thing I saw was over 300.
Yeah, it doesn't take long to get things moving when they're...
And I was like, okay, you're not getting me. You're not getting
the S&Ps are up 28, holding steady. Haven't had really too much movement. The Dow is down 70. Nasdaq is off of its highs by about 100 handles here. Still up 70. It was up around 170 just a moment ago.
Yeah. We've been pretty much trading here all morning. Last night we sold some S&Ps and maybe like 7 points lower, something like that. 5 or 7 points lower. Sold some about 5 or 7 points higher this morning. So getting a little short S&Ps here, but other than that,
that was your plan, wasn't it?
That was always the plan. We got back up to these old highs. That was the plan. This is when Tony and I were doing our live show on Friday of last week in San Francisco. We woke up in the morning and S&Ps were about, well, I shouldn't say woke up, but right after whatever number came out, S&Ps were a little bit lower than here, just over 65.40. I did not think we would get back to this like so quickly, but I did want to sell them here. So
yeah, what a difference 3 or 4 days make.
Yeah, unbelievable. So we are selling them. So let's see what happens.
All right. You ready to take a quick 90-second break? We'll come back. We got What's Your Assumption next. Sosnoff, our viewers have come up with those trades for you. You want to do something in there? Sure. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with what's your assumption? That's right, Sosnoff. What's your assumption? What's your assumption for today, Sosnoff? Even the S&P's up 30 hanging. Looks like every other day with a little bit of an undertone of some stocks in the NASDAQ being a little bit weaker, but volatility still in by 15 cents.
Yeah, I mean, you know my thought. So, but
okay,
so far,
so maybe you would share with everybody else.
I mean, my thought was that today might be the day they turn them around.
Yeah,
got up to a level that I think they could easily turn them around, but who knows? It hasn't happened so far.
Yeah.
Yeah, still chasing Oracle. Unfortunately, the stock has rallied $25 off where it opened. That's crazy.
That's crazy.
I'm not sure what movie these guys are watching, unless there's a lot of shorts in Oracle, but I wouldn't imagine it, but who knows? I mean, that's an insane move. Up $100.
It's crazy. There's no defending, a $95 40% move in a stock if you're short premium, unfortunately.
No, it's unfortunately, but it's not even just that. It's just like, it's not even defending that. There's just nothing, you can't even, unless you buy stock outright, what else can you do?
Right. Yep.
I was going to sell the stock I bought, but thank God I didn't. But that hasn't really helped. Anyway, let's do it. Let's see what we got.
I'm ready.
Ajit. Tommy, I hear you've been having trouble with the baby gamers and stock options. Very possible.
As a comedian.
I'll show you how to play these young Thundercats. A 1/2 call ratio spread that should give you a win. Let's see. RBLX. Well, stock's actually unchanged today. And I think we're fine in there right now today, at least. Let's see what he wants to do. 140, 145 in OC, right? Yes, 1017.
RBLX with an IB rank of 25 and earnings coming October 30th. Markets are less than stellar in here for my blood. There is volume, though. There is volume on the call side for sure in October. Not too many putties trading, though. But 20 to 40 cent wide markets.
Not great. I'm telling you what an interesting, maybe a more interesting trade would be. Buying the 140s, like he said, and selling the 145s and the 150s. Still do it for a credit. Gives you a little less upside risk, because I already have plenty of upside risk, but it's still a short delta play.
Sure.
And filled. 78-cent credit.
That was easy.
That was too easy. Let's go to the next slide. Sina from Menlo Park, Coinbase. Bullish before October 1st. I believe coin's gearing up for a large move. Well, you might be, but it's up $9 and it was up $30, $25 yesterday.
Yeah, I hope you made this trade over the last couple of days. Earnings are coming October 29th, too.
Our boy Sina is always bullish and setting up for a push into 500 range into 2026. Well, not in my world, but maybe in yours. I am going to take a pass on this one. I'm not bullish in Coinbase, and especially after the last 2 days. So,
okay,
I'm going to go to the next slide. Frank B. from Toledo, Ohio. He wants to buy gold and sell silver.
What do you think about that?
It has been the winning trade. It's been a winning trade. Clearly been the winning trade. Let's put it that way. Clearly the winning trade so far. You and I did this trade last Friday. We bought gold and we sold silver.
It live.
What?
We did it live.
We did, and it worked, and it was a nice trade. So let's see. Let me see where it is compared to where it was on last Friday. I think well, we can get away with this trade. Let's just see, /MGC. We're going to buy some gold. Just put my bid in, and we're going to sell some silver. Now, silver's kind of the harder one to do here.
Sure.
Build. Not filled on the gold yet, working it. Hopefully a couple seconds. Let's go.
Ah, there you go. Look at you. You're doing better than I do when I do it live. But sound enough, I have a big audience and a little bit of stage fright.
Obviously. But in those kind of cases, I always do the harder one first. I think gold's way more liquid than silver. So we do the silver first. Whatever we get filled in silver, then we put the gold in essentially at the market. Let's go next slide. All right, Frank, we're filled. We'll see what happens. Tesla. Kai. Let's see what we got. Chicago South Side. From what I see, Tesla pops this Wednesday to 370 in 1 to 8 days. That's what I assume. All yours, dude. I'm not touching this stock with your money. I am not a Tesla fan at these levels. This stock has had a monster run.
It has had a decent run, yes. I mean, well off of its highs, but yes, a monster.
It's well off its highs, but it's had a monster run, and I am definitely not interested at this level here. Let's see, where's Tesla? It's actually pretty weak today, relative to the market, but I'm going to pass. Let's go to the next slide. I'm just not bullish in Tesla. Meta. Okay. Algae Acres. I don't think that's real, but let's see what we got here. From here to infinity, it's Meta, not Apple. We're going to swing and miss. I agree with you. Extremely bearish. Could not agree more. What's Meta doing today?
Ooh, Meta's down about $11, isn't it?
Meta's down 13.
Okay. Took me a little time.
I rarely get short into down moves, but I am so bearish in Meta. Like literally just like you. I think we're getting close, but since it's down 13, I think you have to sell the call spread too. Expected move $50. Stocks. I think you sell the 800, 810, 800, 805 just because it's down so much today. Filled. We sold the 800, 805 a bunch of times, but we'll do more if the stock rallies back a little bit.
You did sell it a bunch of times too.
Okay, let's go to the next
victim.
Next victim, please. Let's just see here. We are going to have to do at least one more roll in Oracle here.
And you've been pretty aggressive with your rolls. You haven't been playing around. You ain't playing around.
How do you play around in the stock?
Yeah, no, you can't. The moves are just too big.
Yeah, the moves are too big. Eventually I got to be inverted, to sort of have to deal with it.
Right.
ETHA, Jason from San Jose, California. Ethereum ETF chopping in the 30 to 36 range. IV remains elevated. Maybe a good premium capture. We have a short premium there already. We have been selling premium in there. I'm going to agree with you. We currently have the 31.36, which is pretty delta neutral in October. I'm cool with going back to that 31. Except we could do 31.37 because it's a little more neutral.
Okie dokie.
I think, 31.37. I think it trades. Well, I thought it was going to trade 345. I bet it will if you leave it in there, but 344.
344 it is, Thomas.
344. Yeah. Let's go to the next slide. Chris from Houston, Delta Airlines. Let's face it, no one enjoys the hassle of flying. However, blah, blah, blah. He's bullish in Delta. He wants to do, let's see what we got. A Jade Lizard. DAL. Stock's up 73 cents today. IV rank's pretty low. We generally like Jade Lizards when the stock's on its butt. Let's see, be collecting OC premium. IV rank at 33, 22 actually. Sell the OC 55 put and the OC 67.5, 75 call spread. Let's take a look. OC. He wants to sell the 55 put and 67.5, 75. Well, it's not going to get you so no risk to the upside.
No.
If you want to do no risk to the upside, you got to do the 57.5 call and the 67.5 70 call spread. Okay, it's light volume in here.
Yes,
but
yes, light volume for sure.
You may be able to do this trade for right around 250-ish, 250 on the nose. So no risk to the upside. If you're bullish, I don't know, no risk to the upside. I did the trade. Let's go next slide. I guess we can have one long position on. Derek from Durango, Colorado. I've been to Durango. I don't know why. Durango.
I was going to ask you the same question. Why?
Oh, I went to Durango because I went skiing at Crested Butte.
Ah, gotcha.
Crested Butte. Man, I was there a long time ago, but I love that area.
I think everybody does. Yeah.
You've been there to Durango?
No. But I hear a lot about it. Like everybody likes that.
Crested Butte was beautiful.
Yeah.
It was a hard mountain. Let's see.
I had neighbors that moved there.
Neighbors that moved to Crested Butte?
Yeah.
Impressive.
Yeah.
UNH. Nothing happened. UNH got a huge boost.
Down $4. UNH Ivy rank of 28. I mean, it really, it's not as low as 250 where it was. It's closer to 340, but it's well off of its highs of 500-600.
I have the 320, 380 on. It's pretty much dead smack in the middle. It's a little tight, but I already have it on, so let's just add to it. 320. 320, 380. That's a little bit too tight. Let's go.
A little too tight for your blood?
It is. Let's go 300, 400. That's what he said, right? 300, 400.
Yep.
Let's go 300, 400. I think it trades around 625-ish. Let's see. Maybe-ish around 625-ish. All right, what's the next slide? I'm trying to fill this. It's a little tough. I'm doing a little price discovery. I don't think it does. I thought it would at first, but it looks like the prices were too rich. All right, we're working it still. Let's go next slide. You know what? UNH is not the greatest, the greatest trading vehicle.
No, it's not.
For the record. Not the greatest trading vehicle at all. Okay, let's go to the next slide. Nothing done yet. Still working all the way down to 320 and nothing done. SPX, Kevin, 0 day. Entering after the PPI numbers. Cross for another inside day. Well, so far it has been an inside day.
Inside 30 handles.
Yeah. Let's just see here. What do you think, Mr. Batista? Is it too late?
Too late. It's never too late in SPX. Come on, it's not even 9 o'clock.
Okay, so let's see the expected move, $16. Let's say 20. So it's 40. So we go 60, 20. Yeah, it's about delta neutral.
Mm-hmm.
Go $20 wide. 80. Even. It's about 390.
Maybe.
Maybe not. Oh, Phil, 390.
You are correct. Way to hold out, Sosnoff.
I didn't touch it. Let's go to the next slide. Ugh, GDX.
Ugh,
Mike.
Don't do it, Sosnoff. From experience, don't do it. GDX is up another $1.17 today. Don't do it, Soz. Don't do it.
This stock has not had a downtick.
It has not had a downtick. I mean, I think the last downtick it had, all kidding aside, was around 55. It's 68.
I know. I'm short some 67 calls that haven't worked. If we sell some 70 calls, really small, just to add to the position, because
that won't work either.
Nothing works in there, huh?
No.
It is a tough one.
It certainly is, my friend.
By the way, I'm not filled in UNH either. I'm trying, Mike. I mean, obviously I could try harder.
Oh yeah, you could try harder by changing the price.
I could lower the price.
Yep.
I'm just testing the markets here to see kind of where the markets are kind of wide.
Mm-hmm.
And UNH, I'm still trying in there. Man, that stock is not getting any love. Back up to kind of the highs in the S&Ps.
You are correct. GDX
we filled it. GDX we filled it. UNH still nothing done. Really struggling in there.
Yep.
Let's see what we got here. RBLX, we did a call ratio spread. We bought one. We kind of Christmas treated it. We bought one and then we sold the next two strikes up. I think we bought the 45, sold the, I'll tell you actually, I don't want to give you the wrong information. Filled orders. RBLX, we bought the 140s, sold the 145s and 150s, and did it for a pretty nice credit of about 78 cents. Let's see. Coinbase, we did nothing because I was not bullish. In gold, silver, in the pairs trade, we bought gold, sold silver. Let's see how that's doing. Bought gold, sold silver. It's about a wash right here.
Yeah.
Tesla, I was not bullish in there, so I did not do that. Meta, sold a call spread. Meta's down 11. We sold it when it was down 11, so right here. ETHA, we sold a strangle. I think we sold the 31.37. Delta Airlines, we did Jade Lizard. We sold the 57.5 puts and the 67.5 70 call spread for 250, right on the nose, no upside. UNH, we have been trying to get filled. We have got no love from that stock.
None whatsoever.
We started at 620. Oh, they just filled me at 614. I was about to say I started at 628 and had to work it down to 614 just to get a fill. Not happy about that. SPX, we did a 1 day, and GDX, 1 day on Condor, $20 wide. And GDX, we just sold a naked call. We're going to see what happens in there. S&Ps are kind of back up to the high end of the range. This is where we sold them this morning at 56 and covered them at.
Yeah, they're 57. They've been about $8 or $9 higher.
That was exactly on the number coming out. It wasn't really much to do. They never actually really traded up there for, nothing really you could do.
Yep.
But all right, that's it. We're done.
All right, let's do a quick 90-second break and come back. We got more Tasty Live after this. Southern, what comes up next? Market measure. That's right. We'll be back in 90 seconds. Let's Tasty Live.
Your boy.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
Global markets never sleep. Explore them with forex, now available on tastytrade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with, well, our man Jacob is in the house. But before we do that, can you tell me what's coming up, Sadov? And even let Jacob know, because he travels to the East Coast all the time.
Yeah, every once in a while, my home and native land.
There you go.
Well, Jacob is born and raised in Manhattan. So, yes, he's a...
Wait a minute, Jacob, you're that person that was actually born in Manhattan that...
Yeah, Presbyterian Hospital by George Washington Bridge.
Wow, I never met a person really actually born. I mean, I'm not that highfalutin, you know what I mean? Like that I would meet a person actually born in New York. I can say I'm born in New York, but it was Brooklyn. You know what I mean?
I mean, I'm born on 180th Street. It's not the most highfalutin of neighborhoods.
Don't ruin the story with facts, okay?
All right.
Hey,
Thank
Jacob, I was born on 125th Street at Morningside Drive. So
there you go.
We're right there.
Yeah, but you didn't live there. You were born there, and then you.
Tony never met you.
Excuse me, I did live there for 2 years.
So you're
your infancy. Morningside Heights.
Two weirdos. Got it.
I mean, that's where I was born, and I lived there for 2 years, but I don't remember it.
Then you moved to Connecticut.
I was 0 to 2 years old, so I don't really have a big memory, except
once you started being able to walk out of the apartment, which was and wheel your sister down Fifth Avenue, they had to move. They said it's time to go. I got it.
I mean, back then, my mom was in grad school at Barnard and having babies, and I'm like, I don't think kids do that today.
Oh, they do. It's not super common, but when I was in grad school, I had like 2 of my classmates had kids, so it happens.
Yeah,
but
anyway.
Nice.
But that was,
but
yeah, that neighborhood was a lot different, 60 years ago. That's kind of right. That was a pretty bad neighborhood 60 years ago. Now that's like a, premier address living across the street from Columbia.
Yeah, booming.
Yeah. Anyway, so not this week I'll be in New York City for a show, but it's not kind of a public show. But next week is our own event in New York City on the 19th. So a week from this Friday, the Bat and I will be at Webster Hall. I think it's on 11th Street. You got to check that, but I think it's 11th and like Broadway.
I'll check.
We'll check for you right now. I think it's 11th and Broadway. That's just my.
It is 11th. Yeah, 125 East 11th Street. You are correct.
Mm-hmm. Like I said, I think it's 11th and Broadway, but we will find out. And
it's 11th between 3rd and 4th.
Oh, yeah. Okay. 11th between 3rd and 4th. Perfect. So Webster Hall, great facility. We had a show there. I want to say maybe it was last year, but I think it might have been 2 years ago. But it's an amazing facility. So we'll see you at New York. The show is all full on our website, tastylive.com/events. tastylive.com/events. It's waitlist only, but put your name down because people cancel.
Yep.
So we'll try to get everybody in.
Yep.
It's a big place. I
love plugging full events.
What?
I love plugging full events. Tell people about a thing that, but you probably can't come. So you know that it's happening.
No, to be fair, the week of, we usually get some cancellations.
Mm-hmm.
Yeah.
So we have a cutoff because we have a cutoff for every show at a certain number, but we always take, as many people as we can above that. So, but there's plenty of room left for the other 3 shows left this year in LA, Charlotte, and Austin. Those are wide open. All right, let's do it.
I'm ready. Let's do it.
All right. So today I want to talk about risk reversals, which are a commonly traded option strategy in the forex markets that I knew nothing about in that regard. And I don't trade forexes really, so I don't understand why that they're traded very much. Maybe you two can shed some light on that, or we can get Pete in here. But what I did want to point out is that they're also used as this separate thing, which is just as a measure for the degree of skew in the implied volatility surface. And there, I think that they do have a lot of value for retail option traders, not as like a trading instrument, but just as a way to measure something in a more familiar terms, right? Because I often talk about, the implied volatility has this smile and this skew and this asymmetry, and, the normal distribution has zero skew, and these other ones have like a positive 0.08 skew, but that doesn't mean anything to most people. And so the risk reversals will give us sort of a more like, for a comfortable option trader who like understands implied volatilities and option prices, it gives you sort of a more hands-on, intelligible sense of how skewed is the implied volatility distribution. And so we'll see how that works out.
What did you say about spot forex and risk reversals?
I said that risk reversals are an option strategy that gets traded in forex. Apparently, this is what the internet tells me. I don't trade them myself because I don't want to trade forex myself.
I've never seen them either.
So I'm going to say that that's just
nonsense,
an internet hallucination.
Fair enough.
The problem with spot forex is they don't have option markets. So what happens is in the over-the-counter marketplace. So like if you went to JP Morgan or Goldman Sachs and you asked to do a risk reversal like swap over the counter in some forex, they would make a market on that because that's what they do. But
well, no, first they would ask you, what are you trying to do? Like what's
no, I know, but I'm just saying if you wanted to do a risk reversal to get, and you were a big bank or something, then you could do it in the OTC market. But there's no such thing as a risk reversal in the retail marketplace in spot forex. There is, though, Jacob, in all the regular option markets. Tony and I don't use it very often, but you can get a risk reversal is just another way of getting long or short in any of the listed option markets.
Yeah, you can do risk reversals anyway. I don't think that they are a commonly used strategy, and I'm not really advising people to trade them or not trade them. I'm saying that you can look at them as a way to get a general sense of what's going on in an underlying, rather than necessarily buying or selling them. Just observing their prices can help shed light onto what the shape of the volatility surface is like.
We agree with you.
Yeah, so all right, let's go forward into the nuts and bolts of this process. Oh yeah, my internet. Sorry guys, this is California. I see it myself now. All right, so risk reversals, synthetic directionality, skew. Let's get into it, John. Yeah. So firstly, just a standard refresher on implied volatilities and what we're talking about here. Implied volatilities all come out of the Black-Scholes model, right? And even though the Black-Scholes model isn't true, it gives us this powerful window into the options market by taking option prices and turning them into the volatility that, if constant between now and expiration, would make that option price fair, right? So the way that works is you invert the Black-Scholes formula, which gives you a fair option price given a volatility, but since it's monotonically increasing, it's completely invertible, it's a one-to-one function, and there's no problem with that. So we're all pretty comfortable with the implied volatility. We can move past this slide pretty quick, I think, and get into the ideas of skew and smile, which is sort of the meat of today's discussion. John, we'll forward one. Ooh, yeah. So the issue here is that, right, in the Black-Scholes model, implied volatility is constant, and so implied volatilities are also constant. But this was only true for about 35 years between the development of Black-Scholes model and the 1987 crash. And ever since then, everyone agrees that that's not accurate, and that people don't price their options according to the Black-Scholes model. And instead, the Black-Scholes model serves to turn option prices into implied volatilities as its like primary function for us. And the result is that you get this implied volatility smile or smirk. It's called the smile because it almost always is higher further out of the money. But then it's often called the smirk because it's not symmetric in the way that it does this. And if you have a smile, but you bring one side up more than the other, you're smirking. And it's just the cutesy naming. And that's like a very sort of abstract or non-quantitative way of trying to judge or express what's going on in volatility. And we're going to look at risk reversals to give us sort of a more concrete window onto it. So let's keep going. Right. So the issue is skew. And mathematicians like to measure skew as this third centralized moment of a distribution, the expected value of the cube of the difference between the result and its mean, all scaled down by the standard deviation. right? So that's the mathematical definition for the word skew. Negative skewed underlyings, I've got a pictures here. They're unfortunately in red, but right, have heavy tails on the left. Positive skewed underlying distributions have heavy tails on the right. In the world of options, the negative skew and put skew mean the same thing, right? A negative price skew fits with a put skew in the IVs. Positive price skew would be a call skew in the IVs. It's rare, but it happens. The mathematician skew is unitless, which is a thing that I love, mathematicians love, physicists, when they come around and see unitless concept, they also love it. They recognize that it's a powerful tool, but it makes it really hard for non-experts and to understand what it's talking about, because it's just, what does 0.08 plus 0.08 skew mean to someone? And so we're going to take our risk reversals as these, these synthetic directional trades and use them to try to unpack it into something a little bit more familiar looking to an option trader. So let's go forward. We'll test what risk reversals are, and then we'll see how they work out. So yeah, here you are. Here's a risk reversal. You can trade it in anything that has a good options market, right? It just means you sell an out of the money put and buy an out of the money call. You can also do a short one, right? It's essentially a synthetic stock, but where you, instead of doing the same strike, you pull the strikes apart. In terms of the results, it's the inverse of a vertical spread, right? That a vertical spread is only going to change prices between the strikes. A risk reversal is constant between the strikes in its expiration payoff, but it is linear outside of them. And so this apparently not commonly traded in forex markets. That's a lie the internet told me. I've never wanted to trade one myself, but I do think that they're an interesting fact, or an interesting tool for judging things. So it can help shed light on the degree of skew in an underlying, which will give us a window into the shape of the smirk. And we'll see how that works out. Next slide. Go forward one more. Thank you. Right, so since the price of the risk reversal is exactly the difference between an out of the money put and out of the money call, it gives you that question about how much has the smile gone up more one way than it has the other way. Right? We know it goes up as we go away from the spot, but if one of them goes up more than the other, that results in, right, if the call goes up more, that results in an expensive long risk reversal. If the call goes down, if the put goes up more, that's a cheap or negatively priced long risk reversal. And so the price of the risk reversal, or just the difference in the IVs at equal delta strikes, gives you this nice single number, but it's now an interpretable number. It's either a price of an options contract or just a difference of implied volatility. So it's measured in implied volatility percentage points. And either way, that gives something that's, I think, a lot more familiar for an option trader to try to judge. You're plus 5 IV skewed, or minus 10 IV skewed, negative skewed, instead of 0.08 skewed. I think that's just a lot more familiar for an option trader and gives you a nice thing to do. And you can pick pretty much any delta you want. And if you're consistent about where you're checking, it'll give you a nice way to sort of judge how skewed is this underlying, right? When the risk reversals are expensive, that'd be a positive skew. More typically, they're negatively priced, so it's negative skewed. And you could check different deltas to get sort of a more nuanced opinion, but I don't think that's necessary. I think most traders can sort of pick one sort of moderate delta, 25, 20, 30, somewhere in there, and just use that consistently to judge how skewed different underlyings are. But it can give you a nice idea about the fact that, Apple isn't just a much more volatile stock than SPY. It's also got more skew to it than SPY. It's got more heavy tails in it than SPY.
Most people, Jacob, use...
and you can see that by its risk.
Most people use risk reversals for, or at least this is my own experience. Maybe Tony's is different, but my own experience, most people use these for capital efficiency more than anything else. So it's cheaper than, it requires less capital than buying the underlying outright. That's the big advantage, because it's about, a little over 20% rather than 50%. That's the biggest advantage. The other advantage is that you can get to a certain delta really easier than you can get there by using some kind of an option spread. If you just want directional delta, long or short.
I mean, because one thing that you can notice looking at all these definitions is that the 50 delta risk reversal is exactly a synthetic strike. It's exactly synthetic.
That's the 50 delta. But if you're talking about like you can do it like if you need 20 deltas or something. Yeah.
You can pull them out. I'll point out that the price of the synthetic stock, right, your 50 delta risk reversal, no longer shows anything about the skew because they're not away from the spot. They're not away from the spot. They're at the spot. Instead, it does this weird thing, right? Because synthetic stocks in like a pure Black-Scholes world would be free, right? You could be long or short a stock. Since the current prices are correct, no one thinks this is a good idea or bad idea. You could have them for free. In reality, that isn't true. You either get paid or you have to pay if you want some synthetic shares. And the reason for that is because some amount of the current value of this underlying is tied up in its expectations out past your expiration, right? And a synthetic stock is like owning shares between now and expiration, but then after that goes away. And so it's this sort of interesting other window that you can get from just looking at the price of synthetic stocks. But that's harder to interpret again. I just thought it was fun for me, and maybe some other math nerds in the crowd will enjoy thinking of the price of synthetic stock as sort of a time horizon on the price distribution. But more practically, it's either you can trade them for reasons that Tom gave, right? If you want directionality in a capital efficient way, you can get it, right? There's synthetic longs and synthetic shorts, or you can just look at the degree of pricing in the risk reversals or just the differences in the IVs to give yourself a quick one number, one in either price or IV interpretable number, right? Something that looks familiar but gives you a nice judge for how skewed is this underlying, right? When GME was on its run up and had all that call skew, you would see that as a very atypical risk reversal pricing. And this can give sort of a more concrete and easier to grasp way of viewing this than instead of sort of the very theoretical concept of the centralized third moments of the distribution. That's most of it for today. We can go to takeaways. I'm sorry about the internet today. This is a California issue.
I haven't looked at risk reversals in quite some time. Thomas, have you looked at risk reversals when looking for premium selling strategies or anything like that?
The reason that we haven't looked at risk reversals, Tony, is because the market hasn't done that much, because vol's so cheap right now. We have plenty of capital. So the only time you look at a risk reversal is when you need the capital efficiency of them, as a retail investor. What Jacob's doing is he's presenting a different picture, with being able to read into the skew. But I find that's hard, for me at least. I don't look at them as much.
But that requires deciding to look at a trade, not because you want to do the trade, but because you're trying to learn something about the underlying.
Right. No, I understand.
Right. So in a pure Black-Scholes world, implied volatility would be a single constant number per underlying. In reality, the full volatility surface is this complicated shape with both asymmetry and heavy tails. And judging the nature of the distribution can be really confounding for a retail trader, right? Mathematicians have lots of technical terms to try to evaluate the shapes and properties of distributions. We talk about kurtosis and things, but that can be really sort of difficult or opaque for people to follow along with. But you can look at the risk reversals, which are, sort of a mix between a synthetic stock and a vertical spread, right? They're kind of synthetic stock, less vertical spread. There's a number of ways you can think about what's going on there. And that'll give you a single number, which can help you kind of gauge the degree of the skew in a way that's sort of more familiar to a retail option trader. And so I think this is sort of an on-ramp to a more theoretical understanding for people at home. And that's my goal.
Okie dokie. Good job out of you, Jacob. It's been a long time since you went back to my risk reversal days of trading. So good job out of you bringing in yesteryear. We're going to take a quick 90-second break.
Just so you know, Jacob, in the trading pits, the guys would do those all day long.
Yes.
Yeah. Because you could get also edge. If you got edge on one side, it was cheaper than doing the stock. But as a retail investor, you can never have edge. So for us, it's not, it was less interesting. But as a floor trader, if you got one side at your price, you could actually buy or sell stock cheaper than it was trading, so that that was your hedge. So that's
buy stock cheaper than it was trading, or sell stock above where it was trading.
Right. Exactly.
And lock in a profit. That is correct.
Right.
Good job, Jacob. You brought back my old box trading days. We're gonna take a quick 90-second break and come back. We got more Tasty Live. What comes up next? Oh, joy, your friend and mine. That's right. We're talking about Nick Batista, Johnny Trades coming up next, and the guy I'll be doing the show with on Friday when Sauna takes a sabbatical. We'll be back in 90 seconds.
Sabbatical.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with forex. Now available on Tasty Trade. Get in on over 80 forex pairs. 24 hours a day, 5 days a week. With the forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, The action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper. You know, one of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, you know, when you smash them. It's great.
In with the Tony. You mix it in.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with Johnny Trades.
Woo! What's up, boys?
Another day.
You got.
We did the music on the intro.
Oh, okay.
We got our intro. It's all good.
And everybody's clapping for you now.
It's amazing.
And you got the memo to wear the right color shirt today. Sosnoff didn't get the memo.
Well, he's got his. I mean, it's his fresh black tee. You know, it's. He got like 10 of them in the wardrobe.
I didn't get any memo this morning.
There's nothing fresh about Sosnoff.
No,
you
no.
can't use the word fresh and Sosnoff in the same thing.
That's okay. How you doing in Oracle, Thomas? You all right?
I would say
second mortgage type thing.
I would say this would be my worst play of the year.
What do you do now? You fade it though? You got to sell it, right? Double down?
No, I only had the weeklies. I'm just I am just
fetal position.
What?
Fetal position type thing.
Yeah, it's fetal position. So what you try to do in this case, I'm trying to roll my puts up above where the stock's trading, so I don't have to deal with it. It'll just disappear on Friday, and maybe I can steal another. You know, maybe I can take another $8 or $10 of premium out of it. But there is no salvaging this position. It's over.
Yeah,
I mean, this is. You know, you get a stock that moves $100. There's nothing. You can't defend it or anything like that.
I mean, it's a 40% move on, and this is not a stock that just came
there's
out.
There's nothing you can do. This is one of those things. Somebody wrote to me and said, "Does this remind you of Zoom?" No, Zoom was actually, for me personally, way worse. It was like multiples worse than this. But it also was the high in Zoom. You know, for the next 10 years or whatever, 8 years.
Mm-hmm.
I think this is the same situation here. This is a freaking, Larry Ellison's the richest person on the planet right now.
Yeah, he surpasses Elon Musk.
Elon, like 80, I think he got like 85 billion or 90 billion in wealth today on this move.
No, 90 billion more.
Yeah, more.
Yeah,
more. That's what I'm saying. This move was 90 billion for him.
In addition to, is what we like.
Yeah.
Like, I mean, when your dad has a good day, he only makes like $1 billion.
That would be awesome.
Hey, I remember trying to make $100 a day trading. And I'm going back to 1983, $100 a day. If I could make $100 a day, I would be on easy street. And then I started making $200-300 a day. And man, there was no stopping me, son.
There was never a time when you were trying to make $100 a day. You couldn't afford to be there for $100 a day.
No, that's when I was on a brown badge and I was trading in Superior Oil.
Oh.
I remember our expenses were $30 a day. Sad enough, you don't remember those days because you started out as a big shot. You see, I started out from humble beginnings. $30 a day was my expenses. That's all. That's all I needed to do. $30 a day. If I could make 100, it was unbelievable.
I needed to make 100/8.
100/8. That's right. That's what you were hoping.
I needed to make 100/8. Nick, that's $1,250.
Right. Well, I didn't start out with a silver spoon in my mouth.
That covered 100/8. Every trader, just so people know, every trader on the floor of the CBOE needed to make 100/8 a day to cover your nut.
Yes, that was true. That was true.
That was basically all your expenses, 100/8 a day.
Yeah, seat lease was $7,000, to sometimes $10,000 a month, depending on your expenses.
Oh yeah, plus all the other expenses. You need to make 100/8 a day.
Yep, just to break even. Yep, you're right.
Now what's that number?
What's that?
Now what's that number? 1,000/8?
Well, if you include Sosnov's Oracle trades, it would be significantly more than that today.
That's what I figure.
I thought I was good at 2 times the expected move. I didn't think it would be 4 times.
Right.
Yeah, this is one of those that, I mean, we have them every year, just like you said with Zoom. When you go back to, Mikey's favorite meta in like 2018, where that stock got halved. I mean, these things happen. That's why you got to stay small. So it's always about sizing.
The first time this ever happened to me was because we didn't trade earnings. When we were on the floor, we never traded earnings. In fact, earnings were nothing. I don't ever remember anybody ever trading earnings.
Mm-hmm.
And
well, the guys wouldn't let you in the pit, right? You're not going to come here. And
nobody ever traded earnings. And anyway, so later on, we would start to, with electronically, when we built TOS, we would start to trade earnings, but not right away. For the first couple of years, nobody traded earnings. And then come around I want to say 2006, 2007, people started to talk about earnings and trade earnings because the volatility was really low. There wasn't much else going on. So people started to talk about earnings. And I don't remember the year. I want to say it was 2006 or 2007. But Baidu had a 10-for-1 split on their earnings day. And I think the stock was trading around 75 and went to 150. And I don't remember the exact numbers, but between good earnings and a 10-for-1 split, the stock basically doubled.
Mm-hmm.
And that was my first experience with, I'm short calls.
And you didn't learn anything from that? You're still doing it?
I learned a lot from that, except, 10 years later, you forget every once in a while. And then came Zoom. 10 years after that comes Oracle.
That's fair. Well, I got a couple trades that I hope will get you a couple shekels back.
Let's do it.
I'm interested to see your reaction to these because I think I wanted to find something that I think you certainly don't have a position on so that's my third one, but Amazon and Costco I think you'll like.
I do have a position on Dow Chemical, just so you know.
Do you really?
Yes.
That's kind of a shock.
It must have been like a what's your assumption trade or something.
I mean, I only because I just you know what? I take it back. We took it off this week because I think the IV rank got super low. Hold on, let me check.
It's at 38-ish.
I don't know. We had a position on last week. I took it off. Well, he must have made money on it. I don't know. That's the only other thing.
All right, first one, crab trade, Amazon. You got to buy this dip. I mean, you got the move in Oracle's cloud, a blowout earnings. You get a move in Amazon like this, $6-7 to the downside. You gotta buy a little dip here. So I'm buying November, long call, 235. I'm selling 2 of the 250s in October. If you want to do this, you could do this like a 1x3 and do it for, $3, $4, $5 ish, depending on where we're trading right now. Amazon has bounced a little bit. 1x4. You want to get spicy with it?
What do you think, Sosnov?
I cannot stand Amazon. I wouldn't buy it with your money.
Why not?
First of all, because I think it's grossly overpriced here. And I think that if Amazon I think Amazon can trade, on a down move here, can trade under 200. I'm not even interested in Amazon. If it was $10 lower, I'm not interested.
What about Apple? Would you do this in Apple? I mean, you got to think if there's more upside in the market, it's got to be Apple and Amazon. Those are the only two that are not at highs.
With today's tape action in Apple and the stock, dropping, I think it's about $13 off its high.
Yeah.
Apple would be more interesting. I think trade 240 now. It's like 227. Apple would be more interesting to me than Amazon, but I think these stocks have a long way to go to the downside.
All right. The YouTube chat is asking, is there any stock that Tom does like?
Yeah, there's a lot of stocks I like. But let's see if we get to them.
Which ones? Can you name a couple?
Not Reddit.
Ooh, Reddit. What's that doing today?
Up like $13.
Oh, they are just coming for the pigs.
I don't know if Reddit is a pig, but sure.
I wouldn't call Reddit a pig because the stock hasn't had a freaking downtick.
I mean, these things are moving $10, $20, $30 a day. It's nuts.
Yeah, it's nuts.
All right, no Amazon. Poo-pooed that one. Costco, you got a position?
I don't.
They got earnings coming up in the middle of September. I think it's the 25th. 25th. It's been chopping around 925 to 1,000-ish. You think it's going to do more of the same? Maybe a little iron condor here. I did the 910, 900, 1040, 1050 call spread. I did it at 323.
Did you have trouble getting filled?
I got filled around the mid price. Had to work the order. I mean, it's a $900 stock, so the spreads are, 10, 20, 30 cents wide on some of those strikes.
Sure.
Yeah. No, I mean, I have been short put spreads in there. I just covered them on the rally the other day.
Yeah.
Let's see, 910, 900. I like this trade.
Sauna, your SPX trade is probably a 10% winner if you wanted to look at that too.
I forgot about that. Hold on, let's just do this. What price you get filled at, Nick?
323.
Okay, I'm working it. Nothing done yet.
All right. There you go.
330.
Beautiful. You got 7 cents better than me. Good stuff.
Very nice.
All right, last one. Dow Chemical.
Trade, Tony. The SPX trade really hasn't moved much, but
no, it was 340 just a moment ago. It's 365 right now. It did trade up to around $5 or so.
I believe it. I don't really like this trade today because I told you before I wasn't really crazy. So we'll just cover it 355. All right.
Got it.
Sorry, go ahead. Keep going.
Dow, you got a position?
I don't.
Hey, Nicky, you're gonna have to get used to multitasking here. You know what I mean? Like we do more than just one thing here. Like
it's amazing to watch. It's
you're gonna want to step up.
It's inspiring. I mean? It's inspiring to watch. If only I could be half as good as Tom in the future.
Well, being half as good as Tom today would mean that you were 4 times as good as him right now.
That's good. All right, I'm there. 25 strike puts in Dow, Tom. Synthetic cover call. 400 some odd dollars in buying power. You sell it at $1.60, 70-ish.
Why do you love Dow Chemical?
I don't. It's just at the lows, and I figure it's one thing you'll get long. It's hard to get you long here, so I figured I'd get you something.
He's outthinking the thinking.
Trying.
He's trying.
I'm leaving an order and I'm working the 22.5 puts at 72 cents. I sell out of the money puts, not in the money puts.
Oh, 72 cents. What happened to you?
I sell out of the money puts.
This is an at the money put. It's a synthetic cover call. What's the big deal?
It is. I got it.
I know you don't want the risk. It's okay.
Stock. It's hard to get filled.
You're neutered today. You got a little.
I mean, I am a little more neutered today than usual.
It's okay. It's all right.
The chat room wants to know stock you might like. American Express, Sosnoff, is that a stock you might like? The jokes keep coming. They're everywhere. They're abound. Sosnoff, no American Express.
Yeah, they're just special. That chat room's special.
Hey, Even the S&P, don't look now, but they're still up 31. They are off of their highs
They
by
haven't
about.
really moved all day.
No, I mean, the Dow's down 200 after being unchanged. The Russell hasn't moved. The Russell and the Dow have been the two weakest of the group, very similar yesterday. NASDAQ's up 100 and change. It is well off of its highs of 24,044. So about 100 handles off of its highs. Volatility off of its lows, only down 11 cents, but it's only off its lows by about 10 cents or so. Bonds are up 6. But you are right, Sadov. We haven't had too much equity movement in the overall markets like the ETFs, but we certainly have Oracle up 97, AVGO up $34, CoreWeave caught itself a bid up 19. You just talked about Reddit up 12, Nvidia up 7, Tesla up 5 or 6. The downside or the buckers right now are Meta down 11, Apple. Usually you don't get a NASDAQ rally with Apple down $6 or $7. Big move in Apple to the downside. Chewy for earnings with a huge move. That's a 15% move, down $6 there. Sadnov, we can take a quick 90-second break. We can come back. We got more. Well, we got the cream of the crop. We got Liz and Jenny coming up next. Sound good to you, son?
Sounds good to me.
Sounds good to me too. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Global markets never sleep. Explore them with forex. Now available on Tasty Trade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I
well-
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. No, just circles are great.
Welcome in Tasty CEO Tom Sosnoff, also found at Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watch.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case. How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette. To the left of me is Jenny Andrews, and it's a sad day in Mudville. We are not actually live from the SIBO, but we're there in spirit.
Oh, we're there in spirit. I know they are busy. Our crew is so busy. They've got stuff going on across the country. I think they were Vegas. Where else, Liz?
Well, Vegas. They're going from Vegas to Germany because they have to get there before us. So
right.
We are leaving on a jet plane this weekend to Vegas. So they're still not to Vegas, to Germany. They're still in Vegas right now. That's still going on.
Right. And yeah, so that's why we're not at the SIBO, because they're all over the place. They're all over the place.
Yep.
But again, we're there in spirit. I almost put my jacket on.
Oh, when we're here, it just looks like we're both wearing black blazers. I do love the tasty jacket though.
Okay, so today is Wednesday. We've got a lot going on, a lot. This is a busy show. We have our SPX study from Jacob. We are taking live tweets. Send us a tweet, include the hashtag LAZJNY, or if you're on YouTube, post something on YouTube, and Frank, the amazing Frank, will share it with us on Twitter. What else do we have?
Live tweets, Jacob study. I think that's about it. Can we address the elephant in the room first? The crazy, ridiculous move in Oracle?
Oh, yes. I wasn't sure which elephant you were talking about.
Well, there's a lot of elephants in the room. This one was monstrous. And I know it took a chunk out of a lot of accounts, but we luckily, and like I said, we do everything live on air. So it's not like you can see it. We lost money too, but we had a very defined risk trade.
Oh my gosh. Okay, so what I said to myself after seeing this is that, I mean, I can't say like, oh, I'm never going to trade naked options on earnings. I can't say that because I know someday I will. But you see this and you think twice. You think twice about trading.
I'm telling you, do you know what hurts more? Like, and just this is just like my trader psychology. The calls hurt me more than the puts. If a stock goes down, whatever. I know that sounds bad because stocks can plummet too, and they do plummet, and they hurt. They hurt as much. But at least you can roll your put, you hold it, you create a zebra, you do something to that effect.
You hold your stock, right? You just take the long stock and you hold it. And I've said that before. Don't sell puts in something you're not okay owning, because if something like this happens in a stock that you have short puts in, then you take the stock and you're long the stock, and you could be long it for years before it makes a comeback. But
we're not trying to say woulda, shoulda, coulda. Like, we're not, because we understand the pain that this causes. This rallied even after I looked at it yesterday. It was up like, I don't know, $6.
Oh, 10. Yeah, I looked at it after hours and it was up 10. And I was like, our iron condor is going to be just fine. So I can't believe that it's up that much. This is crazy.
So it was kind of like talking about your gambling yesterday. Risk is defined at order entry. I'm telling I'm re-establishing your gambling.
About my DraftKings bet. I haven't looked to see where they are. I got to get my picks in. I'm running out of time. I got to get my picks in by tomorrow, today or tomorrow, because games start tomorrow. So.
Ruh-roh. Okay, but take a look at this. So see where it opened. Can you click on the bar? I want to see where it opened, because I know it's rallied since the open. So it opened 319. It is now 340. It's continuing its plight forward.
What a disaster for people who have short calls.
You know what this reminds me of, though? Do you remember that Market Wizard segment I was telling you about, the guy who would only go in and play earnings plays that were up, and you would put on a bullish play? I think you would just buy it because they don't know really trade options, and to see if it would continue up and then close it at the end of the day. And this is one of those examples where it would have worked out.
It was. And for a while, we would, if it was up on earnings, we would put on the buffer, like the buffer for that week.
For that, yeah, the short-term buffer, correct.
Yes. Well, as far as our earnings go,
I was going to say, we've got nothing. It's Wednesday. We're going to hold on for hope that this thing's going to come back to 240.
This thing's not coming back to the realm of our position, but it wasn't terrible because we did 2 earnings trades, one in GME and one in Oracle. Oracle we have this 250 wide spread. It's going to be, $150 loss. That's going to be a full loss. But in GME, we made 84. So net, it's not terrible, but we have not had success lately doing iron condors on earnings. So I might swear them off. I might be like Tony Batista, just with after earnings trades.
Tony Batista swore them off a long time ago and just does after earnings trades. I don't mind the defined risk. I mean, it was a shot.
I don't mind selling puts in something we like or that we're usually in, taking advantage of the increased vol. But I don't, I almost thought twice putting this on, but it was just very low risk. We collected almost $1 on a 250 wide. So
close that thing up. We have to drop
22.5, 24.5, $2 wide, and it's through it. At the end of the week, this would be worth a full $2. So I don't know if we wait for the $2.
Close this thing. Let's take our $84 and run like a thief in the night. I don't want this to reverse at all.
All right.
I mean, that's a home run. You made 100%.
All right. I would wait for the $2.
So trying to get that extra $40 is how you can lose it all. Like, just because take your profits, managed order entry. Your risk is managed order entry, and take your profits. This is going to be my mantra for today's show, Jenny. Your risk is managed at order entry.
As far as, you know what I really wanted to do? We never got filled on that new NG, that addition to our natural gas position.
Oh, we didn't. Yeah, you're right. I would put that in.
I know. I wanted to see if we could try to work the order again today. I believe this was our long. This was our short.
We broke it by one wing. It'll be better today because natural gas is actually down. So that now you're flirting with fire right there. But I like it.
Wait, 2-cent debit. What was I paying? I was paying like
1 cent. But you were a lot lower yesterday.
I can go see that. You can take a look at canceled orders. NG activity. Yesterday it wasn't filled, so it'll be canceled. 295, 285, 27.
Oh, okay.
95, 857. So it was this.
Ship it.
1 cent debit. I'm going to try 2 cent debit. So $20.
Okay.
Does that, yeah.
Let that work. You're not going to pay up for it because each tick is $10.
And once it fills, we'll take a look at the P&L on the analysis page and see how that looks. Speaking of that beautiful like P&L graph, I think I saw Mikey posting. Yeah, look at, oh, he's got a butterfly on for a credit.
Woohoo! That's an SPX 0 DTE butterfly on for a credit. We love it.
Locked in $25. Has this butterfly on for a credit. Nice, Mikey.
Okay, I know what to do, Mikey.
555, Mikey. 65.55. That's what we're.
This is from I Dream of Jeannie, but I'm also going to give you the bewitched nose twitch just in case. You get the double today.
All right. So anything else to manage in here? I'm going to just sort P&L day. Oracle's the ugly one. That's it. On the upside, we have Ethereum making a little bit of a run. All the crypto, Bitcoin's making a little run. All the cryptos are making a run.
Yep. A baby run. Baby run. Yeah. Look at our SBET. We're up $64. Now I don't know who it was. I think it wasn't Ashvin. It was somebody else that was right beneath Mikey that said, thank you for turning me on to IBIT.
Oh, yes, I saw that. And where is our little IBIT?
Now you have it like sorted by winners and losers. I like alphabetation. How do you say that? Alphabetization?
I don't know. You're on your own.
Alphabetization.
So SBET, we'll take this off. We sold this put for $1.17. It's 50%.
He gone.
Yeah. SBET. How much is it? This was one of those. This was from like Dan the crypto man.
Look at that large out move.
I was gonna say I'm down in here since the day he was on and the day I bought it. I'm pretty sure it was this day. No, I'm down since I bought it. All right, so SBET we're out of. One day, Liz, Smile Direct Club is gonna leave our sheet so we can get rid of this.
I want that, and I want the Russian ETF off.
Yeah, no kidding. All right, we don't have anything.
We don't have IBIT, do we?
Wow, how did that get away?
It must have gotten filled and we didn't see it because we would have put it on again.
Activity today, all symbols.
I don't think it was today. I'm saying one day it got filled. Go to IBIT and see where it is.
I'm trying to see when we would get out of it that we never saw it.
Type in IBIT so we can see it.
Hang on.
On the other side where you're looking at the orders.
I know, that'll pop up. Okay, so IBIT, the last 7 days.
Yeah, our GTC. Yep.
And the 8th, so a couple days ago, that was fast.
Yeah, so it was 2 days ago.
GTC and Condor.
So it must have hit and we didn't see it. So then because we didn't see it.
No, we did it. We closed it. We put in the new one. I don't think we ever got filled on the new one because you could see this closed at 10:34 during our show.
Yeah.
So here, I was trying to see if we had some other order we were trying to fill, but no, it happened during our show.
Yeah, but we're not in it. That's what I'm saying. I like when things are on here because it forces me to go back into it. Let's put an IBIT position on.
I know. It's annoying that we don't have it on with it up $1.66 today.
I don't care. Bitcoin's what, 112? It's not like it's that high.
Yeah, and we're not going to be too far from our old one. No. If I go back to this history, our old trade, we had the 62.5 put. Now what are we going to have? We go to the 9-day.
You got to do the call spread first. Remember, we go backwards with it. So delete that. Hit the call spread. So you're going to go 66.5. Okay, you can do that one.
I was going to see what we're getting. Yeah, 22 cents. That's all we ever really get. And then
buy something for, you got to go down one more, I think, right? And
2% debit.
Playing the 64 put. Close to $1. That's not bad.
And so close to $1.
Uh-huh.
Yeah. Close to $1. Okay. Yeah. Okay, so here we have, and the risk is...
I would sell the 64, not the 63.5.
Oh, yeah, sorry, I meant to move it and it shifted. So our risk is not terrible, $250. Not bad.
No, it's not bad at all. All right,
so 7, 68, 64, 60.5. Again, the reason we sold this call spread is to get the 20-something cents to buy this put. Otherwise, it uses too much buying power.
Correct. Okay, we do have a very jam-packed show today, so we're gonna have to, is there anything else you want to manage before we either get into Jacob's study or go back to Twitter? Because there's a lot of tweets that are coming in as well.
Let's see. What do you want to do?
Well, I think I didn't look through Jacob's study today. I'm not gonna lie to you. I'm ill-prepared.
Well, there's a lot. There's a lot there. There's a
Okay,
lot.
so let's go into Jacob's study.
Okay.
You can see me flounder around reading these things because I did not look at it today.
No, you'll like it. I liked it. Being directional with 0 DTEs.
Perfect.
And so for a while, you just used to sell put spreads in SPX. And I'll bounce back and forth between just selling put spreads or doing the iron condor.
And I don't mind either. I really don't. The put spreads, we've had lots of research showing that just the put spreads work too. I did do the iron condor today, not the iron fly, ironically, and I just got out of it. That's what you were hearing my thing ding as I was coming in.
Oh, good. So you're out quick. Because you got in at 9:20, so out.
It wasn't the iron fly.
No, I know an iron condor.
An iron condor, and I was taking very little percentage.
But in at 9:20, out around 10:20, so less than an hour. What percent did you take?
20%.
That's not a little percentage.
It's a little percentage because you're collecting so little.
Well, but like the iron fly, we're only looking for 10%, and 20% I think is fair. You're just not collecting that much. When you're doing an iron fly, say you're collecting $5, $6, and you're taking 20%. You're only, if it's you're collecting $5 and you take 20%, you're making $100.
That's good math there, Jenny Andrews. Good job.
I mean, when you're doing the iron fly for $8 and you're taking 10%, that's $80. It's similar, so that's why it feels like you're not making enough, but
that's a lot more. That's why it feels like you're not making enough. So from that perspective, the risk reward perspective doesn't feel that good.
I hear you.
Yeah. Okay, so let's keep going. Being directional with 0 DTEs. Next.
Okay, here we go. Here, we'll start it now. With mark this down, 1016, because they'll clip.
Oh, no, we don't need to mark this one down, but that's okay.
Well, I just figured let's eliminate the chatter in the beginning of it.
Oh, being directional with 0 DTEs. Next.
And cut. And clapboard. Being directional with 0 DTEs.
Next slide.
I'm trying. Here we go.
Okay, so far our 0 DTE research has primarily focused on short premium delta neutral strategies, okay, which are designed to profit from rapid theta decay and implied volatility overstatement without taking a directional stance. Perfect.
Many traders, however, have directional assumptions they wish to act upon. While the efficient market hypothesis advises caution in relying too heavily on these assumptions, it also acknowledges that there is nothing wrong with trading based on them.
Good job, Jacob's great. The 0 DTE landscape offers unique advantages, including the speed of results and high liquidity, making it a conductive environment for testing directional plays like out-of-the-money verticals. Great.
And maybe conducive. Maybe it's conducive and not conductive.
Conducive. There you go.
All right, today let's get directional and explore the world of 0 DTE out-of-the-money verticals, examining how strike and width selection have influenced outcomes.
That's great. He didn't say bullish or bearish. He just said directional. So he's going to go both directions.
Yeah, he'll probably look at both directions. So here's the study using 2.5 years. So these SPX 0 DTs now have been around almost 2.5 years.
Yeah, 2.5 years.
Getting more data on these.
So these are very standard studies. 0 DTs, he collects every 9 a.m., give or take 5 minutes every day with a variety of short deltas and wing widths. The iron condor results from previous research are included for comparisons. That's good.
Winners were closed the first 10-minute snapshot. Winners were closed the first 10-minute snapshot. They were found above 25% max profit.
The reason that's there is you can get a little bit above 25% max profit on some of them because the snapshot. So it could be if it snaps and then it goes up, you could get 30. That's the reason that's in there. It's just to keep it very fair. All trades were exercised at mid price.
All right. Here we go. So being directional with 0 DTs. Let's take a look at these results. Put verticals with $10 wide wings. So these are not high risk trades. If you've got $10 wide wings, these are not high risk trades. Put verticals, you're looking at different shorts. Short 50 delta, 40 delta, 30 delta, 20 delta. You're collecting more with the higher delta.
So look at the conditional value at risk is all about the same. You are collecting more, and I'm not going to lie to you. I think you bring it in. That short at the money put with $10 wings, you're making $63 a day. That's not bad. Your conditional value at risk is $800.
So he was looking for, what was the percent? 20% or 25%?
25%, I think.
25%. So you bring it up and you're selling at 50 delta, you get a quick pop up in the market and you're getting out for your 25%, right? If the CVAR, if the conditional value risk is around 800, you're collecting around 200, right? I mean, would you say you're collecting? No, if it's right at the money, $10 wide, you're collecting closer to 5. You're collecting maybe 4.
Well, this is saying your CVAR.
Let's take a look. I'm going to pull one up. Okay.
Now, granted, it is 10:20, so it's an hour and 20 minutes past it. But if you're, the CVAR, that's what I found striking is if you're going to go to 0 DTE.
I thought the CVAR would be less because if I'm selling the 50 delta, here's the 50 delta, $10 wide. I'm collecting like a decent amount. So I was surprised the CVAR was 800.
That I was too, but you're collecting here 330. And I mean, maybe you'd collect a little bit more at 9 a.m. That's why I was surprised the CVAR was 800 too, but that's okay. This is 2 years worth of data, so it's probably an average of what the CVAR is. And you will see the CVAR if you want. Go to the 20 delta $10 wide right now because that's the last thing on there.
So the 20 delta is. Here's the 20 delta $10 wide. You're collecting $1.15.
So that's what I was going to say. That makes perfect sense because the CVAR was about $8.90.
Yeah, and that makes sense. If a $10 wide, we're collecting $1, our risk would be $900 versus the other one, we're collecting $350 on a $10 wide, our risk is $650. I just think that CVAR seems a little high.
I think it does too, but it's lots of occurrences, so we're not. Who's to say? Who are we to judge? But he's done the back testing on it. That's the one thing we were looking at. So your CVAR here, is like 670, 690, depending.
And I wouldn't get, so CVAR's conditional value at risk, I wouldn't get hung up on that at all. This is an easy trade. This is an easy trade, defined risk, sell a $10 wide put spread, put it where you want. Your risk is the width of the spread minus your credit taken in. So if I've got a $10 wide spread, I'm collecting 310, my risk is 690. I wouldn't get hung up on the CVAR. You know your risk when you put the trade on.
Oh, these are all defined risk. Okay, so let's go back into the study. So there we go. To me, to be honest with you, Jenny, my eye always goes to this. You got an 86%, your average P&L $63, and your CVAR at risk, which I think is a little high, which I think is lower, is $800. I like the 50 delta at the money short put right now.
I do like it. And again, it's not like put this trade on and leave it till the end of the day. It's put this trade on and put in a closing order to take 25% out of it. So, if you're collecting $300, if you're collecting $300 here and we're trying to take 20% out of it, you're making $75.
Yep.
And what was the average P&L? $63.
Yeah, that sounds about right. All right, what's the next one?
Being directional with call verticals. Ooh, they're all losers.
Negative.
Here.
They're all negative.
I wouldn't even waste any time on this slide. I would just say the call verticals didn't work. Now, we've been in a bull market for most of the time. But yeah, I mean, if you have a day where you're like, oh, I really think the market's going down today, go ahead and go ahead and try it. But over time, they didn't work.
Wow.
Yeah.
I love this because it is very eye-opening. Okay, what's the next one?
All right, here we have iron condors with $10 wide wings. So this is the very popular iron fly that we've been doing the short 50 delta. And those result, and so you see like the CVAR is
significantly less.
Oh, low. Right. And your average P&L, is it higher?
Your average P&L is higher. Look at your win rate. It went from 80 something to 40 something.
I think a lot of people would prefer the higher win rate.
I think I would prefer the higher win rate.
I like getting out quicker. You throw that $10 wide put spread on, you get a bounce in the market, and you're out. You're in and you're out. You can be out in less than a minute if you get a little bounce.
This study, I would like to state for the record that the numbers look different than what we're used to doing because in previous studies, he had 10% in this iron fly column. You're taking it out for 10%. It's got a higher win rate than it usually has a higher win rate than this. This is 20%, 25%.
And that's too much. And I guess that's a good catch. Waiting for 25% on the iron fly is too much.
Yes, in my opinion, I agree. So I just want to say for the people that have been with us for a while, that's why those numbers look a little different. The studies in the iron fly, $10 wing, 10%. There is a higher win rate. Waiting for 25%, it lowers your win rate.
And we used to. So far, in my mind, the winner here is just at the money. $10 wide put spread and looking for 25%.
I wrote it down like a serial killer.
Which is very similar to the old Jajun trade we used to do, which was just buy a call spread, $10 right call spread wrapped around the SPX, and then try to get out for, we would just try to get out for like a quick 10%. But
you're right, this is the Jajun trade, because the 50 delta, I mean, we're bringing it up, it's really not the end of the world.
It is the Jajun trade.
I always gravitate. Those were the greatest days of my life when we would scream Jajun.
I know. So did it say at market open, or was this at 9 a.m.?
9 a.m., give or take 5 minutes.
We usually find that's the best time, 9 a.m. Central Time, to put these trades on.
Yeah.
Okay, so now we have put verticals with $30 wings. So you're getting wider. You're going to have a bigger collection, but you're going to have a lot more risk. So you see the CVAR really jump.
So that's what we were talking about earlier today too. You've got $30 wide wings. You're risking $2,200. Now your win rates go up a lot. Your win rate is almost 90%, and your average P&L is 133. That's pretty good for the at the money put.
I know these do look pretty good. These do look good, but so here's my takeaway from this. Larger accounts, you may want to do this. You've got a higher win rate and a higher average P&L. Smaller accounts, it's still a profitable trade over time. Our backtesting shows it's still a profitable trade. Now, past results
are not indicative of future results.
Don't guarantee future results, but what 2.5 years of data in SPX shows these strategies have been working.
Correct.
Do they work every day? No. That's why you're not, like, if we look at the short 50 delta $30 wide, and I go to SPX here, and here's the 50 delta, and I make it $30 wide, you've got $2,400 in risk. You're collecting $564. So you're taking 25% of that.
$125, $130.
Yeah, and I want to say that's almost what the average P&L was.
Yeah.
So it doesn't have a lot of full losses factored in here.
No, but the difference, I think the caveat the catch that I want to make here is the study, because you got to keep in mind with a backtesting study, you have to put parameters in. And this is some of these losses, some of them not wins, are not full losses. So you got to keep that in mind. That's the one thing.
Yeah, I'm saying like you really have any full losses in here if your average P&L is close to the 25% of what I'm seeing right now is the collection.
I'm sure that, there's losses, not full losses, but 11% of the time.
And you'll collect more at 9 a.m. than you will we're at 10, almost 10:30.
Correct. And I think that's a good catch too.
Okay, so let me get to then slide 7. Here we go. This is call verticals with $30.
Just bypass this. This is insane. What I'm learning is do not do the calls by themselves.
And we know plenty of people, whether they be 0 DTE or 45 DTE or durational trades, selling put spreads in the SPX. And our studies show here they work when you manage your winners. Managing winners is important.
Managing winners is the most important. Managing winners is, I think, the most important takeaway from these studies. Manage winners early. Managing winners early. I love that he's doing the 25. I love this, Jacob, because this is fantastic. I like to see, because we get this a lot. Should we be taking more of a profit potential? But managing winners seems to be the best.
Here we have iron condors with 30 delta wings, which is very similar to Jack Tucker. He's like the short 20 delta. I believe Jack Tucker is similar to be the short 20 delta, $30 wide wings, because I think he's doing around the short 20 delta, $25 wings. So you can see win rate very high, very high.
Very high, yeah.
Average P&L, it's positive. It's not huge, which is why he does a lot.
Yeah. But very high percentage. You know what, Jenny? You're right. So we talk about this a lot. I love these studies. And Jenny and I are talking about our favorites, but somebody who's got a larger account might want to do a lot more of the ones with a higher probability than a lesser amount of the ones with a lower probability. But
and they're doing them every day. So if I'm doing them every day, maybe I do want the highest win rate, the highest win percent, the 93%.
Oh, I agree. It's pretty interesting. Like I said, I don't think my only takeaway here is manage winners early, number 1. Number 2, the call spreads don't necessarily work. And number 3, the rest is up to you.
Yeah, forget about those call spreads. Unless we truly enter a bear market and we're in it for a while, I would just crumple those call spreads up and throw them out the window.
Me too.
All right. I think that might be it on the study, or we have the takeaways. So here's the takeaways. Over the 30-month study, SPX rose over 66%, 3,900 to 6,500. So it's not surprising that selling puts has been the most profitable. But even though the market went up, these are 0 DTEs. So it's one day at a time, and you're putting them on at 9 a.m. So you're not regardless of that the market went up, these are 0 DTEs, put them on at 9 a.m. and most likely getting out pretty quickly. So it's not just looking at the up move in the market.
Correct. And I would like to state too, it says the puts aren't profitable, and I get it. I think he's just trying to say that. But the iron condors worked as well. So the calls by themselves were a little bit sus, but when you put them together, those were profitable.
Okay.
Yeah, comparing puts to puts and calls to calls, moving short strikes out improved win rates, and your ameliorated results.
Oh, and Jacob, he's our University of Chicago PhD. He loves to throw in big words.
Jenny, can you please define that for me? Ameliorated. Results. Smaller winners and smaller losers. That's what I believe. Smaller winners and smaller losers. Okay.
As with any defined risk trade with unmanaged losers, wing width was the primary determinant of downside risk.
Perfect. Directional verticals outperform delta neutral strategies in win rates, but lacked the credit cushion from the opposite side. Okay, there you go. Especially when trades were narrow and close to the money.
While the efficient market hypothesis allows for trading on assumptions, it's crucial to be mindful of the trade-offs involved in market predictions. So again, be mindful. Like we know from trading for decades, it's hard to predict what way the market's going to move. What we're mostly looking for are high probability trades and managing winners quickly.
Yeah, and like I said, I got my son doing it, so I'm looking at the very low conditional value at risk because he can't put $2,500 into one trade.
Again, there's so many options to choose from, and you can find a trade that suits any account size.
Agreed. I agree. That was a great study. I actually really liked that one, Jenny.
I know. I thought you would. And thank you, and shout out to Jacob, our in-house genius, for putting this together for us. Thank you very much. And are you ready to move on to?
Well, let's pop into Twitter real quick before we go to the next piece we've got, just because I want to make sure we get to everybody. I love our Twitter piece.
Okay, let's see what we've got going on. I'm going to go top down.
Oh,
yes.
There's Jajun.
Are they?
Well, I can see beer.
Tracy and Garrett and Tracy and Jajun. Where the heck are they? And it looks like a party that we weren't invited
and they're
to.
Drinking beer out of a.
Where is this?
They're at a party that we were not invited to. I'm going to say it's probably the Chicago at work by 11.
Maybe.
If I had to guess, that's what my spidey senses are telling me.
Maybe, does Mikey say? I miss Jajun. Oh, so this is an older picture. Hey, Mikey, I'm going to give you, clue you in. He's in the Chicagoland area. If you emailed him, I bet he'd meet you for lunch.
Oh, yeah, you're right. Probably right.
I was lucky enough to see Jajun the other day.
I haven't seen him. I miss him too, Mikey.
Oh, we love Jajun. And from the day he came to Tasty, I remember when he was new, his first week there, he was very excited, showing us all these studies he was doing. And he really did a deep dive into studying the SPX and putting together his ideas. And he's great. Great.
He did a wonderful job. Wonderful job.
Okay, Frank Walsh, Lisa Compare. So he's sharing this. This is from YouTube. Do y'all manage a zebra that has gone against you since it's a stock replacement? I'm willing to risk a little more, but my Apple zebra has totally gone against my call zebra. Any management? So yeah, let's jump in and talk about that.
Apple has gone down a little bit. So if you have a call zebra in, that means you're selling 150 delta and buying 270s. When it goes down, we typically, if I want to put more money into it, we typically like to reestablish when your long calls become the at the monies.
So let's say I'm just gonna say up here at the top, Apple was trading around 240. So let's say her zebra was October and she has 240 calls and then short 250 call. I'm gonna pretend that that's her zebra. I don't know for sure, but I'm gonna guess that could be. and that's worth $369. So use that $369. Don't waste that $369. Let's use it.
Because if you stay right there, then you're not going to make any money until it gets up back to 240. If it's a true stock replacement, you almost have to follow it with the stock.
And again, a zebra is defined risk, and some people want the unlimited profit potential with the very defined risk. And if all you're willing to risk is what the initial debit into the zebra, then you just leave it. If it didn't work, it didn't work. And you could say, well, that was all I was willing to put in it. It didn't work. But if you want to keep it going, what we would do would be sell this. So here I'm putting the opposite: sell this, right?
Yep.
Or sell this out, sell out that zebra, and then put on a new one, exactly the same way. Buy a 50 delta or sell a 50 delta, buy 270 deltas. And so it's expensive, but you're using that 370 in credit from your original one to get the new zebra a little bit cheaper.
You might be able to pull, oh no, it's the same thing. Never mind. I was going to say you can pull the 15 to the 20, but that's exactly what you're doing. You're going to put an additional $1,800 into it. No, but you got to keep in mind, $1,800 is a little bit more to put in there, but you're going to pick up 1 for 1 again above if it goes up at all from here, you pick up 1 for 1 again. So if you want to continue the position, if you want to continue this as a stock position, you got to follow it down. If you're tapped out, then you're almost done. Right, Jenny?
Right. So it's a stock replacement and there's risk. So if you bought 100 shares of Apple at 240 or wherever, I'm not sure exactly where the first zebra was. Maybe it was lower. And if it was where your short was at 240, maybe this will be even cheaper because you'll be getting more back for the zebra you're selling. So let's say you bought 100 shares at 240 and we're trading 226. Well, you're out $1,500 on those 100 shares. You're probably out something similar on the zebra. The benefit of the zebra, it uses less capital and it's defined risk.
Yes, correct. So that was a good question. Thank you very much, Frank, for putting it into the chat for us. We appreciate it.
Okay, Mikey, WTF did Oracle cure cancer? Oh, look at this.
Yeah. Hey, here, Mikey, the silver lining is I can see that flat line bar, your defined risk.
I know. It's still not fun.
No, it's not fun.
What are your mechanics when you put on a crab trade? What deltas do you use? What cycles do you prefer? And he's looking at Amazon. So Scott Sommer, our international man of mystery, looking in Amazon crab
trade. Now, I will give the kudos to Mike and Nick. They're the crab trade inventors and they're the crab trade creators. We do it a little bit different. I like crabs actually more for earnings or shorter term. I know they do them farther out. So you may want to, and Jenny, we can walk through this if you want, but our mechanics in crabs are just kind of like shoot by the hip. You might want to reach out to Mike and Nick.
Right. They were the originals. They were the OGs of the crab. But like, let's say I did a longer term one where I'm buying the at the money here in November, and I could be wrong, but buying the at the money in November and then in October, like completing the brokering butterfly, like selling two 245s and then buying, how wide was this? 235, 245.
I don't think you go the whole butterfly, do you? Is that perfect?
This is an actual like 10 by 10 by 10. I don't know if they break the wing.
So when you're taking a look at this, right, so that's why I'm saying you might want to go to the source, Scott, just because they are really good at this. When I do a crab, I sometimes will do them for earnings because crabs and diagonals have a relationship. Because here, if it goes up too much, if you're in Amazon and it goes up too much, you're gonna wind up not making any money.
Yeah, I like them shorter term too. I think they do them. If I'm going longer term, I'm doing a diagonal. I believe this is similar to how they would set up a crab, but if I'm going long term, it's going to be a little more.
You're going to pay more, but you're not, no matter what happens, you'll make money.
So here, 235, 250, I'm paying $10. If it goes up, I've got guaranteed profit potential. Where the crab, if it blows through that, you might not make anything.
Yeah. So that's being, and I super appreciate we love our international man of mystery, Scott Sommer, but I would take it to the horse's mouth because Nick and Mike are really good at it.
All right, Liz, I don't want to run out of time, and I know we need to get to what's your assumption. Let's stop sharing for a minute, John, and I'm going to get what's your assumption queued up.
Yeah, that sounds great. Yeah, because we do. I'm excited. We need to get to, I would like to get to what's your assumption today.
Just want to make sure that got everything set. Okay, perfect. Are you ready? Liz, are you ready for what's your assumption?
I am ready, Jenny Andrews.
All right, John, fire it up.
Just that music makes me happy, Jenny. It is, what's your assumption? Are you ready?
I am ready. What's your assumption? We get viewers' assumptions on different underlyings, and we come up with the trade.
So yeah, they send directional assumptions, supposedly liquid products, directional assumptions, and then Jenny and I create a high probability options trade on their assumption.
Okay, here we go. What do we have coming up? Coin, they are bullish. This is Sina from Menlo Park, bullish before October 1st. Oh, that's helpful that she gives us her time frame.
I do like it. So coin bullish. I believe coin is gearing up for a large move into 347 and a gap fill around 375 before October begins. Also setting up a push for into 500 plus in 2026. Okay, what I love about this is the detail of what their assumption is. Now we got to keep those details in mind, Jenny, when we put on a bullish trade in coin.
Okay, gearing up for a large move, and she's saying before October 1st, up to around 375. So
okay.
Let's jump into the Tasty Trade platform. We're going to go to coin and come up with the trade based on her assumption.
So October 31st, I say we stick with
October 1st. She says October 1st.
She said October 1st, not October 31st.
Right. But maybe we give ourselves a little bit of time and just use this October 17 monthly cycle.
Okay, we'll still make money if it goes up there, right? And so now, Jenny, what do you think? If they're bullish, it's a very expensive product. It's got a 7.3 IVA rank. It's a $321 product, and it's had a decent move up recently.
It has been going up. It has, but it's not back. It's not anywhere near its all-time highs. So she thinks it's popping up all the way. Geez, up 375.
Back to where it was before the fall, right? About
right.
Level. Okay. So let's. Do you want to do a Super Bowl where we're selling a defined risk put spread to buy a defined risk call spread?
Okay. If I sell the 300-290 put spread, that's a $10 wide put spread, I'm getting $300. And if I use that $300 to buy a call spread,
you're still outlaying capital. What if, because
that was $20 wide. So here would be $10 wide put spread covering most of the cost of a $10 short $10 wide put spread covering most of the cost of a long $10 wide call spread.
So your max profit here is 931. That's pretty good. And your max is about 1,000. This is almost a risk one to make one scenario.
And it doesn't need to get to 375 to make $1,000. It just needs to get to 340. So in 37 days at expiration, if coin is over 340, this trade will make $927.
The return on capital here is pretty good because you're using 1,000 to make 1,000. And I do want to place this trade, but I was just remiss because if that's her assumption, most people will go out and just buy the stock. And that would be very expensive.
To buy the stock.
So I'm even in here. You just stay in there. I'm just going to look in my account and see how much it is. If you're just going to go out and buy the stock, buy 100 shares of the stock, it's $16,000 to own 100 shares of stock.
And we can come up with a stock replacement in coin, which will make money one for one, but that's also going to be expensive. Here's a low cost way to try to get in the coin game. If you're bullish, you've got some profit potential between now and the next 37 days. And then I know she said she was bullish into 2026, but you can leave this trade on until October, take it off when at expiration, and then, or when it's profitable, and then put a new one on that goes further out into the year. I don't mind it. Usually we like to take in a credit so we don't have this loss area.
But I don't mind the loss because it's their assumption. They're bullish, right? So here you've got a $70 loss in that little area right there, and then it's defined risk. It actually gives you quite a bit of room to be wrong, and you've got 37 days for your assumption to come to fruition.
Right. If she wanted the shorter term, you can make it shorter term. You could use a weekly. But I put this out in regular monthly October expiration just to give ourselves a little bit of time to be right on this trade. Give us some time for coin to go up, and hopefully we can take this trade off for a win.
Perfect. All right. Press that button, Jenny Andrews. And then let's see what is next on our docket for what's your assumption.
Okay. That's shipped. We're working that trade in coin. If we don't get filled, we can adjust it, pay up a couple pennies to try to get filled.
Pay up a couple pennies.
All right. I'll pay up a couple pennies. Here we go. Now I will pay. Let me get back to the table page.
For 75.
Doing.
Right here, 75.
75 cents. 75 cents. So $75. Filled.
Filled. And price improved, 74 cents. Okay. Perfect.
Right.
It's a bullish
There's our coin trade, short put spread, using that credit to pay for a long call spread.
Beautiful.
Okay. Next up in What's Your Assumption, we have MGC SIL, mini gold.
Long gold, short silver.
Z5 contract December, covered in Monday's option jive that gold silver ratio is above average. Historically, silver has traded as high as 2% the price of gold in 21 out of the last 50 years. Yet silver is now 41 while gold is 36.80. This means typically silver seems dirt cheap as it's only 1.1% the price of gold. Thus, long silver and short gold.
Oh, he wants long silver and short gold. Yesterday they were shorting silver and going long gold.
Yeah, Frank B from Toledo, Ohio.
Yeah.
Frank B from Toledo wants long silver and short gold. And he's using MGC and SIL.
These are massive. SIL is huge. Frank is big by big.
Well, you could use options, but I know with pairs, I don't love options in pairs, and this is the micro gold MGC. Oh, no options. So you have to just buy it or sell it. So he wants to sell this. It's big, right? It's big. Sell MGC. It's a big trade.
I think we have to, this is too rich for our blood.
But what if, I'm just going to see if we can do this. What if we did like small fry and short term, because it won't be that expensive. If you want short gold.
I'm not gonna lie to you, Frank. I know this is your assumption. I have a hard time shorting gold.
But he's getting long silver. It's a pair.
I know. I don't think that. I think gold. My assumption, Frank, gold's going to the moon and silver staying right here.
Okay, here's $140 in a short. Short gold put spread. I wanted to buy a put. I wanted to I don't like spreads in pairs trade, so I wanted to buy an in the money put. Or a put zebra, an in the money put or a put zebra.
They're gonna be expensive.
You're paying too much extrinsic value. You're giving up too much There's so much extrinsic value in those gold calls.
Yeah, because it's got 5 million shares have traded. It's got skew on both sides. It's got a decent heavy rank. Gold's rank is higher than silver.
I mean, in the pairs trader, we could buy SLV and sell GLD.
Frank, it's a good thing she's running it today because I'd do the exact opposite.
Liz, it's their assumption. This is what's your assumption, not what.
No, I'm just saying what I'm telling you what my assumption is here.
I'm going to put, okay, so to get notional value to notional value, I've got to do about 10 to 1.
10 to 1.
I'm going to get long 10 SLV shares and sell 1 gold share. That's it. That's what I'm doing. So you can see we're here.
Mm-hmm.
And so I'm gonna send this. See how much it's using.
It'll use $300. That's not bad.
Not bad. I'm sending this just so we can keep an eye on it. And we're in.
Not bad. I accept. We're filled.
Okay. Next.
You keep going to what's your assumption. I'm going to push everything out just because we're running out of time.
All right.
I'll do it on both sides because I got it up.
Tesla bullish 1 to 8 days. 1 to 8 days, short time frame. From what I see, Tesla pops this Wednesday. That's today. Pops this Wednesday to 370.
I love this. I love a specific assumption.
In 1 to 8 days. This is Kia from Chicago, South Side.
I was gonna say, that doesn't say JD.
Kia from the South Side. All right. Tesla pops this Wednesday, 370 in 1 to 8 days. Like this.
I like it. Yeah, I like it. A very short-term trade. Hold on.
You consider yourself from the South Side, Liz?
Yeah, I'm from South Side.
I'm from South. I would say South Side. Katie's from South Side.
Yeah.
All right, here we go. Tesla bullish 1 to 8 days. I'm going to go the 9-day.
Ooh, look at you. Okay, I'm getting everything out right now.
I'll do the same thing we did in coin. But $5 wide. $5 wide.
So
You still have to pay a little bit.
You have to pay a little bit because if you bring it right up to, do me a favor, just bring the short up to the 50 delta. Like just go an at the money put spread and an at the money call spread. You're still paying a tiny, tiny, tiny little bit, but that is bullish without paying any extrinsic value. So if it goes up from 355, you don't have any room to be wrong, but you will make money 1 for 1.
I want a little room to be wrong. How about we pay $75 just like we did in coin?
Great.
We're running. I could have made it. You know what? Let me make it small.
You're filled.
Late.
You keep going to what's your assumption. I'll push them out on both sides just because.
Okay. That was Tesla. Meta, bearish, from here to infinity. It's Meta, not Apple, that's going to swing and miss on AI. Or both might. Extremely bearish, small account, call credit spreads. And this is from Bala K from Algae Acres, Florida. I don't believe there's a town called Algae Acres.
Real possibility. Okay, so they want Meta, just a small call spread of Meta.
Small account, yeah, small account. Small
today. Meta's down $11 when I looked earlier. 8 now.
All right, this is just small account. I'd look for a third of the width. I'd look for $1.66 on a $5 wide.
170.
Yeah, here's $1.70. You're risking $3.30 to make $1.70. Ship that.
Okay.
Okay, so next up, ETHA. Oh, we already have it, so I'm just going to pass. We have a few ETHA positions.
We do. We do love our ETHA.
Bullish Delta. Let's face it, no one enjoys the hassle of flying these days. However, one way to ease the stress and strain of it would be collecting premium on an October expiration Jade Lizard and Delta.
Oh, current IV rank of 33. What say you?
Chris from Houston on the Delta Jade Lizard.
Love an IV rank of 33. Love a Jade Lizard.
They do have earnings, so you're going over earnings. That's probably why the rank is
decent. It'd be neutral to bullish because you're defined risk on one side.
Ooh. So it's 250 wide strikes. You'd have to bring it up quite a bit.
Yeah.
But I'm not gonna lie, Liz. I've been blowing through our buying power.
I know. I know.
Yeah.
I watched it.
You watched it. So I, as much as I like the Delta Jade Lizard, I don't think I can spend another $1,000 in buying power. I blew probably what, $2,500 in buying power already this show?
Yeah, you did.
All right, next up, but I like it. Neutral in UNH. Got a huge boost today, betting it trades between 300 and 400 near term. Iron Condor, Derek from Durango. UNH, we can make that. Hopefully, we can make that just a $5 wide.
For only $10 wide.
Ooh.
Yeah. Next.
And they said between 300 and 400. So if I want my strikes at 300 and 400, what am I getting? That's not terrible.
You were using less for the Delta Jade Lizard.
No, it was using more.
You were using $900 for the Delta Jade Lizard.
Well, I thought I'd get $5 wide strikes.
Yeah, I think we got to go next.
Well, SPX, neutral 0 DTE, and we just showed, hey, based on that study, I just sell put spread.
I know, I like it at 9 o'clock. But you know what's so funny is the neutral would have worked too. Like my neutral worked today.
Yeah, right. And last one, 10 out of 10, GDX neutral.
Let's pray it stops going up, Mike from DC. GDX hasn't had, I don't think GDX has had the run like gold has had though. I mean, I know it's up, but it's not up nearly as high as gold.
Well, I mean, it still looks, look at that chart.
68 is high, I guess, in GDX.
Yeah, remember when it used to be 16, 20?
It was the bell of my ball in the 50s though, I will tell you that.
So I thought that was in like the 20s.
It was in the 50s. Like it went from 40 to 50 and that's when I loved it the most.
Well, we just put on our gold silver pair, so I think we're okay. I think we'll pass.
And GDX is the miners, I will tell you that. So the GDX is the miners, and I do believe Tim Knight is bearish in the some miners, not all of them.
And they just wanted a neutral trade. They wanted neutral. I mean, if I did neutral here, it would have to be just like $2 wide, which I could. $2 wide. That's not bad.
That's a number I can live with.
I shipped it. Just a basic iron condor. All right, 10:54. I want to make sure we get to everyone in Twitter. And today's earnings, just Kroger. So I don't think we need to do anything with Kroger. I'm going to go top down. Make sure we got to everyone. Oh, look at Mikey now.
Building the SPX forest.
Nice, Mikey. Fazia, NBIS was up huge a few days ago. How about selling a ratioed strangle? So good idea, Fazia. Sell 275 puts, buy an 80 put, sell 115 call, collect $5 with buying power of 1,000. That's not bad.
These are not bad. And I love this. And so she's on the follow page and she is a great trader. She's also coming in with another one. What about a call broken wing butterfly in Oracle? Oracle's up so much. That's not bad. There's no risk to the downside.
360, 400 for 350. I like that one too, Fazia.
Yeah.
You're getting 2 hearts for these trades.
You should retweet those so people can see them too.
Mikey, look at this. Meet up with Jajun for lunch.
That's awesome. I love the gift. Mikey's the best.
All right. Oh, Eric today. Look at this. What does he have going on today? Out of the 8 lot for $760 before fees, scaled into a double semi.
Butterfly.
Yeah. It's 65.60 for 210 averages. We seem to be slow grind. Okay, good.
And Gamma's drying up. I love it, Eric. Thank you for, I really appreciate this. And let's retweet these too so everybody can see them. I love the transparency.
Happy Wednesday, Ivy ranked bored to death. Repost. And we saw Mikey's, Ashvin, IBIT. Oh, Ashvin was the one writing in about IBIT.
Yeah.
Thank you for cluing him in about IBIT. So we've been doing these Jade Lizards every week. So far, so good. Knock on wood.
Winner, winner, chicken dinner. Love it, Ashvin.
Oh, and Ajit, Oracle, Christmas tree butterfly spread.
Ooh, let's talk. Let's talk Christmas tree. Okay, what do we got here? 140, 145, 150. So it's a call. They're all calls, right? So he's buying the 140s, selling the 145, and selling the 150. So Christmas tree is 1 by 1 by 1, isn't it?
Whoa, wait. This came in 1 hour ago?
Yeah.
Isn't Oracle the one that's like 300? Like it's 340. This one I'm not understanding the strikes.
The 140, 145, 150 doesn't make any sense to you?
I don't know where, I'm not sure.
I feel like those were the strikes that he gave us yesterday in something. Do you remember? It was in Roblox.
Yeah, right. Like not in. No, he really thinks so. This is completely overblown reaction at this point with an excellent theta harvesting and capital appreciation. I think he really thinks, yeah.
Show more. Hit the show more button.
He thinks just an early Christmas gift. So is he going Christmas tree butterfly spread? So he's buying the puts, like buy 140, sell 145, sell 150.
Go for it. Net credit $6. I don't know. Yeah, maybe. Go. Let's look.
All right.
Buy 145.
And I don't know. Maybe he's all the way in December.
Try it. Buy 145. Buy 140. Right? Let me go to Twitter. I will give you the exact strikes. I will give you the exact strikes when I am in.
Unless. Well, there's nothing here that's going to add up to a $6 credit. Nothing.
That's what I'm saying. We're missing something.
Unless he's like in the calls, which there, if you're getting that big of credit in the calls, it's cost to carry, it's interest rates, it's nothing to really be trading.
You're gonna get way more than a $6 credit if you're in the calls.
No, I'm just saying if he's putting something together, I don't know. I don't know. I think maybe he was off $100.
Try it.
Read me the 240. Read me the strikes again.
140. So go 240. You're buying one.
Okay.
Selling the 45 and selling 50. They're not there. I don't think we're in December. He might just be saying Christmas tree because it's a Christmas tree, but not in, you know what I mean? Not that far out.
And even in October, there's not the strikes.
Okay, so
I don't know, Ajit. You're gonna have to maybe this is a different different.
I'm going to give you what my kids say when they want more information out of me, because this is an old pool game we used to play. When they wanted, if I said something they didn't understand it, they would say more sugar, meaning like, tell me more sugar. It's gonna be my new thing. More sugar. I need more sugar.
He means 340, 345, 350.
We need more sugar.
We could, yeah. It's 340, 350. It's right here. It's right here.
We're out of time.
All right, we're out of time. Thank you everyone for tuning in. Today's only Wednesday. Tomorrow.
My guess Ajit did, and I'm just extrapolating here because he's a very seasoned trader, and shame on us. I bet he dropped the handle, so it's like 140, 145, 50, and we assumed. You know what assuming does.
I don't know. All right, Ajit. Thank you for tuning in, and all of our viewers, thank you for tuning in. Tomorrow we'll be on Red Shirt Thursday, and Glenn will be with us.
Oh yeah, we got Glenn. I'm excited. All right, everybody, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Bye, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever? Forever? Oh, no. I mean, Tom has a hard job. He's got to wake up really early. But he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy. And I live here in Chicago, so yeah.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it. Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler and, of course, Mr. Glenn Freiberger in the house with us today for our Tasty FX takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, get spent with my buddies Mike and Glenn. Glenn, good morning, sir.
Good morning to you guys as well.
Yes.
My back hurts. What do we do about
Oh my God! Don't ask him.
Yeah, this is, you are far too young to have that.
No.
That didn't happen to me until
What the
I turned
heck?
35. So
Yeah, I've heard that chair situation is definitely like a.
is really bad.
Dude,
Yeah.
it was
How
my,
do you dislocate a disc? Is
my
sitting in
chair
that
situation. I found, though, the more comfortable I am in my, like, office chair, the more it hurts when I get up. Like, ooh, that wasn't so all I need is someone to tell me it's right and it's not going to hurt me, and then I'll
Well,
thug
you
it
need a
out.
lumbar. You need a lumbar support.
I mean,
Yeah.
we have the fancy chairs.
Yeah, we do have
I'm
good chairs.
Trusting that they work, but I just don't know how to work them. There are like 8 different levers. But no, it was the airplane back from San Francisco. If you were in San Francisco, that was a absolute riot.
Was it? How was the event?
Some say the best.
Did Tom and Tony perform to your expectations?
They did. Yeah, Tom had a little laptop fiasco, but he saved it.
Wow.
He left his laptop on the plane.
Oh yes, I heard about this.
Yep, because they make you put it in the seat back, or they make you put it away for landing.
Yeah.
And he put it in the seat back, fell all the way down. Didn't realize till he got to the hotel.
Did he end up getting it back, or?
No, I haven't actually asked him.
No
I think
chance.
I think they're
Absolutely not.
I actually heard him say I think they're sending it to him. So.
Nice. Yeah, he has.
He'll be okay.
He has reserves.
Very fitting.
Oh.
Yeah.
Very fitting.
But yeah, on the way back, cranked my back while watching The Usual Suspects.
Ah, a classic.
Good movie.
A classic.
First time seeing it.
The best. One of the best.
So you have no pointers. You're toast.
For the back.
Yeah.
I hope you don't have to see any sort of doctor for it, because the soonest I could see somebody is like late October,
Dude.
and I feel like I might like not be able to walk by then.
How about like how about I help you and you help me?
So
We
here,
schedule an appointment with each other.
So lower back pain is largely related to weak glutes. So do more glute exercises, and that might help.
Yeah, you gotta get that.
One,
peach,
how dare you?
That peach nuts.
Yeah.
Presume.
Hey,
You got some nice
I have-
glutes. I've seen it. I see them walking around the office.
just do more stuff. Do hyperextensions. Do like kickbacks. Everything that's
All right.
related to strengthening your glutes will take pressure off of your lower back.
Yes.
About
It's quite simple.
glutes and hamstrings.
Sure.
Yeah.
And stretch. If you got tightness, that also
I'll stretch.
does not help.
Yeah.
But I feel like any kind of twisting, stretching just makes it worse. So
Yeah.
I'll figure it out. Give you guys an update. How
You gotta do a happy baby. Happy baby. It's a compromising position. It's a compromising position.
All right.
It'll help you, stretch you out.
There you go.
But yeah, that's really.
Once you got it, it's tough to get rid of it. So you gotta.
Don't say
you gotta
that.
Be,
Yeah.
right.
But they're still high.
First
How old
priority.
are you? What are you, 25?
24.
24 and you have back pain?
It's
Oh my God.
economy seats, man.
Not good.
Yeah, that's right.
Thank you,
I
Joe.
love it.
That's sad, dude.
Incredible.
Oh my God.
But yeah, strengthen the glutes. Maybe you'll be fine.
All right. Glute day today.
There you go.
Yeah. Very nice.
So the dollar is ripping. I see just green on the screen. I've literally
Green on your screen?
Yeah, because all we do is buy the
Nice.
dollar at Lowe's, and then you look 3 days later, and it's a winning position.
Yeah. Were you on last week? We didn't, or did we have you last week? No.
No, you
Yeah.
guys were out last week.
We were out.
I was on.
Oh,
last
yeah. We had our little golf outing.
Oh,
No, I was on then
I
because
know.
it was right after. And
Yeah.
we talked about the golf outing. Yep.
Because we got short the euro. We got long that
dollar yen,
dollar yen,
dollar franc,
dollar
all three
franc.
smashing right now.
Yeah.
One click close, one click close, one click close. Boom.
Yeah.
Nice.
We've had some nice.
Yeah, I mean, we're hovering. We got an interesting reaction of PPI this morning, softer than expected. Dollar weakness, but not to any substantial degree. Had some nice back and forth pre-market. Now we're kind of settling in. Euro around 117. Swiss franc relatively unchanged. Dollar yen right below 147.5. So pretty boring, but we've got CPI tomorrow. So I think there's some consolidation and expectation around.
And next week.
Next
FOMC.
week. FOMC.
Super Bowl. The Super Bowl for the FX boys and girls.
And girls. Yeah, so a lot gearing up for that, but I think markets are expecting, a consistent picture of PPI, CPI. The last, look into speculation around the FOMC, what they're going to say. I've got some slides about the upcoming expectations in a second. Oh, yeah. Let's get right into it.
Before we do that, let me give a little market update just to give the peeps, an idea of what's happening here. We got E-minis up 27. They've been strong throughout the overnight session. You had the Oracle earnings after the close yesterday. Stock was up 105, I think, was kind of the high of the session. Just a absolute face ripper there. Surprising, though, the fact that the NASDAQ's only up 58, and that's because Oracle actually isn't in the NASDAQ, which is kind of a surprise.
That is a surprise.
You would think that Oracle would be in the NASDAQ. It is not. It is in the S&P 500, just helping, that side of the equation. But kind of a surprise that the NASDAQ doesn't include Oracle. So not seeing those gains there.
You know who's not happy about that? Elon Musk, who is no longer the richest person.
That too. Larry Ellison, 90 bill.
Yeah.
Is that a
couple
lot?
B's. I think at that point the numbers just don't even matter.
Yeah.
Like what's the difference between 50 bill and 70 bill?
What's the difference
Three
between
votes,
50 bill
probably?
and 1 bill?
Probably not.
3 houses?
If you have 1 bill, nothing matters anymore.
Yeah.
If you have 500 mil, nothing matters.
Yeah.
Like your family is fine for generations.
Yeah.
Generations beyond generations.
Agreed. But also, we watch a lot of these digital numbers all the time, day in, day out.
Yes.
Can you imagine having your number cut in half just like one random Thursday?
Yeah. But
that would still suck.
It would stink, but I think
You're fine.
You'd be okay.
I want you to listen closely. Here's a SPX short put. If I had a bill, it would be like, this is the quantity button I'm hitting.
I don't think quantity even matters at that point. You do whatever you want.
Still going.
Yeah.
That's only 20 mil in risk.
What is it? 400,000 millions? That's a lot of millions.
A lot of millions.
I don't even know if I have 400,000 quarters to my name.
If you have 400,000 pennies.
This is nuts. Okay, so I just clicked the button as a funny thing. But you could sell, if you had $250 million, you could sell 400 short puts in SPX. In 30 days, you collect $3 million.
Fast facts brought to you by Mikey B.
There you go.
Dow down 190. The Russell basically unchanged here. You got oil up $1.33. Volatility futures basically unchanged, 1832. The VIX at 1483. We just had that vol roll. Bonds up 12 ticks. They've reversed a little bit of a sell-off that we had yesterday. Rates coming down a little bit. Gold basically unchanged here. Silver up 29 cents. Silver kind of consolidating in that range there. Bitcoin, $2,500 to the upside on the futures spot as well. Having a nice little risk-on day.
Yeah, it's fun. It's always fun. I can't believe Oracle's move. It's crazy.
Pretty crazy.
My dad is an Oracle applications consultant.
He's having a great day today.
He's in Orlando right now at an Oracle AI conference, and he's like, "Why didn't I buy calls for Oracle earnings?" I'm like, "You can't."
Yeah, it's like
you can't expect a 40% rip after earnings.
But still, it's like going to a Cubs game and not betting the over. It's like you were going there and you weren't anticipating fun.
Yeah.
I hope they upgraded all the catered lunches.
Oh, I'm sure they did.
I don't know how many people played for a 4 or 5 standard deviation move here. It's a pretty incredible move. I played for like a 1.5 standard deviation move to new all-time highs.
That's pretty good.
No.
Not the same?
It's a broken wing butterfly, so face ripped off. Unfortunately.
Sorry.
So it's okay. Live to fight another day if you stay small enough. That's always the key. That's always the key. Can't go full bore, you know.
Speaking of staying small, I did close that micro crude contract this morning for like $150, $165 winner.
Nice.
So caught a little rip, took some risk off, and now my positions are down to 1 page, which you just love to see.
Yeah.
With the market at all-time highs, VIX at all-time lows. I mean, not really, but kind of.
Yeah, there.
Feels like it.
Yes.
I did close those TastyFX positions, so I have no positions on.
Nothing
and I'm
on.
ready.
All right.
I'm ready to hear what you have to say, and I'm going to click
some buttons.
Some more buttons.
We've both had some very nice success with the TastyFX products. They are fun to trade.
Glad to
Key
hear.
is just
Great
trading small.
functionality.
Just trade small enough and just let the position go. Sometimes it actually helps if you forget about it, and then you come back later and you're like, oh.
Yeah.
Trade
Oh, there's a
management
couple
with Mike
bucks.
Just forget about it.
Yeah, just kind of forget about it. Yeah, exactly.
Yeah. Well, before we get into the slides, one market I do want to call out, market of the day that I'm watching is Australian dollar, US dollar.
Ooh.
We are above 66 cents there. Like you said, risk on day, Australian dollar, benefiting from that and some US dollar weakness. And now we are through, but through year-to-date highs. You're looking at the daily chart here, all the way back to, I believe, November of last year. This one has been pretty consistently between 66 and 64 for much of this year. Whether the overall landscape is changing as we resume cuts, who knows? But if you are sticking to that range, you've got a pretty unique price point here above 66 cents.
I have routed my order to be.
That was fast.
To be short. Listen, man. I mean, I'm a trader. You stay small. You sling them.
I mean, from a platform perspective.
The platform is very fast.
Speedy.
It is.
Micro lots you got?
5.
Nice.
Right,
5 micro lots.
And you get paid a little bit to hold this position, which, as you know, is my favorite.
Yes,
my favorite thing.
Mikey likes to collect his couple shekels.
Yeah. Positive swap bid, smash the bid, shekels every day.
So yeah, your position's moving at 50 cents a pip.
Yes.
So if you're, playing for even half that range, that's what, $50? Pretty good.
Yes.
Or
All these I try, to Mikey's point, keep them small enough. $20, $25, $30, 50 would be a great move. You could always add to it too. You get this continued move. You put another couple lots on, micro lots.
Yeah, from a tape action perspective, if this does start to run against you, I think you're at an inflection point where you could recognize that pretty early. Say, okay, I'm out. This is categorically different from the range I was expecting. But best of luck to you.
Or you just hold on to it forever.
Average in.
I don't want to steal the content. I haven't looked at it yet, but FOMC rate cuts are on the table. Is the dollar weakness already priced in?
A very important point. We'll see. The slides I got, I think, give you some very interesting takeaways. Not what I necessarily would have expected, but an important revisit to just a year ago.
Very nice.
Let's get into the slides.
Let's do it.
So today we're looking at what does the resumption of rate cuts mean for the U.S. dollar? The exact question you asked, Mr. Batista, because all signs are pointing to we are back in the cutting mode, and it was
money printer go burr, baby.
And how timely that.
Get your assets, whatever you want, just buy them, buy them, buy them, buy them. Money printer go burr.
Historical perform is not indicative of future.
Excuse me,
results.
Trying to be like professional. You're like, money printer go burr.
Sometimes I think I have like mild Tourette's, you know? It's like an outburst.
Well, a little brief history lesson for you to jog your memories. As just a year ago, with this meeting, we got ourselves a jumbo cut to kick off the rate cutting cycle, one that was from above 5%, maybe expected, a very consistent rate cutting cycle. That's not what we got. We got a jumbo cut. We got 2 more cuts. And since then, nothing. As you know, from the start of this year, markets pricing in, 6 or 7 cuts this year. As we stand here in September.
Too late.
Nothing yet.
Too late. We don't even call him Powell anymore.
Just Mr. Too Late.
Mr. Too Late.
But it might be Mr. Time is Right in September. Markets now fully pricing in a rate cut for September and even the outside chance of a 50 basis point cut. And so I went back, did a little digging, some light digging into what happened last time. Fed delivered a 50 basis point cut, 25 basis points expected, but it was very up in the air. This 50 basis point cut was very much on the table. And the traditional expectation would be, you have some chance of a 25, you get a greater cut than expected, dollar's going to drop. Not exactly what happened, because as we have the sequence of events here around these meetings, we have the data release, then we have Mr. Fed Chair Powell come on 30 minutes later, give his commentary on their decision and what's going on in the landscape. And so what he delivered just 30 minutes after, we saw some immediate dollar selling was, don't expect more 50 basis point cuts. The actual whole rate cutting expectation for months out was actually not as dovish as people were expecting. So a bit of a mixed bag there. And then you're looking at all these other currencies. You had over one day you had 1 day dollar weakness with the exception of Swiss franc and Japanese yen. Maybe that speaking to, more of the risk sentiment at that time. But over 1 week, you had every pair dollar weaker. And then at the 1 month horizon, you had every pair bounce back, dollar complete bounce back. And as you know, into the fall and the end of the year, dollar much stronger. So
I didn't know that. That was that a thing?
So as we talked about year to date, what the dollar's performance is, that was coming off of what really was highs for the dollar, lining up there with year end. And so then also checking back into what the global central bank interest rate landscape was at that time. Everyone was cutting. Everyone was kind of cutting on pace, not necessarily what you have here now. And why would we cut? Even though it was a jumbo cut, the economy was still strong, just rates were also exceptionally high. So a bit of a different perspective. Is this what you guys remember from the jumbo cut? I know you guys weren't looking necessarily at U.S. dollars.
Yeah, this wasn't really our realm.
But not as surprising as what I would have expected from a, double the standard cutting magnitude.
Now that's with so a little bit more up in the air. The cuts were
correct. Exactly.
Right now we've got it's actually at about a 10% probability of a 50 basis point cut. So it's much more of a tail projection.
Yeah. Let's go to the next slide. We'll compare.
You're already covering this. I don't even. Okay, go on.
Sometimes I think about things. So what's different this year? For one, we're looking at FX markets, which are all in pairs. So the relative game is really what the highlight is. And right now we're not leading the easing cycle, while we have stayed as a result of economic strength. So, some would say good for our currency. Other central banks have been cutting during this time, and now at this point in time are not necessarily primed to cut. Again, like the European Central Bank meeting tomorrow is not set to cut. Their rate's already at 2%. And so price action aside, we've seen dollar weakness to a great degree. We're already down over 8% year to date against a basket of currencies, and that's despite all these other central banks easing and us staying. So a bit more of a nuanced picture here. And like you called out last time, definitely greater expectations of that jumbo cut here, a tail risk at 10%. And as well, sentiment, looking at, what Mr. Chris Vecchio loves to cover, the Traders Report. We're in a categorically different environment where we're not as positioned, traders are not as positioned heavy long US dollar. So, a bit more nuanced situation. We're already in some US dollar weakness. What the cutting cycle is, who's to say? But looking at the next slide, here you have it, all the expectations around, this is looking at the CME FedWatch tool, what the current expectations are from a market standpoint. You have that 10% chance of a 50 basis point cut here. By year end, 75 basis points total expected. So that could, the most likely path would be 25 at each meeting. And long term, getting all the way down to around 3%. So what we've seen historically is, even though the cutting cycle wasn't as long as expected, once they start, they continued, at least last year, for 2 successive meetings and stopped altogether. But the name of the game will really be not as much if this is 25 or 50 in September, but where are we going in the year end over the next, 5 meetings, 10 meetings?
If they did one jumbo and then said, okay, that's it.
Correct.
You'd probably have a bid in U.S. dollar.
100%, yeah, because right now we're pricing in 75 basis points total for the end of the year. That's kind of, they're all participants at all ends of the curve here in terms of time expectations, but spot sensitivity, you are looking at this meeting, you're looking at the next few meetings for that sensitivity. And this is recent, right? Because not too long ago, I'd say a month or so ago, the expectation was really anchored around 2 cuts. And, markets have been expecting the front month, you're going to start cutting. But that October cut was definitely not priced in not too long ago. Just either they do September, October, September, December, but 50 basis points total. And so now, as we currently stand, 3 25 basis point cuts priced in for the rest of the year.
This has to be one of the biggest moves in the U.S. dollar in such a short period of time in terms of the basket of an 8%.
100%, yeah.
This is one of a handful of occurrences, or this is a big.
Yeah, especially across the board. Speaking to the U.S. dollar side of that story specifically, and it's not all to do with central banks. As in a calmer environment, it might be a lot to do with the current administration, global trade policy, and then kind of a snowballing effect of what is the U.S. dollar going to retain its status as the global reserve currency? We had a Swiss banker today say, yes, that
Thank you.
they expect that to stay the case, but you got a ton of euro demand throughout the spring on some of this speculation that there won't be such a heavy dependency if the trade picture does not look as U.S. involved, as well as the U.S.'s involvement in a lot of these global conflicts as well. So while it looks on paper, rate cuts resuming historically or traditionally bad for U.S. dollar, we're positioned in a much different place here with the dollar already beat up and certain expectations already priced in. So it'll be interesting to see if CPI tomorrow changes anything, and what the Fed has to say, because they don't always agree with market sentiment, as you know. So far this year, look no further as traders continually pricing in cuts that haven't been there.
Are there any other USD pairs I'm looking at the New Zealand dollar, US dollar, which has had a huge move higher as well. Any places to get, where being long US dollar is kind of at an extreme here?
Yeah, I mean, in terms of that year-to-date range, Australian dollar, New Zealand dollar, similar exposure.
Yeah.
Historically, New Zealand dollar a little more volatile, if
Right.
that's what you're looking for.
Yeah.
But I mean, I continue to point to the dollar Swiss franc that is still hovering below 80 there, and when we first hit that was a 10-year extreme, and so that one, while its trading range has definitely tightened up, your expectations from that fall from 84. If we can, are you in the platform?
Yeah, I am.
If we can switch
Yeah,
back to the platform.
Jump to the platform
We can
here.
show this chart here.
Boom, look at those bands.
Look at those bands. I mean, you can see the trading range come in a ton.
Yeah.
And, this drop from 82, we haven't seen spot 82 since June. So trading into that range, but we're still on the lower half of even that range under that 80 threshold. And so that one's interesting to me, even though it's less volatile of a price extreme. Euro, you have it up 10% from where it was a year ago, but we've seen much stronger euro prices in the past 2-3 years.
I did close out of my short call spread in the euro futures. I could dabble.
Yeah, I mean, the dollar sign DXY, we're at 3.5-year lows. So the pairs are interesting, but I think, it's a pick 'em, it feels like.
Yeah.
Between
And
New
so-
Zealand, Aussie dollar, franc.
Yeah, and the nice part is if you are thinking, like, looking at that dollar basket, that's what, 50% euro exposure. And so it becomes a categorically different picture once you just remove that. So, all these dollar pairs moving pretty unanimously, oftentimes, which creates that dollar basket and those similar price extremes there. But if you're looking for price extremes, definitely look to the individual markets themselves.
And boy, do we love price extremes.
Yes. I got into 4, I should say. USD franc. I added a little bit to that. I'm already long that pair. Short the Aussie US dollar, short the New Zealand dollar, US dollar, short the euro as well against the dollar. So we're getting long the dollar here.
Nice. Yeah, but
you got to think
with the
this is the surprise is already baked into where we're at.
That's fair. But you could also, what's nice about building this portfolio independently or individually is if your thesis behind, those short Aussie dollar and New Zealand dollars are, right now on a Wednesday, we're at the top of the extreme. I would expect in a lower volatility environment that to be more range bound. You could see where you're at a week from now and pull that off thinking, wherever it is, we might now be in a higher volatility environment and my thesis might not hold true. And you still have those long dollar positions in your euro and your pound and Swiss franc as well. So
how about a non-dollar pair? What's speaking to you?
I'm looking at earlier this week. I was looking at and I guess it still holds New Zealand dollar, Canadian dollar,
Okay.
or similarly Australian dollar, Canadian dollar.
Ooh.
Those are, also it's a very similar trend because you have New Zealand and Australia highly correlated. Similarly, you have U.S. dollar and Canadian dollar highly correlated. But this might be an opportune time where you think Canadian dollar might diverge from its U.S. dollar correlation and treat this pair independently. But you're getting some range price extremes there.
Yeah.
Otherwise, what's also interesting to me is just the euro pound market, because that one historically low volatility because of that high correlation. But this, from a fundamental point of view, you're seeing some trouble in France around government, their prime minister or whatnot, their government, I think, technically collapsing.
Mhm.
I don't know how important that is.
Seems important.
But that would be, in theory, euro, solely euro, as opposed to British pound, whereas a lot of other factors.
Euro would be weaker, you're saying.
Right.
Yeah.
Or it would affect the
euro more
independently than the British pound, whereas this pair is so low volatile because a majority of other factors would affect both of these currencies from like a geographical perspective or even, trade as well. So
I just got short both of them.
There you go.
Nice.
Which is, so I might have checkmated myself here, but we'll see. I'm short the Aussie dollar, US dollar, short the New Zealand dollar, US dollar. And then I'm short the Aussie dollar CAD, New Zealand dollar CAD. So I'm double short both with different denominators, both the US dollar and Canadian dollar.
Yeah.
There you go.
But using
I guess it's not.
he's saying the Canadian dollar has been
Yeah.
highly correlated to US dollar, so you get that sort of high.
But then, yeah, you can look at the Canadian dollar market outright as well, and that's trading near the top of its 3-month range. So you could get this staying where it is, or range trading, and you get the Australasian part of those kicking into your favor without much impact from this side.
What'd you just say?
Australasian.
Is that
that word.
Yeah, that's good. Wow.
That's a new one. We're gonna park that one in the bank.
Yeah.
All right. Yeah. My top words of the day: jumbo cut.
Jumbo cut. That's
Jumbo
good.
cut. That's a good one. And Australasian.
Very good. Awesome. Frank, I almost called you Frankie. Glenn.
I'll forgive you this time.
Yes. Thank you. Thank you. I appreciate that. We appreciate you coming on and giving us, some great content to stew on. Put on a couple positions, but I know our contract has you only for 30 minutes, and we've gone 6 minutes past that. So please send me the invoice for that. Thank you, and enjoy some lunch here.
Thanks,
we're gonna get back to options as well. If you want to chat us some questions in the YouTube chat, you can do that now. We've got E-minis only up 21. They're crashing basically.
Yeah.
Is that what you would say, Mike?
Yeah.
They're crashing.
After today's rip roaring rally, coming down from highs, Bitcoin is continuing its strength, and I mean, you've had some crazy moves under the surface here.
Yes.
But, I'm close to closing the NVIDIA call diagonal spread I have. I've got the 190, 195.
Okay.
Put that on 2 weeks ago. It's down $80, picking up some value today. SMR, that short put I put on 2 days ago, 35 strike, that's up $40 if you want to take a quick win there. I'm going to keep mine though. And then ETH, seeing a nice rally. Those butterflies could be coming in here. The longer term crab trade, the 30, 40, 50 is up $25. So we're back to the green there. And then the 9-day butterfly, I had the 35, 40, 45. Someone in the YouTube chat said, why don't you just close those shorts? So I did yesterday. And that was a good play, because now those 2 long options are gaining some value. Still need a little more continuation here with only 9 days left, but
cheap shot.
Things are moving. But yeah, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. I've got the Cherry Picks newsletter pinned to the top of the chat. You can get that for free. And yeah, let's look at some of these chat questions. See what we got. How do you manage a zebra that has gone against you? Since it's a stock replacement, I'm willing to risk a little more, but my Apple zebra has totally gone against my call zebra. Management. Yeah, not much to do. You can buy back your short call.
Yeah.
And that's pretty much it. Zebras are, like you said, stock rental positions, but luckily, if you put it on yesterday, for example, you're losing less than if you had shares in this $7 big sell-off here. So if you're willing to put on more capital, it would just be to throw on another zebra at the new stock price, or buy back your short call. It depends on how much time you have left in the trade. If you're in October, I think you just buy back the short call and maybe you lean long with those long options. You go from a potential 100 delta position to a potential 200 delta position, but that's pretty much it.
You have with the zebra, and just to show the risk profile here, you have a free put baked into the downside. So the difference between this and a long share position is that you have the capped risk on the downside. So as time passes, you'll end up losing more, assuming you're close to at the money on the long option. So you become more directional in terms of like what you need to happen moving forward. But right now, your buffer is about as good as it could have been. So the other possible adjustment is to close it, and Liz and Jenny call it ratcheting, but it's usually into a profitable position. But you could do that sort of adjustment now where you close out of your current zebra that might be at the money with the longs or even out of the money with the longs, close that out, and then do a new zebra that's at the money. It's going to cost you money to do that, but it realizes your hedge, right? So you have that long put, you're buffered into this down move. You take that off and you reestablish 100 deltas at a lower stock price.
I'm curious what you would do with Hood if you're bullish. They do have earnings at the end of October, but I would want to do a 30, 45-day trade. So I would do...
This one has just taken me to the woodshed.
Just a straight up chart.
I'm short stock, short put at the 100 strike. Looked perfect until the S&P inclusion, and then it was up $15.
Yeah, just pure insanity. But yeah, I would go with a defined risk trade here, considering how big this rally's been. You could see a big sell-off.
Well, what's that?
Wouldn't surprise me. What's a sell-off?
Yeah.
It's when there's a red number on the screen. It only happens for a few stocks every once in a while. Yeah. But the nice thing about earnings being at the end of October is you could buy a call in November. So like the 120 or the 125, and then you just create a diagonal spread. If you go long November, short October, that gives you the ability to roll into the earnings cycle, which appears to be, if it is actually October 29th, they're going to have to add another weekly, and then that weekly option cycle will have a big implied volatility. So you could roll your short option to the earnings cycle and then basically leg into a diagonal spread for earnings. So that's what I would do. I would buy something in November, sell something in October. Once they confirm the earnings date, you can roll into the earnings cycle if you need to. Let's see. Short gold here. Yeah, I need gold to chill out. Gold futures specifically.
Yeah, gold has gone nutty to the upside. I have some short delta here that is now 100 points in the money. It's been absolutely incredible. I did a butterfly or broken wing butterfly in the September expiration, so I have a little bit of value on the upside. I also have one in October, so been a wild move.
Yeah, for sure. How much percentage of buying power do you use in your portfolio? 50% or more? No, not really. I mean, right now I'm using about 50%, but I'm peeling off positions.
Depends on volatility. We've got relatively low implied volatility, so positions tend to be taken off, especially into the move that we've had. We typically lean net long, so into these up moves, you naturally, take profits and take positions off on those as well. So,
yeah,
it's a tough question. The smaller the account, the harder it is to keep capital on the sideline, and so you got to have a little bit of a variable there.
Indeed. And yeah, one of my positions is the IBIT strangle. That's my year-long trade. That's using
That's a big.
That's using $3,000 in buying power. So if you discount that, I'm only using like 25, 30%.
Yeah.
Let's see. I got rid of my lower back pain by taking a short walk in the morning. Could work. Deadlifts, yeah. Sumo deadlifts are easier on your back, but yeah, that is glute strength, people. Getting slapped by Oracle, short the 2-day 295 calls, rolled the short puts to a 330, considering rolling to October. Given the move, where would you look to locate your short October strikes?
I would probably do that into the micro pullback that we've had, 195 or 295.
Yeah. So short puts are 330. Yeah, so I mean, if you're moving from the 2-day to October, just looking at the same strikes, let's call it a 300, 330, because there's no 295. Yeah. You're picking up $1,600 in premium if you just roll to those same strikes. So even into this move, it's not a terrible scenario, because October, you're basically within the expected move with those strikes.
Well, you got volatility staying bid here.
Yeah.
Which is helping you.
Yeah.
A little bit in terms of the roll.
Yeah. You could reduce the inversion a little bit if you wanted to. If you wanted to lean short, or if you wanted to bring your your in the money call up. But yeah, the $1,600 credit is not too shabby. Yeah. Just depends on what you had initially. But yeah, defending the position, ending up with a 300, 330, picking up about half the value of that intrinsic. I mean, if you get out of that at the end of October, you're going to be happy. With a 40% rip.
Yeah. Could even roll to the 300 straddle if you want to lean short. You know, this still leans you 50 deltas short.
How do you plan on managing your Iron Condor and Adobe?
Is that you?
Yeah, I just have a short put spread actually.
Yeah, I did a downside butterfly in my Johnny Trader account, and then I bought in the risk. So I have like just kind of a lottery ticket on the downside.
Yeah, I have a 9-day short put spread in Adobe. Earnings are tomorrow.
What spread?
The 335, 330. So it's at a scratch right now because it's trickled down towards my spread. I'm probably just gonna leave it, honestly. It's trading for $1.90. It's a 5-point wide spread. It's a chicken short put spread within the expected move. So yeah, I'll probably just keep it and see what happens. You could throw on a call spread, but
yeah,
I'm not sure I want to do that at this juncture. Let's see. VIX in the 14 handle, cray, yeah.
It's in the 15 handle now. A little bit of volatility futures up 2 ticks.
Ooh.
Spooky.
How is IV rank going up in Oracle? Sometimes.
When you have a 4 standard deviation move, and that's what happens.
Yeah, sometimes you don't need.
This is volatility. It's upside volatility, though.
Yeah, it's real volatility. And also, so yeah, Oracle opened at, it opened at 320, so it's up another 20 points. So it's realized volatility, bringing in implied volatility. If you type in oracle.ivr, you can see a chart of the implied volatility rank that did crush, but it is back. So that'll happen.
Yes.
It's a crazy move.
Yes.
SNPS down more than 30%. Yeah, that was the opposite move of the day. Craziness.
Yeah, I think we've looked at this one before. I mean, you don't even have anything you could do here. Because they didn't even have strikes this low. So if you're trying to do something here, you have to buy a call spread or buy a call outright. But yeah, I don't like to step in front of the 30-point down or up move the day of. I think you got time.
Yeah. Oracle Butterfly, deep in the money, 2 days out.
Yes.
Keep it. Yeah, it'll probably be assigned. So
probably
you could close it for a couple pennies, whatever you can get filled, but just to avoid that. But yeah, these options have no extrinsic value, so they're highly likely to get assigned. This two shorts.
But you can hold it to the end of the day.
Yeah. Circle has low IVR. Started with crazy high IV, so the IVR can't be high, relatively speaking. It's pure speculation. Yeah. Yeah, IV rank only tells one side of the story. You got to look at the actual implied volatility. When you see an IVR of 8, but then you see an IV of 80%, if you're selling premium in here, IV rank doesn't really matter. You're still getting paid a ton relative to risk. There's still risk, though. What I would say is if I see an IV rank of 8 and then I look at the IV and it's 25%, I'm not selling premium in that environment.
Yeah.
But I'm not selling it anyways. If IV rank was 100 and I look at a 25% IV, I'm not selling premium there. It's just, I pay more attention to the actual IV because that is what you're getting paid to take the undefined risk of a short option. Put on an Apple Butterfly yesterday for the event. 225, 230, 235. I assume for the weekly cycle. 225, 230, 235, hovering at an 80-cent profit. Would you take the money or wait for a slight rebound tomorrow for more?
Ooh, that's a 50-50 shot. I mean, it's literally a coin flip.
Truly.
A nice trade. I mean,
I would just take it.
You take it? See, I probably you think if we're going to, continue higher, you maybe get a little buy the dip in Apple. That was my thesis with Amazon today. When I pitched the trade for Johnny Trades, I was like, if we're going to continue this, you're going to have to buy the dip here in Amazon, Apple, Meta, that stuff.
Yeah. Yeah, I might just take it. It's a narrow butterfly. That's my only.
5 points wide?
5 points wide.
50-50 shot.
Yeah. But you're up 80 cents on a butterfly you paid $1 for. So
it's a good trade.
Yeah. Not sure if I should roll my Oracle Strangle out or now or wait until Friday. Have the 200, 295.
If you're in the weekly?
Yeah, I believe so.
I would do it now. You're just short stock. So
Yeah,
I would
200.
do the same thing we talked about with the other position. You could roll the 300 straddle. You could roll to, an inverted strangle. If you want to lean a little short, I might just do the 300. And, you'll have 50 short deltas here. So you still got that. It's very much an under hedge.
Yeah. Basically, if you're in the 2-day with this position, you're buying it back for $4,300. How you set up your new position in October is up to you, but basically your goal is to just get $4,300 or more so that you're moving this for a credit or a scratch.
Yeah.
So to Nick's point, if you go to the 300 straddle, you're still picking up $1,000 and you're at the lower end of the expected move in October and you lean a little short into this move.
And I'd look to be out for a lesser loss.
Yeah.
Like when you have these sort of moves, 3, 4, 5 standard deviation move, you're not getting a profit out of this trade. Like, unless you hold it for multiple cycles, you're going to have it for 3, 4, 5 cycles doing this sort of roll. And you need the stock to kind of chop around and accommodate your position. But ultimately, if you get a move back to 300 and this straddle is trading at, you know, $3,500 in the next couple weeks, I would take the money and run.
Yeah. Yeah. It's definitely an adjustment. You got to make an adjustment because right now you're just short stock, and if this move keeps ripping, you will not be in a better spot.
Yep.
Even if you move to this and it keeps ripping, you're at least going to be able to offset a couple $100 or more of that loss if it keeps going up. Call ratio spread in Oracle, 390, 400 in October. So just using the highest strikes for $5.
I mean, you're basically just selling the 400 call.
Mm-hmm.
If you really wanted to do the ratio, 370, 400 is probably where I'd go. 30 some odd cents, 380, 400 for $2 and change.
Yeah.
This one is really just, you know, you're buying this call spread for $1, $1.70.
But yeah, if you're willing to take the risk, it's on the table. Regarding the Oracle Butterfly, I have closed the long spread. What do you think about rolling this short in the money? It's just so far in the money, it's not going to matter.
Mm-hmm.
Even if you go to October, the 290s or wherever it is, they're not worth anything.
It's over.
Yeah.
Stinks.
Just lost my spot here. How many 0-day trades do you do in a day? One and done or rinse and repeat? One and done for me.
Mm-hmm.
I didn't do one today because of the announcement this morning. I'm not going to do one tomorrow because of the announcement. That can move markets. Right now, it's actually working out. But this morning, I think the expected move for today was like $25, and we had a 50-point move to the upside. So,
yeah.
Yeah.
New highs.
New highs. Someone asked, does the bond auction at 12, you think it's move the market? The S&Ps have a 10-point implied range for the rest of the day. So no. And TLT.
Nobody's scared about that.
Yeah, there's just not a lot of implied volatility here. So I would say the market is not telling us that we should be expecting anything. Yeah, so Oracle implied volatility hasn't come in yet because the move is so drastic.
Yes.
And they're pricing in future movements based on this massive move. How do you trade stocks like Circle that has high IV but low IVR? So yeah, I think you can do whatever you want in Circle. Because IV is so high, you could sell premium, you could stay defined risk. IV rank doesn't mean as much.
Yeah.
Especially if you're defined risk, because you're offsetting your Greek exposure anyways, for the most part. But yeah, Circle, the way we've been trading it is just with butterflies.
Butterflies, diagonals.
Mm-hmm. Still selling premium against long options we're buying, but keeping risk defined in this product that can and does move. Let's see. One more here. What do you think of NVO before earnings, end of October?
Stock's been clobbered. What do we got earnings? I don't think they're out yet.
No, I think it's earnings end of October. It looks like it's being priced into the October monthly. There's a boost of 47%.
Mm-hmm.
So we'll probably just wait for earnings.
It's a tough one here with 5-point wide strikes. I mean, there's not a ton of options, so to speak.
Last one. I've heard you say that even if IVR is low, but IV is high, like IBIT, you'll still sell premium. So do you not buy premium if IV is high in general? We'll still do diagonal spreads. whatever. I think if IV is high and you're buying options, like longer term options, your potential for multiplication of that option, if you're right, is lower because you're paying for higher IV up front versus like if you're buying options in SPY, IV's low. So if you get the move, those options can appreciate a lot more. But either way, if I'm buying naked options, it's in longer term cycles anyways, like close to leaps. So you're offsetting some of that decay factor, and it's more of a delta trade. But it'll be more expensive if IV is high compared to if it's low. But we're almost always just doing diagonal spreads, crab trades, where we're offsetting that cost with short-term premium. And that's it.
Cool.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick is at Trader Nicky Bat. Glenn is at Glenn Freibarger with an A. If you want to stay tuned, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade. Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when like you're in a pit back in the day that had like one or two market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm gonna buy your book, what did you mean?
If you're gonna buy the book, that means you're gonna buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We're back. It's still Wednesday, September 10th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, getting ready to turn through this middle of the week.
Yeah, we're doing it. New world's richest man, so things are changing.
Good for Larry Ellison. My goodness. Oracle today having a banner day. It's best day since 1992. Broadcom's also having a fairly good session. Our concern here on Futures Power Hour, thinking about this from more the bigger futures macro level here, how did the market respond to today's PPI report? This particular month, we're going to get PPI ahead of CPI, and it came out this morning. It was a little bit, well, it was weaker than anticipated. For maybe good reasons, for maybe bad reasons. Stocks up slightly, certainly seeing bonds hold on to their gains. We just had a 10-year auction hit at the top of the hour, which we'll discuss shortly. Silver's taking the baton. Crude oil's continuing to go up, Thomas, and the dollar's not exactly getting hit that hard, although the Aussie is outperforming. So the question we have to ask ourselves today is the inflation impulse fading? Have we greenlit ourselves for a 50 basis point cut next week? Josh, we can go to the slides. I don't know if that's going to be the case, Thomas, but certainly taking a look at what's expected for tomorrow's CPI data is worthwhile. The inflation nowcast from the Cleveland Fed is giving us 0.3% month over month. That's in line with the Bloomberg consensus forecast, Thomas, so I don't think that should shock anyone. And there still may be a bit more inflation being passed through down the pipeline. When it comes to tomorrow's data, September CPI tracking higher than August thus far. But I do want to take a look at that PPI components here today, because the largest driver of inflation at the factor gate is portfolio management. And portfolio management, as it pertains to what happens in these reports, is basically tethered to what's going on with the stock market. If you're looking at a stock market that's going up, portfolio management is going to be more expensive. In a month like April, where the stock market goes down, portfolio management gets cheaper. So removing all of that, final demand was minus 0.1%, but even ex food, ex energy, that was minus 0.1%. So I'll kick it to you, Thomas. Taking a look at what's going in bonds today, do you think we have a green light now for 50 basis points next week?
I mean, I'm not sure if I would call it a green light. I'd say it's, it increases the chances a little bit. I still think we get a 25. I don't see a 50. And, I don't think the market's reacting like we'll get a 50. I think, there's a few reasons the Fed would go with a 25. One is, signal confidence. Number two, inflation, a bigger cut for me would come from a huge miss on employment versus undershooting inflation. So I think this just gives them a little bit more room to maneuver with starting the 25. But I think it makes sense for the rate cut bets to maybe reflect a greater chance of a 50 just because of this easier PPI number. It is interesting, like you said, this is one of the few months where PPI comes before the CPI. So that bigger report, is still tomorrow, even though PPI is seen as somewhat of a leading indicator because it's in the part of the chain where, the producers are paying first before it gets to the consumers. But I still think the CPI is going to be a little bit more impactful, but this gives us some confidence that it's going to be a cool reading, or at least in line with expectations.
Well, the idea there is that if prices at the factory gate are falling, then it's going to be a little bit easier to see headline inflation. Maybe we're getting through the bump in which it's being passed on through consumers. For those that are taking a look at it, Klarna just opened, by the way, not futures related, but Klarna just opened, indicated at 52 to 53. So you might want to keep an eye on that if that's your particular cup of tea here today. It's not ours because Klarna is not a futures ticker, Thomas, and certainly not going to move the market the way an Oracle did. While stocks rallied on the PPI, we've given some of it back. Not all of it. S&P 500, 65.49. We have a NASDAQ that's still up by 0.2% or so, 23,927. We've been zigzagging since that report, Thomas. What do you make of this price action here today? Keeping an eye on that volatility reading where IVR has gone nowhere.
So, about 20 minutes ago, when we fell under in the NASDAQ, pre-market trading, the futures were trading on the NASDAQ around 23,940. When we fell under that about 20 minutes ago, I sold a call spread in NQ for 1 day out. So my view is, going back under these levels that we were trading pre-PPI is not good. I don't mean to say that as in I think we're going to have a sell-off. I just think it's going to be hard for us to regain that momentum in the afternoon session, and kind of betting that prices at least stay under this level until the end of tomorrow. But there's a few factors. I mean, we're going into the contract roll. We have triple witching on Friday. We still have the CPI print. We still have the 10-year note auction. We still have some uncertainty with the Fed meeting coming up, at least uncertainty into where it's going to maybe inject some not piling into risk before a big event risk.
Well, you mentioned the auction. The auction actually went pretty well today. Higher indirect bidders, better bid to cover ratio than what we saw last month. So perhaps the market finding a little bit of relief here that the bonds are behaving, and we're certainly going to go into that as those notes and bonds move up towards those session highs. So that's not so much of a problem here today, Thomas. And the bond market doesn't seem bothered by the move in oil either, which is up over 2%. Stocks maybe having a little bit of a drag here as the session goes on, but oil is such not a mover near 63 or 64. It's not really a problem one way or the other. I would point out to the improving of risk appetite in this market here today. You're starting to see crypto get a little bit more love. BTC up 2.4, Ethereum up 2.1% right now. Does this give you a little bit of a pause for your nascent trip into Ilya's camp of the world?
I mean, maybe a little bit. I mean, you could see crypto as one of maybe the leading indicators. It's rallied before equities have over the past, how many ever months, 3 or 4 months. We've seen these crypto rallies take place before the stock market rallies a little bit. So maybe a little bit of a pause there. I mean, the market's behaving pretty risk on today, which is why you're seeing Bitcoin do well. You're seeing the Australian dollar do well. Sector rotation wise, technology is back in the lead, up 2%. A lot, coming from Oracle, Broadcom, things like that. And then you have XLP, the staples, the biggest loser. You have the healthcare sector down. So this looks like a healthy risk-on rotation. My view for, not necessarily going short, but not being long is that, the momentum has not carried through even the first half of the day. So we've already given some back. That's just telling me that I think, it's going to stay kind of just in line price-wise right here for a little bit.
I like that you're referencing sector rotation, a fellow man of culture. I agree. There are some nice things there, right? XLP and XLV, more defensive names lagging a bit. While on the other hand, you're seeing tech, you're seeing utilities, you're seeing telecom move to the upside. But also discretionary is a bit weaker. Retail is a bit weaker here in today's session. Even financials are down a touch. But that doesn't really matter for the NASDAQ, right? If we're talking about the NASDAQ, we're really thinking about the semiconductors, the Oracles of the world. Oracle here, which deserves a look here on this show, now up 39.4% today. Closed yesterday at 241.50. Not too shabby. So you have these big names, Thomas, moving and breaking out to the upside. This is going to be the highest close ever for the technology ETF. If we wanted to take a look at this from a different view, though, this is perhaps one of the marks that says this isn't such a strong market in today's session, right? Equal weighted NASDAQ is off by 0.67%. It's really the big names that are driving this rally again. Mag 7 here up by 0.15 versus everything else, the broader market effectively down here. But for Oracle and but from some strength in some of the big ones, today would otherwise be a very modest day. And it feels like there's a good reason for that. Are you really going to deploy too much capital ahead of tomorrow's CPI report, Thomas? Or are you going to be very risk-defined and keep it light and keep your powder dry until, well, tomorrow morning? I think it's the latter.
Yeah, it's the latter for sure. You have to be a little bit hesitant ahead of these risk events because you don't know what the number is going to be. And, while PPI is encouraging, it doesn't, outright transfer. I haven't done any data on that myself, but you do see these numbers diverge just anecdotally sometimes. So it doesn't mean for sure that CPI is going to come in soft.
Where are we going in the S&P 500 right now? Well, I'm still leaning long MES. I still have the 6,700, 6,750 call spread on. It looks like we're finally getting our breakout move, Thomas. The range that we have here, we'll call a low near 63.64. We'll call our highs up near 65.23. It's not huge, but we're still looking at 150 points effectively as our range. So yeah, lob on 150 points to 65.23. You're talking about what we'll call it 66.73 price target. And so looking for some expansion of this market still here in what should be a seasonally scary month of September. I can't escape that, but there's no reason to overthink things, as Dylan has pointed out to me repeatedly. Why think? Why not just be long in a market with low vol and low volume and low volatility, as is so often the case? The best thing to do is simply just be long the market. So I'm not, I respect what you're doing on the short-term scalping here, right? Maybe the high for the day has been set. Maybe the high for tomorrow has been set as well. Certainly seems like a decent risk to reward, particularly if inflation comes in as scary as what the inflation trackers are suggesting. I look at a VIX that's below 15 though, right? And so if we do get a dip tomorrow and volatility goes up and then comes right back in, it's a dip that one would have to buy first blush, even if we still have a Fed meeting ahead of us next week.
Yeah. And I'm still long. This was just a tactical position, very short term. So, say we dip tomorrow. I would take off the short call spread and I'd look at getting long because ultimately I do think we keep this trend. Ultimately, I do think the S&P 500 ends higher than where we are today, probably by a substantial amount, actually. I mean, earnings have been good. The market's been reacting to good earnings. We just saw that with Oracle. And Oracle's numbers, they actually missed on some things, but there was bright spots in there that, investors are really focused on. So, things with this AI trade or anything related to it, when you get something that looks good, investors are jumping on it. And that doesn't happen when you're in a market that, isn't a bull market.
No, it's certainly not something that you see in that kind of situation, Thomas. So NASDAQ here, right, trading this to the upside. I really like the fact on a technical perspective. We have our 1 week moving average right now at 23,792. The high from August 28th was 23,803.75. So starting to see these trend indicators pull up, and once more a test of the 50 here at the start of the month, right into the August swing lows, provided us a bounce into a new relative local high. This is a market that has that bullish technical structure right now, despite what's happening in the news. It's an innocent until proven guilty kind of market right now, Mr. Westwater. And until that changes, right? If you were long going into today, you got a little drift after PPI and Oracle. You know what? Take some off ahead of CPI.
It's the prudent thing to do. I mean, I see this price action pretty much as traders are reading the market correctly and being prudent given what's ahead of us.
Given what's ahead of us. The one thing that is lagging is our Russell, which is back into negative territory here, although it's been lagging all session long. You can see how it did trade higher after PPI came back in. The high of the day was 24.01, back at 23.83 currently. The Russell to me is far more intriguing than the NASDAQ or the S&P, and that's not just because the IVR is higher here. we've discussed recently how, as you go back through time, the outperformance of small caps over large caps begins once you are 150 basis points removed from the peak of the Fed hike cycle. Now, we got 100 basis points of cuts already last year, 50 in September. We got another in November. We got another 25 in December. And then they paused. So if the Fed gives us 25 next week, given the Fed funds futures pricing right now, you're ultimately looking at another cut in October. Maybe they give us 50, though. Because if CPI is, in its final burst to the upside and PPI signaling that the price pressure increase has worked its way through the system, we got our one-time price hike, as Fed literature has indicated for years how this would evolve. Then the concern goes to labor and providing the support there. And the revisions, Thomas, we go from a run rate of 147,000 jobs a month from the April 24 through March 25 window, and that gets revised down to 71K. That's a totally different backdrop in which the Fed would be conducting policy if they had those numbers the entire time.
Right.
71K is a stagnant labor market in the US. It is a bad economy, period, end of story. And so with that in our pocket, last August, we got an 818,000 initial revision. It was ultimately 598,000 when the dust settled. But with that 818,000 jobs revision in their back pocket, plus some weaker data over the summer, the Fed came out with 50 basis points in September. I don't think we can still rule that out for next week. I'm starting to see calls from people who are in the race for Fed chair. If it's a Rick Ryder, if it's a David Zervos, they're saying that maybe we should go 75. So, yeah.
I mean, if you're in the race for the Fed chair, it makes sense to be putting out your opinion, of what you would do and be more dovish than expectations, because you want to communicate that to who's going to be picking you. So, I mean, if we get a 50, do you see that as bad for the market, I'm assuming? Maybe, maybe not.
I'll be honest, I am very conflicted over how I view 50 versus how I think the market views 50. I don't know if we're on the same page or we're not on the same page. I feel like you could spin it. I feel like if you want to get 50 there, the Fed could sell it as the market was a little bit weaker. We should have cut in July. And if we started in July, we'd be cutting here in September. So we're no longer late. And I think that's the ultimate thing that the Fed needs to avoid painting, the credibility picture here, is that they don't want the market to think that they're late. If they're behind the curve, if they're not promising enough cuts down the line, the market's going to have the whole, these guys don't get the picture. They haven't gotten the message yet. And so then it becomes less of a maintenance cut and more of a recession cut. Right.
I mean, this might be a good segue into talking about bond pricing. Do you think the bonds have risen enough to say that the Fed is starting to fall behind?
No, not yet.
Not yet.
Not yet. Although, one interpretation of a 10-year auction the week ahead of a Fed meeting where they could potentially go 50 and this dramatic surge in foreign demand, right? The indirects. One could surmise that foreigners think that the Fed is about to embark on a more aggressive rate cutting cycle. And so they might as well lock in the treasury yields at these levels while they can before they drop further.
Yeah, and I mean, after this auction, we continue to move a bit higher here. I mean, moving into session highs for ZN, and we are bringing that April level into focus now.
Yeah, before we get off there, Thomas, real quick, just in terms of what's going on here in stocks, I'm thinking about an RTY position. I'm looking for pricing. I'm looking at 51 days. I'm not loving what I'm seeing at the 2,500, 2,550 call spread. It's that kind of pop that I like, but I'm not seeing much liquidity or open interest in these contracts. So this may be something that I have to do closer to 37 days to get what I'm looking for here. And ultimately there's a little, but it's a 4-to-1 then. And so looking for another 100 points, you're effectively looking for another 4% upside through October 17th. I'm not loving the setup here. So I'm just going to stick with what I've got for now, which is the MES. Okay, that was put on at 64.35. So that's continuing to run. And then the ES call spread here in the ESZ5 contract which puts us in at 20 days, 6,700, 6,750. I'm being a little greedy here because it should be time to roll, Thomas. But with a little bit more upside, I can get out of this thing at break even. And it'll just have been wasted, buying power effectively. That's been frozen up for the past few weeks. Depending upon how we act this afternoon, if we get back to 65.50, I'm going to take this off. I should be able to get out at break even and then just re-roll it out to, a future date sitting around 40, 50 days to expiration.
Yeah, I think that makes sense. Like I said, tomorrow, day after, I'm going to be looking at taking a bit more of a long-term long position. And when I say long-term, I mean probably 45 to 60 days out.
Right. More than your little scalping window that you and Mike Butler have been tempting me. You guys feel like you guys are snake charmers. You're like, ooh, look at what we're doing here.
Right.
Well, let's look at what we're doing over here, though, with notes and bonds. So we did have that 10-year auction today. The bid to cover ratio was 2.56. In August, it was 2.35. More demand. Good news. Indirect bidders up to 71.2% from 64.2 in August. Foreigners coming back to the table. That's exactly what you want to see here. This is a good auction. Period. End of story. B+, A-. Could have it been better? Yeah, of course. Could have been worse? For sure. But this is, I think, exactly what the market wants. So we get our auction. We have a decline in volatility. The market's pushing up. We're holding near session highs, 113 and 19 ticks in ZN. In ZB, 117 and 23 ticks. We had our high here, Thomas, in April. I'm going to pull up the continuous contract. And we talk about a little area where the market tried to pull back into those closing levels. Former resistance turned support kind of situation, perhaps. In any event, we get our bounce there, and we're continuing to rally, which I find fascinating because if we go back to the continuous and we look at the weekly chart back for, say, to the highs that we had during the pandemic, this is really enticing to think about being a longer-term bond bull.
Yeah.
Purely from a technical view. This is a significant long-term break of the high that you have going back to where we were in March of 2020, the swing highs that we had around Liberation Day this year. Those are two seismic economic events, right? So they make sense as points with which we would use as references for our trend. And if it's ZN or if it's ZB, they're both starting to edge outside of those longer term downtrends, Thomas. And I think that's such an important fact right now that we can't dismiss. If someone's thinking about fading this bond or note move to the upside, the winds may have shifted in a very meaningful way now.
Yeah, I mean, it's compelling when you think we'll have a more dovish Fed board next year. And the thing with if they cut rates at an accelerated pace from what's being predicted right now, there's not an immediate correction mechanism for cutting rates too fast and the administration having to be reined in by something. So if you cut rates too fast, you're not going to really be told by the economy itself. You might by the market a little bit, but you won't be told by the economy that it's a mistake for 12 to 18 months at least, because that's how long it takes for monetary policy to kind of do its cycle through the economy. So we could be going into an environment where even if it's the wrong move, policy-wise, compared to the traditional dogma of, what the Fed board is now, we could be, on a course for a year to 2 years before that's seen as having to maybe increase rates again.
Lower rates could stick around for a while. And then it begs the question, if rates are going to be pinned lower for a long time, do you have to go through the motions of pricing in higher inflation expectations, higher growth expectations? What does that mean for those premiums at the long end of the curve? Does it short circuit a bond rally, right? In theory, if rates are pushed low enough for long enough, then it's going to resuscitate growth. That's the theory. So then if the growth comes back with lower rates, then you have to start to price in an additional growth premium at the longer end of the curve. ZN, ZB, they're going to wear it more than ZT or ZF. And that the PPI today shows that growth is not necessarily going anywhere fast, or at least inflation is going anywhere fast, I should say. We did have an update to the Atlanta Fed GDP Now growth tracker for what it's worth, up from 3% to 3.1. So again, going back to stocks here, we're going to get rate cuts while the economy's growing in a 3% real GDP clip, and rates are heading lower, and corporate earnings are up. That's a tough task for me to get on the same page with, Thomas.
Yeah. And I'll read a headline from Bloomberg here, paraphrasing, but a number of large positions have emerged in SOFR options that look to benefit from an outsized cut of 50 basis points at next week's meeting, even though such a move is seen as unlikely right now.
Higher in poly market than it's currently being implied by the rates market here. Although again, rates market is telling us that the odds of additional cuts through the end of the year are likely. Definitely 2, probably 3. If the December meeting was today, we'd be looking at our 3rd cut for 2025.
Yeah.
But if the Fed is late, and yesterday we asked the question on the show, the title of the episode was, "Is the Fed late?"
So in April,
make an argument.
In April, the market was pricing in 100 basis points of cuts by the end of the year. Right now we're almost at 70, back to 70, and that's the highest since April. So it makes sense that we're seeing, this bond market move back up with these rate cut bets. So now, I mean, the path that we're on, you assume it continues. Assume that CPI is in line or under. Assume that the Fed, does its cut and comes out with a dovish statement. These rate cut bets continue to increase. You get bond markets continuing to go up. So I think, that's going to be conducive for the bull market to continue because, like you said, corporate profits have expanded. I mean, the labor market, while showing signs of trouble, it's not terrible.
No.
So, I mean, this market, if we're looking at it right now, it looks pretty locked in for a bullish view.
It does. And the way that the bonds have held on, both bonds and notes, in fact, you could see here, this is the PPI report this morning. So we're trading closer to, we'll call it, 116.29 ticks. And we're now up nearly a full point. In fact, we were up a full point earlier today, closer to the start of the show. When we head over to ZN, very similar type of price action. We get the rally on PPI. We get an additional kick up here on the 10-year auction. So price action says everything, Thomas. If it was a bad auction, it would have been reflected in the price action. But this is kind of what the market's looking for right now. So I believe you and I last week, we moved away from being directionally neutral in bonds and notes and started looking at more upside exposure. I've been trading notes. I think you've been in ZB. Are you still riding the rails to the upside right now during this breakout?
I got out of that ZB position last week because we had that 2 days where I was already at 80% max profit on the call spread.
Sure.
So I had to take it off, just a trade that worked out quicker than I expected. I was going to roll it, decided not to. Looking back, I should have done that, but I am going to get back in here soon because my view is definitely that bonds and notes continue to move higher.
Kind of reminds me of gold in recent days, which we're going to talk about momentarily here. But do you notice how once we get above our 1 week on September 3rd, we stick to it. We have not necessarily seen this market lose momentum in the short term. So a strong bond market right now, for sure. A little bit higher here in notes. We get through 113 and 20 ticks, Thomas. That puts us in bullish engulfing bar territory, where we have cleared yesterday's high on a closing basis after being below its low. And that is usually a strong sign for directional momentum. If you're like our friend Josh, where are these arrows going? Silver takes the baton, Thomas. We'll have to fix that on the back end. Silver takes the baton here, Thomas, in today's session, which outperforming its golden counterpart, up 0.66% compared to a 0.09% rally for gold. Yesterday was a setback, but I saw you writing earlier today in our little morning 5 futures report, which I'd encourage people to read. If you head to the News and Insights blog, and you know what, Thomas, we're just going to show people this now, and we're going to show them it live. Every morning, you and I kick around some charts, some products in the futures market that we think are interesting. And then at the bottom of every little commentary section, we include some trade ideas or ways that one would set up potential options trades in the futures market if they were thinking about your typical tasty 45 in, 21 out, What does a short iron condor look like right now at current market pricing, or a short strangle, or short put vertical? And we do this for, stocks, bonds, metals, energy, and FX. We have to do more for ag, which I know you're a big fan of. But my point is, in this morning's note, you said something specific about the price action in silver. How are you interpreting this chop up here?
I think this is a bull flag. I mean, you could see it, you get the pull, you get the flag. It's a pretty easy pattern to read. And we are trying to maintain above this 5-day EMA right now. So you get this consolidation after a big up move. And generally what you see is once you break resistance, you get another leg higher or a continuation of the preceding rally. So right here, you're in the consolidation or flag phase, and what you would expect to see is, it come out to the top side and, extend the rally. The flag is usually, the consolidation is from profit taking after a big move, and then you get the next leg of traders or the traders that were already in re-entering the trade. And, if your view is that bonds continue to go higher, if your view is that the Fed is going to cut, you're expecting silver, gold to do its thing and continue to move higher.
I couldn't agree more as someone who's sitting long silver. There is, of course, the potential that it's a double top if you look at something like a 4-hour time frame. But you don't call a double top until you break support. You could see the high here on the 3rd and then again on the 8th. So if we are talking about this being a double top, it means you need to see it move below 41, which yesterday we got close to. But then what do we see here, Mr. Westwater? Well, this is what makes this 41 level so important and why I don't think people should get too bared up until we get below it. Let's just look at these pin bars. I'm going to actually get rid of that. And we'll go one of you here. We're going to put this right at 41 to make a point. So 41. Okay. So we have this bullish engulfing bar key reversal after a pullback into 41. We have this pin bar here after going into 41. How about another bullish engulfing bar that forms after going to encroach at 41? If that doesn't convince you, Thomas, I'm going to give you a fourth bullish engulfing bar key reversal that's occurring on approach to 41. This looks like a really, really, really technically important part of support for the market right now. Below 41, the dream's over in the short term. But as long as 41 holds, and this market is showing us, as you say, the bull flag breakout, people take some profits, other people who missed the initial move start to buy in, you get your chop, 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 and then your next leg up. I think that we should be staying on the side of next leg up unless 41 breaks.
Yeah, I agree. I think that's a good way to play it. And I think, maybe the CPI tomorrow gives us the directionality. Maybe it doesn't. But I think somewhere around next week's Fed meeting, we have picked a direction.
What do you make of the gold market up here stalling a little bit? I'm remiss to say that I haven't been a part of the last, again, still about $90 of this move, having taken profit. Do you see yesterday as a period of short-term exhaustion, or as we've done since August 22nd, we've closed every session at that 1-week moving average or higher. And sure enough, today we come back into it as support and we bounce. Do we trade around that until the rally runs out of steam?
Yeah, I mean, I'm kind of trading around that. I have a long call spread in gold I put on today. 48 days out, 3690, 3700. So pretty, right near the money. So I'm going to be playing it for an extension higher. I think, you've had the 2 days where you came off the high, you came off the record high. You get a little bit of selling, and this probably is profit taking up here, the stalling. But this looks like a really strong, directional move to me that I think is going to, I think it's not done yet. So, the call spread makes sense for me. Expect volatility to stay the same or expand on another up move. And, I'm not sure what the trigger will be, but I think technically holding on to that 5-day EMA that you got on the chart there, it's a pretty strong move. We've tested it multiple times. We've held it. it shows me that this is a high confidence market, not ready for any big profit taking, pullback here. So I think we still have room to run.
We were looking at different Fibonacci extensions the other day. And just to redraw these on the chart, if we go to the April 7th low, back up to the high that you have on April 22nd and the swing low on May 15th. That does give a potential 37.47 target to the upside right now as part of this particular triangle breakout or impulse. If you wanted to add one more line of support here to just substantiate this more or less, you can see how that's your triangle. This is a fake break of the triangle. So with this triangle pattern playing out, all right, maybe you can make an argument for the last swing prior to the breakout, which I know some people like to do. Instead, you'd have a 38.94 target. One day at a time, right? Let's not reach for the moon just yet. Although as appealing that would be to see gold at nearly $3,900 an ounce, let's not get over our britches, or let's not get over our skis, I should say. More upside looks possible. I don't think there's a reason to call a top here. The decline in gold volatility isn't the most reassuring thing in the world, because when we started breaking out, gold vol was going up and it's been slowly receding the past few sessions. Same thing for silver prices, 9.8 IVR. If tomorrow produces that break of 41, if we get a close below our 5-day EMA on a further collapse in volume, we may be at that point where we have to say these have reached a short-term exhaustion, because it's been a heck of a run.
It has been a run for sure.
It doesn't mean the dream's done, though.
It doesn't mean that, and I'm hoping it's not.
Let's keep this train moving because we only have about 15 minutes left today. Where are these arrows? Oil up, nat gas down. Okay, so oil, Thomas, this actually is working out a little bit nicer for me. My particular position is that short iron condor, 55, 57, 70, 72. The goal, the dream for oil the last few months has been able to put on a short iron condor trade, something directionally neutral, right when we're near 64. And we're back near 64. This is basically as good as it gets. So yes, it's a 19.7 IVR. And that may not be so appealing to you because it's too low. But at 36 DTE, right, taking the strikes that straddle the 1 standard deviation move, the same position I have on now is still going to yield, well, not so much anymore. It's going to yield something in the neighborhood of a 4-to-1. It's a little bit worse than that as the market's gone towards move through its theta decay cycle. Not as much juice to squeeze out of it, but it's still viable. 66% pop. Oil just got a little bit of a bounce because of these headlines out of Ukraine overnight and Poland. Obviously what's been going on with Israel and their most recent attack against Qatar, the Hamas meeting yesterday in Doha. But the geopolitic risk, if it was really here, we would see it in the volatility. And I don't think we're seeing all that much. So directionally neutral is the way for me. It remains the way for me. If I didn't have it on today, I'd put it right back on today. This is a market that just wants a lot of chop, and the downside seems like it's going to be a little bit easier to come by than the upside. Do you have any strong feelings on oil right now? I know you're someone who likes to pay close attention to inventory data.
Yeah, I mean, I'm still in my iron condor. It's between 60 and 67.5. So this is the sweet spot that I want to be at right here. I'm at about almost 50% of max profit on the trade. I'll let it run for a little bit more, more days, let some premium come out of here. But we did get inventory data this morning from the EIA. And commercial crude oil inventories, excluding the SPR, increased by 3.9 million barrels from the previous week. That puts inventories at 3% below the 5-year average for this time of year. You also had gasoline inventories increase 1.5 million barrels. So that puts them at the 5-year average. And you had distillate fuel inventories increased by 4.7 million. Now they're only 9% below the 5-year average. So a really bearish report for the EIA in these numbers. All these products increased. Total commercial petroleum inventories increased by 15.4 million barrels. So pretty substantial. And why isn't oil going down? It's because of what you said, NATO, Article 4, Poland. They had some drones fly over their space. One drone actually made it pretty far into Poland, which kind of shows that maybe this was intentional. And Article 4, you invoke it. Any member state can invoke it. One member state can invoke it anytime they think the territorial integrity of their nation is compromised in any way. So what does that mean effectively? It means, it's not like a declaration of war or anything. It means all the NATO members get together, they talk about it, come up with some type of response. So, this is playing out, and until we get a resolution on what's going to come out of this, you're going to get some of this geopolitical premium staying in the market. And like you mentioned, Israel, Qatar, that's a U.S. ally. It's not a NATO ally, but they're a pretty substantial ally in the Middle East. And in fact, it's where CENTCOM, Central Command, is located for the military. So all the military operations in the Middle East are directed and commanded out of there. So we have a good relationship with them. The U.S. already saying, Israel did this completely on its own, trying to insulate us a little bit. Trump saying he had a talk with Netanyahu. It won't happen again. So, it doesn't look like anything's going to actually come out of this, but it still marks, what could be seen as an escalation and breaking down of, these norms that have been respected for the past recent history.
Yeah, you mentioned Article 4, and I saw the market, people on Twitter bugging out about it last night. Turkey's invoked Article 4 5 times since 2003 related to Syria. Yeah. 8 different countries in NATO invoked it after Russia's invasion of Ukraine in 2022. Poland has invoked it itself when Russia initially invaded Crimea over a decade ago. So it can be a stepping stone to Article 5, but Article 5, which is the Mutual Defense Pact, has only been triggered once, and that was by the United States after 9/11. So, Thomas, your inventory data there is pretty compelling. You're seeing builds in supply of product, less demand, and oil is still up on a day like this.
Yeah.
Go ahead.
It comports with, weakening labor market, but also, realize we are now past the summer driving demand season where people do stop driving less. You're not taking those trips. Jet fuel demand also decreases. So, there is some seasonality to this as well.
Right. Everyone's back in school. So the vacation stopped. Natural gas yesterday, I was looking to sell a put spread, and thank goodness that did not get filled. Okay. So we're at 3.032, Thomas. What's the plan here? Am I wise in continuing to look at the 2.826 short put spread, or is this just not appealing enough? Do I need to be pulling in my strikes a little bit more?
I think that's a fine trade. I'm still in my put spread that I've been in. It's not the best position now. After a while, I think I've had this on for 3 weeks, but I have the short at 3, so we're trading about 3 cents above it. I'm going to keep this on. It's trading pretty much unchanged from where I put it on, so I've been tied up in this position that's not really given much back to me. For quite a while now. I would have been better off going a micro contract long a few weeks ago. Didn't do that, but look, the weather, it's churned a bit more supportive. If you look at weather models, if you look at something easy to digest visually, like the 8 to 14 day outlook from the NOAA, that has, showing some chances for above average temperatures across that line from pretty much Chicago eastward that we draw on those maps. Europe is in a precarious spot for inventories right now. They need to really start bulking up their inventories over the next couple months before this winter. I'm fairly confident that we stay above 3. So you putting on a trade there at 2.8, I think that would be a good play here.
Yeah, it seems like my little slice of the country, or I guess the Acela corridor here from Boston down to DC, is going to have normal weather. And that's mid 70s. So you're talking about a lot of the country seeing potentially temperatures in the 80s, high 80s. over the next 2 weeks, this could drive a lot of demand for natural gas. And we've had a relatively cooler run here over the past month. So outside this little I would say 75% of the country is about to see higher temperatures than normal. That could keep those ACs humming through the end of September.
Yeah, and psychologically, it's been a very cool start to September and late August. So a lot of people saying, hey, we haven't used the AC in a few weeks. It's okay to turn it on now for the next couple weeks before winter comes, and we won't need it at all. At least that's how I'm thinking about it.
So I'm going to try to put this back on again, Thomas. Today, we're going to do it a little bit differently. Yesterday was a 2628 short put spread, keeping into account that we have the lows carved out in August and then this pin bar here on September 2nd. Monthly low is 2.869. So trading around that, right? We were looking at 283 as a possibility. I don't like selling the short put spread at 3 if we're sitting at 3 right now. So giving it a little bit of room to work with. And if we break below that September 2nd low, getting out, it's a little bit worse than a 3-to-1, but not by much. It's kind of right there. So at 58% pop, I don't love this, but I do want to have something on in natural gas now that it's out of the doghouse. So ask and you shall receive. Never like when a trade gets filled that quickly. Who is so eager to fill it for me? Why are they getting it off of their books?
Yeah.
Okay, one arrow got to the right place. The dollar may be turning a corner. It's the same question we asked yesterday, and we'll ask it again here today. Because, the dollar is not exactly taking it that hard. All things considered, after the PPI report, yields are moving lower. The euro is not really doing anything. I would point out that the euro has an ECB rate decision tomorrow morning, an ECB rate decision in which they are expected to keep rates on hold. But what will they signal moving forward? That's the more important story for the euro. And the markets are getting around to the idea that they could be looking at rate cuts too. Because if the US has to cut rates, so does the rest of the world probably.
Right.
We cough, everyone else gets sick.
Mm-hmm.
So the euro, the yen, these are the two largest components of the dollar index. That's about 70%. You want to sprinkle in the British pound there. We're now talking about like 83% of DXY. These haven't done anything today that's meaningful. I know the Aussie's on its island on its own, right? The Canadian dollar is still just a little weak duckling. Can't rally under any circumstances, still has a high IVR. The dollar doesn't look terrible on the other side of this PPI report, and it's still kind of holding above 97.5, which is a line in the sand we've had drawn for many weeks now.
Yeah, I mean, the currencies I'm in, I have a short call spread on the Canadian dollar. I think I have you to thank for that. It's a trade that's working out so far. Looking at the charts, I expect it to continue working out. The euro is kind of in a tricky spot, you know? It's kind of in a weird spot. If I had to do something, I think I would short it. If I had to, but I don't think I'm going to.
So I have euro on, I have Canadian dollar on. I'm comfortable being short these currencies in the futures market against the US dollar. The euro, though, this is my little issue here. I'm at 23 DTE. Do I take it off before the ECB meeting tomorrow?
Right.
I don't think so. Not yet. I think that there's still a chance that the ECB is a lot less optimistic than the market's giving them credit for.
But less optimistic in as they will not get rate cuts?
No, as in the ECB is going to paint a more dour economic picture than the market's currently pricing. So you'll be looking at more rate cuts out of Europe. France is facing a financial issue again.
And political and financial, both intertwined.
Right. Well, I mean, can't have political liberty without economic liberty, as some say. And to that point, France is the second largest economy in Europe. So what does it say that French yields are above their Italian and Spanish and Greek counterparts?
Yeah. Do you think Lagarde, she's going to comment on that, right? Or she'll get a question on France? She
probably will. Her being a French woman herself and having worked in the government. Yeah. I mean, this is not like Fed Chair Powell being asked to talk about U.S. politics or U.S. fiscal policy in the sense that he's never been on that side of the equation. Lagarde has been both fiscal and monetary, and she's been a high level person in the French government. So what are the ECB's plans to arrest the rise in long and European yields is not something that we can dismiss, and it should be on the radar.
Right, and by nature, the ECB has to comment on fiscal policy in Europe a little bit more, just because it's not unified like it is in the United States.
Exactly. So short euro, short Canadian dollar, the yen is something I'm continuing to look at. Although what really bothers me about this market, the whole positioning really worked out well for some time there in riding it down from when it was north of 70. But the positioning has been exhausted. We're no longer looking at Z-scores north of 3. They're sitting closer to 1. And we haven't seen much more drift. Just people are leaving the market. And I don't know, it doesn't feel like that covering is taking place. So I'm going to look elsewhere. If we go into a risk-off cycle because the stock market is selling down, what's the other side of the stock market trade, Thomas? Short yen, long tech. Isn't that what freaked us out last August with the unwind of the carry trade? Funding currency, buying risky assets. So if the NASDAQ starts to go, I don't necessarily want to be short 6J. I got enough eggs in that basket right now. The dollar can do well elsewhere. Versus the yen, now the positioning has been thinned out. I think it's a tougher sell. Calendar, tomorrow. Let's go to the ECB real quick, and then Thomas, you get the final word here. 8:15 a.m. Eastern tomorrow is that ECB meeting. You're going to be double tapped by the CPI report at 8:30 a.m. Eastern time. So there's a lot going on. If you're not someone who typically trades before the U.S. cash equity open, if you have any exposure in the currency world, if you have exposure in rates, bonds, metals, stocks, everything basically except for natural gas, you're probably going to see some impact tomorrow morning to your position. So keep that in mind. If you have to roll, if tomorrow's your roll day, maybe roll today, right? Buy yourself that duration. Don't get smacked with a market thanks to a shortening decay window. That's all there is to it, though. 8:45 Eastern, Lagarde speaks, and we'll hear about French bonds. Thomas, we have 30 seconds here. Give us the final word before I interrupted you.
Final word, I would say just be watching the CPI report tomorrow. Be on your desk when it happens. Watch the initial reaction and try to get ahead of the market when it does.
Thomas, I'll be back later today for overtime, 4 Eastern, 3 Central with Radigan and Spivak. But before we get there, we're going to take a quick break here. Dylan is back, of course, because it's Wednesday. Wednesday means it's time for Truth or Skepticism. Sawsoff and Radigan here on Tasty Live. Up next. See you there.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
I do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
I'm Tom Sosnoff. It's Truth or Skepticism. I'm here with Dylan Radigan. Mr. Radigan, how art thou?
I don't believe I've ever been better. I believe this is the best I've ever been. It's very nice to see you. These Wednesdays stack up. I know that's something we've said before, but around here, I feel like every day is Wednesday. But nice to see you. How you doing?
This is the best I've ever been is a very powerful statement.
Yeah, yeah. Well, you ask questions, I give answers. This is how it works. You know, I feel like the present moment is always the best moment, and so
I am truly honored by that. Just so you know.
Yeah, well,
I'm both humbled and honored. It's beautiful.
As in when I'm a 95-year-old, I'll be like, all those Wednesdays I spent with Tom Sosnoff.
I like it. Yeah. All right, I'm all in.
Okay. Excuse me. Bless me.
Because we're tired. How do you want to start off today?
Well, here's how I'd like to start it off. There's some research that's been published recently. And in that research, it portrays the 12th grade performance of the student body of the United States of America in both mathematics and reading as near or at all-time lows in terms of competence and whatever the standardized testing is that measures mathematics and reading. Furthermore, we're in supernova of artificial intelligence deployment and utilization, which only further reduces the need and appetite for reading and math. There was an MIT study that actually measured the brain activity of those who use artificial intelligence at any sort of high percentage of their time. And it showed notable reductions in brain activity. And brings up two topics. One, are you concerned by this evidence of diminishing math and reading? Two, do you think artificial intelligence only accelerates the decline in math and reading? Three, do you believe that the decline in math and reading is related to the stupidity of American politics and media in general? And four, what do we do about it?
There are a lot of questions there.
Well, only four actually, but.
Okay. Well, we're going to save what do we do about it, because I have some thoughts about that, but let's save that for later in the discussion.
Okay.
And if we go back to number 3 and we talk about the state of education in America.
As it relates to politics and media, is it a correlation?
Yeah.
Number 3.
There is no question. I mean, I think you start at the top and you have to just kind of, there's a certain, there needs to be a certain appreciation for how important education is. I mean, clearly other countries are doing a much better job at education than us. Obviously China being one, but I would say so even from my own experiences, Russia, India, just all, we talk about all the major, the big players out there. I feel like, hey, I just got back from doing a week-long, bunch of seminars in Mexico, and the level of undergrads at Mexican universities compared to U.S. universities, it's scary.
Meaning you felt that the anecdotal experience in Mexico was vastly, so that there was a higher level of intellect or education, whatever you want to call it.
There was a much deeper appreciation for going to a university, and there was a much deeper appreciation for the challenges at those universities. And I've never seen anything like it at a U.S. university that I've spoken at. I've seen graduate programs where there's a high level of interest, but on an undergraduate level, I've never seen anything like what I saw in Guadalajara 2 weeks ago. Amazing. But anyway, that's neither here nor there. That's an important
I think it's more here than there.
Yeah, it is. I shouldn't have said that.
I think it's a significant anecdote.
Yeah, I agree. And I think it starts with, listen, I don't feel like doing a whole segment on bashing Trump and his administration, whatever, because I'm tired of it. But it is clear that education does not play a big role with this administration. It's not important to them. And you don't have to look any further than the fact that the Department of Education is run by Linda McMahon. I mean, that is a statement about the U.S. that is probably greater than any other. You can't make a more powerful statement about the amount of concern, the decline in just intellectual firepower, when at the top, you basically put a complete idiot there that I don't even know where to start. Okay, but I think that's...
Yeah, okay, go ahead, sorry.
I think that's just a statement on the, because your question was on the overall, where are we? I do think...
Also, I was also just saying that, do you think that the low performance in 12th grade is reflected in the nature of our national politics and national media?
I think that's the scary thing that's associated with national politics. I think when you bear down, when you really kind of open up education's country and you look at the educators, you look who's doing the education, I think that's a very impressive group. Like, I think that, probably most underpaid and most underappreciated and most valuable is the teams of do education, like from kindergarten all the way through 12th grade. It's really it's a life it's a love of the game. It's a passion for education. And I'm more impressed with that profession than almost anything else in the U.S. Now, that said, I don't think that as parents, idea of how important this is. I know that growing up, for me, especially my dad was definitely what you would consider an intellectual. I mean, he was a college, he was a Yale Law School professor. He read, a book a night, that kind of guy, and incredibly smart, a great writer. And to him, the idea that you could spend 2 minutes in front of a television or something like that it just blew him away. He didn't get any of it. And I think that was a message that, we definitely don't give that message to our kids today. I didn't. And I don't think that many parents do. And the level of importance and how important, how important college is, both from a networking side, from a learning side, and how we should be so much more appreciative of it than we really are. So yeah, I think to your second question, I think education in most places around the world is on the rise, and in the US, it's on the decline.
Do you believe artificial intelligence poses a liability in the sense that it can serve as an accelerant to diminished brain activity?
So that brings up a really interesting question, because I think there are two different things. Diminished brain activity, and because you've heard me talk about this a million times, I believe that the relationship or the correlation between success and wealth creation and brain processing speed, which comes through, activity, it's a law of large numbers, is the most critical thing it's one of the most critical things that leads to success, and however you want to define success. Brain processing speed is the mechanism for creating an outlier in life and whatever. And so I am deeply concerned that there are not enough opportunities for young people and even older people to learn and to train their brains to process things faster. One of the reasons I love trading, Dylan, is because trading is one of the few mechanisms that will increase will increase how fast you process things, how fast your brain works. And we've talked about that like hundreds, if not probably thousands.
But do you think artificial intelligence reduces average brain processing speed?
So that's the really interesting thing. Personally, I don't. Personally, I think it helps to increase it, because I don't waste a lot of time on things that I don't waste a lot of time now looking up things that I would have to research that would take a lot of time. I can get from point A to point B faster, and therefore I can accomplish more stuff. So if used correctly or used in a positive way, artificial intelligence can be very powerful. Okay. I think one of the issues that I think you're going for, that I think we have as a society, is that I think kids use it a little differently. And I think that it is a mechanism, and I would do the same thing if I was in high school or college, unless I was kind of trained differently. But I think that, using AI as a crutch, using AI to help you get done with stuff. Really,
can I just tell one another anecdote, not to interrupt you, but I have two college-age nephews, one 20 and the other 21, who I have a very close sort of uncle relationship with, so I get probably more information than their fathers do and whatever, because an uncle is never going to yell at you. I'll say this: one was a freshman at a university in Colorado. I won't name because we don't want to disparage any individual institution. But it was not UC Boulder, for those playing along at home, just in case you're trying to jump to that conclusion. And he was a freshman. The first year GPT came out, whatever that was, 2 years ago, 3 years ago, like the version 1.0 kind of a thing. He explained to me that the minute GPT came out, everybody in the dormitory stopped writing their papers. Immediately, whatever. Tell me the history of the Civil War. What's the contrast in the relationship between the European settlers and the Native Americans? Whatever, any assignment, right? Sure. They basically said the entire dormitory stopped doing research and writing papers immediately. The second one is at MIT. He's a smarty pants. He started as like a physics major or something. So he's a little older, so I think he was pre-GPT his first year. He did a sort of standard like MIT kind of computer science, physics, math.
Sure.
And then AI came out, and he and every other student at MIT apparently all switched their major to some version of artificial intelligence, whatever that even means, on the belief that graduating from MIT with a degree in artificial intelligence basically guarantees you some kind of a job doing something because of the combination of the MIT name with AI. It's like a layup for a job.
Okay.
So I see it through two lenses. One, that it narrows the scope of education for, let's say, the most elite or the most ambitious. MIT being a filter for that type of a character. Now they all want to be AI majors. No one's doing rocket science. No one's doing teleportation. No one's doing, other, physics or chemistry or whatever. Everybody's an AI major. And then on the other hand, in the more traditional sort of middle of the road university culture, all the dorms are using. I guess that's my way of saying I do think that it reduces. I would like to think that it takes away menial tasks to allow the brain to be used for more complex processing. That's just like I want a creative renaissance from all this, and more events and more movie making and more interesting car making and more interesting architecture. All the physical sciences and physical realities, I think, have the potential to be much better, right? Anyway, I'm interested how you sort of reconcile, because obviously none of us know, but how do you resolve the issue of AI in favor of, or to decline the obvious conjecture that it reduces brain processing speed?
First of all, I didn't know they had a teleportation degree at MIT, but
they don't. I've been advocating. I told Arthur, I said, listen, if you're going to waste America's money going to MIT, at least do something useful for your uncle.
Okay, got it.
But he said he's like, it's impossible, blah, blah, blah. Okay. I'm like, look, they already do it with the electrons.
When I was going to, I don't remember if it was the end of high school or just started college, they came out with like cliff notes, whenever, or at least we figured it out at some point.
Yeah.
And so we didn't have to read any more books.
Because you could get the cliff notes for Catcher in the Rye.
Exactly. Unfortunately, I'd already read Catcher in the Rye, so I had to go to the books I hadn't read. But I think it's fairly, that makes sense to me that, outside of MIT, that in a dorm room, you use ChatGPT to help with your papers. I mean, I get that.
They write to write the papers.
Yeah, right. It doesn't surprise me. I mean, listen, if I get one more ChatGPT email, I'm gonna throw up.
There was not to hijack this thing, but there was a great thing that Vecchio put up yesterday on Overtime, where he was debating. I think it was an Atlantic article or something, where basically it was saying that all of the resumes and all the job applications in America are all being submitted. They're all being drafted by AI and submitted, and HR is using AI to review. HR is using AI to review them. So you have robots submitting and robots reviewing.
Yeah.
And nothing is happening because no one trusts any of it.
100%. I'm actually, working on some projects in that regard, and it's 100%. It's all AI, and it's all in the bottom line is that it all offsets each other, and the results are incredibly mediocre. But
incredibly mediocre.
It brings up a really interesting topic it brings us down a path that you went down a couple weeks ago when you talked about, what's going to happen, what is what is the impact of AI going to be on education? And I think the crazy answer to this is you were right a couple of weeks ago when you talked about how this is going to drive a whole resurgence, almost a renaissance of arts and creativity. And the people that are going to become the most valuable are the ones that can actually create something on their own. That can do
physical thing, whether you're making a building, whether you're designing a bicycle, whether you're making an like filmmaking, fashion and design, furniture, anything that a robot can't make. And physical events, live events, I think are going to be incredibly popular in the next wave of this culture.
I could not agree with you more. And I think that you're already starting to see that.
I agree.
People have the demand for, like the live events that we do, the demand for everything that we're creating is just, it's
at an all-time high, and it's only going to be more.
100%. It's only going to be more because people can see through, it's not that easy at first, but pretty quickly thereafter, you can see through it. I mean, if you've ever listened to an AI DJ or an AI talk, and you can figure it out, or you've read an AI resume, it's not that hard to get through, to figure out really quickly what's going on here. So So
anyway, so let's sort of, let's just to return to the original topic, which is we are seeing, forget AI for a second, a decline in the average mathematical and math and reading of the average American student. And that is reflected in anecdotes, it's reflected in test scores, it's reflected in averages, it's reflected in comparisons of American students and American students' test scores to other countries, Mexico, China, blah, blah, blah. What do we do about it? I'm not to jump to the conclusion too soon in the podcast, but I think we're kind of there.
So my answer is going to be a little bit different than I think the way most people would think. The obvious first response that you're going to hear from 98% of people is going to be create a regulatory structure and create an implied regulatory structure around AI to protect kind of the integrity of whatever the field is, whatever the sector is. And I think that's the easy answer, and that's what everybody talks about as a common answer. I think it's the wrong answer because I don't think that you can never box in technology. That's what you saw the attempt with crypto. That's what you've seen with everything else over the years. It is absolutely impossible to box in technology through regulations or whatever else. So I say the opposite. I say that universities and whether it's high schools, universities, whatever it is, and however you want to define AI, that you embrace it. And what you do is you have to, it's very expensive to change a curriculum, which is why everybody talks about regulatory changes. It's easier to add regulations than it is to change an existing curriculum. What I think they need to do is actually change the curriculum. And what you do is you make AI, you understand what AI is capable of doing. And so that you build a curriculum around that where AI supports the curriculum.
I couldn't agree. So I'm just I'm just thinking about like the trading floor transition that we both lived through in different ways. You more directly than I did, but having been the floor reporter during the transition, I was a firsthand witness. You were a direct participant. And then obviously the cliche is the horse and buggy and everything in between. I feel like, this is, an all hands on deck moment in education especially for the 15 to 25-year-olds, and then really everybody else, which is the entire educational apparatus was historically based on, not just memorization, but some combination of memorization plus some version of problem solving, right? here's a math problem, resolve it, or here's a concept, discuss it, or here's a historically significant event, understand why it's relevant, or all the sort of traditional educational techniques. I'll say this as I believe, but I think I'm making a statement of fact. In the new world, knowing things actually has a much lower value. And it's being able to find things out that has the highest value now. So having a body of knowledge is less and less valuable. Other than let me put it this way, that's going to come out the wrong way. Having a body of knowledge is as valuable insofar as it helps you to ask the right questions to solve a problem. So it's not so much more, here's my situation, doctor, what do I do? It's here's my situation, doctor. What questions do I need to ask to find out how to solve this problem? And all of a sudden the premium is on understanding how to navigate and manage the unlimited pool of information that is available to everyone and sift through it in a way with enough targeting of asking questions that you can actually get to the answer. And I think that the entire educational infrastructure is really still based on the old paradigm, which is here's how we impart a body of knowledge. This is the literary canon. This is the mathematical canon. This is the historical canon. And right now, and then that comes out and they go to GPT and say, what's the historical canon? What's the literary canon? What's the mathematical canon? As opposed to saying, here's a complex, I want you to build a car. Figure out how to do it. I want you to figure out how to trade options. Go do it. I want you to figure out how to make a furniture making company. Like something, I believe that multivariable team-based problem solving using the unlimited resources is a vastly more powerful and useful form of education. I witnessed this very much at NBC, where the transition from old school cable news to sort of the new paradigm of streaming media, blah, blah, blah. And it was clear sitting in the NBC sort of senior executive production meetings and board meetings and whatever, that they were never, ever, ever going to embrace streaming and digital. They were making way too much money because of the cable monopoly and because of the legacy system. And there's no way where they were going to cannibalize that by going to a much lower margin streaming business, and thus Tasty Trade or tastylive and 1,000 other sort of streaming networks have emerged as the dominant, media ecosystem. Unfortunately, the educational apparatus has that same resistance. That there is no incentive to transition to a new educational paradigm, which is, come here and we will challenge you. We will allow you to use, I'll let you use all of the devices at your disposal. AI is not cheating. Google search is not cheating. YouTube is not cheating. Nothing is cheating. Because I'm not going to ask you a question that I want you to give me an answer to and regurgitate an answer to. I'm going to give you a problem that I need you to solve, and you can use all the tools available to you to solve it. And then a curriculum that basically is a series of 100 progressively complex problems that lasts over 3 or 4 years. My concern, Tom, is that we're not going to do it. I think that there's an easy way. There's 50 experiments that 50 smart people could come up with on how to improve the educational system to do this. That embeds math, and I'll come up with an experiment. You have an experiment. There's 1,000 people in America smarter than both of us on the topic who are can do better experiments than we would ever come up with. The issue is always the intransigence of the incumbent, whether it's in the banking system, whether it's in the educational system, whether it's in the media. But the country, I think, has much more risk when it's the educational system because, the children are our future, to use a cliche.
That's well said. I don't think we're ever going to discount the value of intelligence, because I don't think that can be replaced with AI. But I think you said it. I think I like the way that you talked about it, because knowledge, as far as just knowing stuff, isn't nearly going to be as valuable as it might have once been. But what will be valuable is, like you said, creating certain challenges and also having the know-how to get stuff done. And I think that that's, there's a big difference between knowing something and knowing how to get something done.
Group-based problem solving is actually what life is.
Yeah.
Whether it's you and Scott are like, we want to do a brokerage, and well, I mean, that's like a really complex problem, and that's sort of like the highest level, or whatever. We
went through
at every level. You just want to build a sandcastle. That also is a problem to solve. You got to need some sand in a bucket and whatever.
We went through, you did bootstrapping for a while. We did it for, almost 7 years. And one of the things that I learned doing all the bootstrapping segments over the years was that there were so many great ideas and so many incredibly smart people that on the surface, if you just kind of looked at the resume and you read the idea and you read the resume of the person and the company objective, you'd be like, wow, this is amazing. I love what you guys have put together. But yet 90% of those companies failed.
Of course.
And you start to think, how's that? If I love the idea and I love the people, how did 90% fail? And that's for the reason we just talked about. Instead of knowledge is kind of available now. Good ideas and smart people, there are plenty of them. But being able to apply them those skills in a practical fashion that can actually build, free cash flow or revenue or whatever you want to call it, that's really hard. And there's a big difference between having the knowledge and having the know-how, to generate, profitability or profits or something. So, and I think the same thing applies to AI. There is going to be this massive amount of trained know-how. Anybody can access. Unlimited, exactly. Which will speed up the process of learning certain things and access information. But the people that learn how to actually apply that or how to complement it to whatever the business is, that's where all the money is. That's where the future is.
There's an Italian saying, which I'll say in the English translation, which captures exactly what you're describing, which is execution eats strategy for breakfast.
Yeah. I didn't know that was Italian.
Yeah. I mean, maybe it's not. The Italians use it. I don't know who coined it originally.
I thought I had a professor that once said that.
What's that?
I think I had a professor that once said that in upstate New York. But yeah.
And execution is more the interesting thing. As the supply of smart people is almost as unlimited as anything else. There's a lot of smart people, and we all meet, older people, young people, men, women, immigrants, native people, whatever. A lot of smart people, super smart. I mean, basically, the vast majority of the entire Tasty nation, every person I've ever met at a Tasty is smart. And now you have basically every body of knowledge available. And so it really brings home the point that execution is the final. I mean, that's where it sort of comes down to the whole, this is where you get into the sort of doomsday.
Dylan, this is not something new. Just so we're clear, the whole concept of execution beat strategy is not
goes back to the wheel.
That's right. That's right. In the world of trading, we used to have this. I'll never forget. We hired a kid once. He was really brilliant. I mean, like a super smart graduate degree from Carnegie Mellon, had his MBA. Crazy smart kid. He studied options for at least a year, maybe 15 months. He could tell you second derivative Greeks. I mean, he would go down. He could basically explain it. He could have taught a graduate level course in options. He was so ready.
In terms of just body of knowledge, world class.
Unbelievable. And And all he ever wanted to do was trade on the floor. That was the sole thing. That's why he came to Chicago. He didn't want to be a teacher. He wanted to trade on the floor. So after
with the party
15
boys,
months,
he wanted to be out there with the Batistas.
Yep. He wanted to stand next to Tony and everybody else.
Yeah.
And after a year and a half, I don't remember how long it was, Scott and I finally, we gave him the money and put him on a seat. And we sent him down to the floor. And I forgot exactly what crowd that he picked. It wasn't an index, it was an equity crowd. And he went in there, and within 2 weeks, they almost destroyed the kid. Like he literally, he couldn't function 2 weeks later.
And could you have any insight as to what the distinction, why that, was there a discernible insight?
Execution, he had no idea how violent execution was in certain environments.
Violent being the speed at which it happens, or the physical elbows to the face from the former pro football players in the pit?
It's kind of a combination of both. So we sent in the largest human we had, who was a monster, like a literal
as his body man.
As his body man. This guy bench pressed, 600 pounds. He was a steroid freak. He was
Laura's has legends of these gentlemen.
He was somebody that nobody messed with. Like literally nobody messed with him, because he once broke 3 guys' ribs in the bond pit. He had knocked a few people out. Nobody messed with him. He was the strongest person we had on our team. We sent him in there as protection for this kid because we wanted this kid to make it. And still, he had no chance. After 1 month being on the floor, he quit and said, "This is not for me. I can't handle it." And he was really messed up. And so it gets to your point, because that's a story that always stuck out in my head, because even with the muscle behind him, we couldn't pull it off. So
But what do we, I just want to come back to the most important thing, is what do we do about the math and read? We have a math and reading skills crisis in the United States of America.
That has nothing to do with, I don't believe that is a byproduct or a derivative of AI.
Fair enough. So discount AI.
We had
America still has the stupidest world leader on earth.
We've had a math and English problem for decades. It just continues to get worse.
Exactly. And we've had bad presidents for decades. It just continues to get worse.
There's never been an emphasis on education, because it's a little bit of a divisive area and it doesn't win votes. It's not something that, that people, they're not going to write a check because you have a certain policy on education. They're not going to get behind a platform that is education first. Local governments, yes, but not
on a national level. It's politically immaterial.
Yeah, it is. And people just don't, on a national level, you can't generate support. You can't generate dollars. You've run for the House. How much money could you raise talking about education?
Zero.
Yeah. There you go.
0.0.
Yeah. There you go. And
that's why they run on gay marriage and abortion, and the whole woke thing is only based on money raising. Like it's not that people really care about transgender this or
of course,
or abortion that.
Everything is a lightning rod
because that lights things up. And so it's a way to raise money, and the entire political system is about raising money. And so you pick the issue to get the most money.
Lightning rods, electric fences. That's what gets people excited. They want to touch it. They want to see what's going on. You cannot sell, hey, we're gonna bump up the math scores. It just doesn't sell. I would argue in a very perverse way, I would argue that that some politicians like it that way because that's how they build their base.
I totally agree. It's sort of like, you're not the only one that thinks that either, which is that the lower the educational level, it is in the self-interest of our political leaders to have a voter base that is poorly educated, smoking marijuana, watching pornography, and gambling online.
Even Trump famously said once, "I love the poorly educated."
Yeah.
That was a campaign slogan he used. I mean, let's be real here. Okay, that was a freaking campaign slogan.
I think we really need to sort of, I mean, listen, I won't bother getting into it. I think that we really need, I don't think the government's going to help. I think that we have to help as individuals. I think that companies need to help. I think that institutions need to help. I think, I think that this is a direct intervention at the closest point of contact to the young people, because I just don't see how the government's going to be able to do anything about this.
I think that I think we have to make more funds available to local, to the states for education, and then spread the wealth. And we have to make a commitment to it, and we have to trust our local educators, because that's kind of one of the core strengths in this country. And we just need to, we need to fund them so that they can change curriculum to meet the changing demands of AI and the changing influence that AI has. And I think the way you do that is you spread some of the wealth. Mm-hmm. Let's buy a few less tanks, and let's buy a few less, warships, and let's commit some money to education across the country, and let's let local, state, and local governments commit it to departments of education and let them spend the money. Let's not cut back. Let's add money to that. I think it's important.
Would you add it with a mandate that it can't be used for this legacy? I mean, I think, because the other thing is the educational curriculum now is seen as a political document.
Which is sad, and I don't know how you get around that, because there's certain states which have made some horrible, decisions with respect to education, specifically like Oklahoma and places like that, which have, they've basically turned it into a religious/political football, which it shouldn't be.
But it actually, like, now it's like, if you want to make the change to the curriculum, it's not like, oh, well, we need to do more of whatever. Like, it's like, oh, this curriculum is a document of political indoctrination from the left or the right. It's no longer a document of actual education, or not perceived to be at that.
Yeah, everybody politicizes education. I mean, that's the whole critical race theory thing, like, it's ridiculous. Like, we're not changing history here. Let's commit the dollars. Let's trust the educators. We have an incredible system throughout this country of people that actually give a damn. I mean, sometimes it drives me crazy when we put certain types of, people that only care about themselves, or that, the people that we look up to, sometimes it's the worst. And we need to look up to the people that really, that commit their lives to educating our kids.
I couldn't agree more. I mean, and I also agree with your sort of original statement, which is that as a group, most of the teachers that I meet from both public and private schools are really hardworking, above average intelligence, and really, really care about children and care about education.
They take bullets for kids.
Literally.
Okay? Literally. Let's pay them some respect by giving them some money, so they're not, that's all.
Yeah, I couldn't agree more. Although I'm a little bit frustrated with this discussion, because I feel like we have done a fine job discussing a very complex and somewhat frustrating problem, but I give us a total failure in offering any meaningful solutions, other than maybe advocating for some more advocating for more resources and more attention for a transition in education. But that's a fairly, so.
He's Dylan Radigan. I'm Tom Sosnoff. Thanks for listening. It's Truth or Skepticism. We'll see you next Wednesday. Thanks, Dylan.
See you soon.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
time last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
Do this every time I'm here.
I just want to know what
Every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is going to be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everyone? Welcome back to today's assignment. It's another Wednesday. We had some PPI. We got some volatility from that in the pre-market. Tomorrow we have some CPI, but we're still standing, Dr. Jim, even after those tweets. But it's good to have you back. How are we doing today?
Man, what's going on?
We survived.
I mean, barely, man. Like, barely. Like, bro, that PPI print, I mean, that thing was frigid. Like that thing was real cold, man. I mean, that was like Chicago 2018 polar vortex type stuff, man. That was legitimate. Which so is this gonna be? Oh, this is gonna be your first winter in Chicago, is that right?
It will be my first winter. It hasn't been the first time since I've been to Chicago since it's been really cold. One time, last I was out here was, I think, the beginning of the year. Left the hotel. My hair was still kind of wet. Eyebrows kind of wet. Eyelashes kind of wet. I almost broke them off. They almost broke off. My hair actually froze a little bit. So I got a little bit of experience with the cold. But Dr. Jim, I don't know how we're going to be holding up by the end of the year. So ask me that again in a few months.
No. You don't have any experience with the cold. You're talking about a day or a weekend? That's nothing, dude. Dude, the winters in Chicago, it's 9.5 months long. It's 9.5 months.
That's a long winter.
Yeah, dude, it's gonna wear you down. It is gonna wear you down like you've not experienced before. I'm excited for you, bro. I'm excited for you, man.
You don't sound that excited, but I will say in the beginning of the summer
I'm actually excited for me because knowing that you're gonna go through it reminds me that I don't have to go through it anymore. And so I'm kind of excited for me.
I'm glad that I could be a pillar of hope for you, Dr. Jim. So I will remind you. Before we get into all that, how did we hold up this morning with PPI? We got a little bit of a shakeup, but nothing too crazy. The market's still trying to digest everything, it looks like.
Yeah, I mean, I don't know. Did you happen to catch what the Fed funds futures were saying about the 50 point cut?
No,
I didn't check the update.
I haven't even been on the socials since then. That's usually where I get a lot of my updates from.
Yeah. I don't know what it is. Maybe somebody can help us out in the YouTube chat. Like, let us know, what is the Fed funds futures now between 25 and 50? Because I think going into this morning, even after the big non-farm payrolls revision, like 1 million jobs, like whatever, like that's crazy stuff, man.
Yeah.
And so even after all that, I think it was still like 25 basis points was almost a guarantee. I'm curious now if that's the case, because that was a pretty big miss on PPI. Now, maybe everybody's waiting for CPI tomorrow. I mean, I don't know, but I'd be very curious to know what the 50 basis point probability is now. I would imagine it's more like 75-25 now, 75% that it's going to be 25 basis points and 25% that it's going to be 50. That would be my guess.
Yeah, I mean, I'm going to be surprised too, but I got to ask Dr. Jim, especially because we're heading into October, November, December, before we get into the segment for today. Do things feel off to you? Just sentiment-wise. What I mean by off, I just mean sentiment. How does the sentiment to Dr. Jim feel? The sentiment is the feeling, the energy of us as a crowd, of us as a herd kind of mentality. But what does the sentiment feel like to you with CPI? We've been getting the jobs reports. We've been getting a lot more data points that point towards something that feels weird, I will put it, Dr. Jim. But before we get in today, how are you feeling? Are you still a permabull right now?
I mean, it's showing potential cracks in the economy. Like, there's no question about that.
Right.
Especially like the labor market.
Right. And
like,
the economy.
Go ahead.
No. I was just gonna make the points of how you were saying. I was gonna say, in the stock market is the economy, right?
I mean, I don't think so.
No, right.
I think you're trolling me. That's pretty good. But I mean, with all the downward revisions and it's like, yeah, there's obviously some cracks in the labor market, but I don't know that the market necessarily cares about that, honestly. Yeah. And so, as far as like the sentiment and the underlying foundation of the economy, like, I think we're probably going to be just fine. Like, I don't know that we're necessarily going to go into a recession or anything like that. But one thing about the market, like strength or just the market, I mean, all-time highs now, right? I mean, EMEA S&Ps are literally at the all-time highs. NASDAQ is off the mark now by, it's been pretty weak actually after the PPI number. And so it's maybe a couple 100 points off. I don't know. But man, with these markets like this that are so resilient, they can stay this way for a very, very long time.
Yeah.
And so it always feels like, oh my gosh, this doesn't make any sense. Like the labor market, the unemployment rate, the PPIs and the CPIs, it's all fake and made up. It's like, man, I totally agree. But the market doesn't even care.
Right.
Like the market can just keep going for 6, 12, 18 more months.
Yeah.
And then, there's going to be a correction at some point. And then obviously all the bears can pop out and say, I told you so.
Yeah.
Like, I told you, man. I told you it was coming. Like, man, it's hard to know.
That's usually how it plays out every single time. And I mean, to the point that you just made, I mean, I'm pretty surprised even over the last 5 years, how things played out over the last 5 years. I mean, I know we've been raising interest rates, trying to tame inflation. So of course, a lot of asset prices are going to be going up when we're raising interest rates. But I was still even shocked by that. I'm like, this doesn't make sense. And it hasn't been making sense for the last 5 to 6 years. So I won't try to make too much sense of it. But,
okay. All right. Well, Emmett, I see Emmett in the YouTube chat. Emmett said there's a 10% chance for a 50 basis point cut down.
Okay.
So
okay.
it's 90-10. That's surprising to me.
Okay.
That's very surprising to me. Now, I'll be curious to see. Thank you, Emmett. I'll be curious to see CPI. If CPI follows suit tomorrow and it's also very cold and like it shows like not only like, minimal inflation or significant, disinflation, but the potential for deflation.
Yeah.
Man, I don't know what that's going to mean for a cut. I would have to imagine that 50 basis point number is going to jump a lot more than 10%.
Well, we got CPI coming in less than 24 hours, so we'll see what we get. But before we do that, when the market really moves, hourly trading activity. So today we're going to be getting into a couple different data points. We looked at NASDAQ and we looked at the S&P 500, Dr. Jim, and we just wanted to see where the most trading activity, like where all the hype was. And then I want to speculate a little bit on like, why is it so hyped up? Why is between this hour and this hour, there's a little bit more trading activity? So I wanted to take a look at it from that perspective. And we wanted to start with, I think it's NASDAQ first. We can go ahead and get into the first slide. Was it NASDAQ or ES? It's ES. ES, Dr. Jim, right off the bat, we had spoke earlier, and I was asking, what would you guess the most active trading window by the hour in the S&P 500? And you kind of said the morning, and I was like, I thought the same exact thing. So we pulled this over the last 12 months. So, I mean, maybe the data could have been a little bit different if we pulled this over the last 5 years or over the last 10 years. The larger sample size you have, the better. But you can clearly see we get most of the trading activity occurring within the first hour of market open. And then we have another spike in volatility at about 2 p.m. or another spike in trading activity at 2 p.m. whenever everybody's food digests from the lunch hour. But just right off the bat, Dr. Jim, does this surprise you? You can see at market open, I tried to get that red dashed line labeled as market open, and then you can see the market close dashed line represented under 15 on the graphic.
Yeah, it does surprise me a little bit. Like I would have thought for sure, and I would have put a lot of money on the line that the market open is going to be the dominant force for market activity. Like it is going to be head and shoulders above any other hour-long window, any other time of the day, whatever. And that's just not the case. Like it's actually second tier, which is crazy to me, behind the afternoon, especially with like zero DTE options and things like that. Like people are trading those early in the day. Like you're not doing a zero DTE at like 2 o'clock.
Right.
I mean, some people might be, but not the majority.
Yeah.
Like the majority of those traders are going to want to have the full day for whatever their hypothesis is to be proven, right or wrong. And so I'm very surprised by this. I'm not surprised that the end of the day is active, but I would have thought it would have been significantly less active than the beginning of the day.
Yeah, no, I would have thought pretty much the exact same thing. And I mean, I know towards the end of the day, when I think about it, it's okay, market open, maybe there's a lot of traders that want to adjust their positions. Like what is the logic between so much? Because you can see prior to market open, I mean, the volatility is pretty much dead, Dr. I mean, that's just me and you trading whatever back and forth before market open right there, because there's pretty much no trading activity. And then out of nowhere at market open, we see a massive spike in volatility. So maybe multiple market participants are now taking part. We got the zero DTEers, we got the swing traders, we got the long-term investment, maybe just people wanting to manage their positions at market open because we've been locked out all night. So I think that could be one of the reasons. Outside of that, I mean, we got the afternoon, maybe adjusting positions before the close. Maybe even some zero DTE traders trying to close their positions before they close, because if they opened it earlier in the day, maybe they're trying to manage those positions before the market closed too. So there's a handful of reasons why trading activity might, pick up a little bit more during market open and then in the afternoon. And we can use a little bit of logic, but at the end of the day, we don't know exactly why, people are managing their positions when and, why they do as well. But with that being said,
I think another aspect of this too is I think a lot of institutional traders are going to come in later in the day. So I think that, and I don't have any data to back this up, but from like an institute, because you're just grabbing volume, right? You're just grabbing volume in the windows.
Yeah, just trading activity, within the hour.
So the volume could be coming from anywhere. And the reality is this, right? Retail volume is significant, and it's especially more significant now with zero DTE options, which is more of a retail phenomenon than an institutional phenomenon. But still, the institutional orders and the institutional volume in order flow is going to be many, many magnitudes over and above the retail order flow. And so whenever the institutions are trading, that's going to essentially decide what ends up being the most active time windows. And so I think I've heard, and I'm kind of grabbing here, just trying to figure out, trying to make some sense of this data.
Yeah.
I think I've heard before that the institutions are generally more active in the afternoon than the morning. So if that's true, that could help to explain what we see here.
That would be really interesting. I think it'd be kind of, because these are some really large orders that these institutions are using sometimes too. And it's kind of interesting. Like, it's like the way that I look at it, is it the chicken or the egg? Like, which came first? Is there a lot of trading activity with retail because institutions are getting involved here? Or does institutions recognize a lot of retail gets involved here? So, or maybe retail isn't even enough volume for institutions to even care about them. So I think, like, what comes first? Does institutions care about these areas because retail does? Or does retail care about these areas because institutions do? And I mean, institutions make up most of the volume in the market too. So we could always go back and forth.
That's a good question. Yeah, that's a really good question. You know what's interesting? I don't think I actually don't think I've I think I've talked about this before on Theory to Practice, but not necessarily here. So my dissertation, my research was actually on institutional trading around the internet bubble. And one of the things that I was able to see with the data set that I had, it was really, really quite fascinating. So I had a data set where I could see, like, an institution, they were all coded by numbers. Like, I couldn't see that it was like Wells Fargo or BlackRock or whatever, but I could see numbers. Like, they all had like these numerical identifiers. And so I could see that institution, 1, 2, 3 went into the market on, September 10th. And they had a 50,000 share order that they wanted to fill. And then I could actually see how they split that up to get it filled over the course of the next day, 2 days, week, whatever. So a lot of times institutions would come in with like a 100,000 share order, and they wouldn't go in with 100,000 shares on the first trade. They would split it up. They would actually kind of stealthily like do 10,000 here and 30,000 there. And they may take like a full, let's say 72 hours to get the whole trade package filled. It was so fascinating to be able to look at that.
Imagine having order sizes where you have to break it up. But Dr. Jim, let me ask you, why did they have to break up those orders? So that they could... No, go ahead.
Go ahead. What do you think the answer is? I think you know the answer.
Well, I think they'd have to break up the orders because every buyer needs a seller and every seller needs a buyer. So if they're trying to buy massive amounts of orders, if they buy that entire position size at once, they're going to give themselves a worse price because they're going to take up all the available sellers or buyers at that specific price level, and then they're going to move the market because they have so much orders, and it's going to go to the next available buyers or sellers. So maybe they do that to be a little bit more cost effective to get the exact entry points that they want, and they don't kind of squeeze themselves out of their own position, for lack of a better way to put it.
No, you're 100% right.
Okay.
You're 100% right. It's all about, and I know that you look at depth of market. Like, I know that you're looking at these things, especially on like the active trader tab and the new things that we have on Tasty, which is awesome. That's exactly right. It's like if I go in with 100,000 share order and I'm BlackRock or whoever, right? And I'm looking at the book and, the top of the book has 15,000, the next best, bid offer has 25,000 and so on and so forth. It's like, man, the first 2, 3, pools of liquidity aren't even going to get me there. They're not even going to get me half of the way there.
That's some massive order sizes.
I know. It's crazy stuff. And so it's all about protecting their entry price. And because you're right, it's that, it's not so much about moving the market, although they would be moving the market at least temporarily. It was all about entry price. That's all they were focused on, was entry price. Is that they wanted to make sure that they could, they wanted to minimize the price impact of their actual order on their own price.
Yeah.
And so it was really fascinating.
And I mean, that makes sense too, because I've entered with market orders here and there before, and it is crazy. And it's like an institution's not going to do that because, I mean, your risk profile being off by 5 points, 10 points, 20 points with those size of orders, I mean, you're going to see that in the books. That's not a little rounding error for those types of order sizes. So that makes sense too, why they're so precise with where they might want to be.
Yep. That's right.
they don't get to just brush under the rug them not managing their risk. They don't get to just brush it under the rug and, you know, go on to the next trade. So makes sense they're so particular with that. But with that being said, that's the ES data points, Dr. Jim. We can go ahead and jump over to the next slide here. This is going to be NASDAQ. It looks very familiar. There's only going to be one difference.
But look at that. Look at that, I know. It's more like what I thought.
Yeah.
Okay.
So maybe two differences. This is a little bit more like you thought, and really, honestly, what I thought as well. But most trading activity coming in at 9 o'clock Central. Another spike later in the day at around 2 o'clock Central. You can see that the spike later on in the afternoon is a little bit lower than the spike in the morning, which seems to be pretty on par so far. But one thing I want to point out right off the bat is that trading volume is about half, Dr. Jim. So it's like this looks the same visually, but if we were to put it at scale relative to each other, NASDAQ trades a lot lower volume than something like ES. It's a lot thicker market. But most of the trading activity obviously coming in the morning, and then a lot right before the close. And then again, a lot lighter than ES. But these are the data points. Really, the main takeaway here is just the fact that NASDAQ trades a lot less volume than ES, Dr. Jim. I don't know why. I like NASDAQ better. But I know ES is clearly more popular. It has more trading activity, you know?
Well, I mean, I think again, I think it depends on who you're talking to.
That's a good point. Good point.
I think it's more popular with institutions. I don't think it's more popular with retail crowd. Not at all. In fact,
this is good.
No, hold on.
This is good. Yeah.
So check this out. Yeah. So I actually think part of the reason why we're observing what we're observing is actually what we were just talking about a couple minutes ago.
Okay.
Think about zero DT options, right? Think about the popularity and the prevalence of these. They're huge. I'm using them. We're all using them, right? Like it's a big part of what almost every single active trader does now, especially in the tasty world.
Right.
When you do a zero DT option, though, what types of stocks are you doing them in? You're doing Tesla. You're doing Netflix. You're doing NVIDIA. What types of stocks are you not doing them in? IBM, McDonald's, right?
Yeah.
Kroger.
Yeah.
Like that's not going to be a zero D. You know what I'm saying?
Yeah, 100%.
And so this now makes a lot of sense. I'm like, all right, maybe all that zero DT option volume that is going to be highly concentrated around the market open for obvious reasons, that's helping to explain why we see more volume in the NASDAQ, but we don't see that in the S&P 500 because it's going to be those tech stocks that are going to be driving a lot of the zero DT volume.
You know what?
I'm just kind of making an educated guess here, but I think it makes sense.
Honestly, so Dr. Jim, I haven't wrote a dissertation, but if you're down to shadow me on one, I'm down.
I mean, let's go, man. Like, let's go.
Yeah.
Like, there you go. I mean, it's not a bad. It's honestly.
Yeah.
We have so you joke about that, but
yeah.
we have so many grad students that watch our shows. I mean, a lot of them reach out to me just because of my, where I was before this and all that. If you're looking for like an MBA thesis topic, or you're looking for a dissertation topic, this could be an interesting start. I think you'd have to add some things to it, of course, but it could be an interesting foundation.
It's interesting because it's a newer phenomenon. For example, Melvin Capital. Right. Melvin Capital never had to worry about retail. If anything, Melvin Capital and the guys that work for Melvin Capital would laugh at retail until retail blew them out of the water on the short squeeze on GameStop. So I think those topics are always interesting when it's like a new phenomenon to an industry that never existed before, like zero DTE options. It's a new phenomenon, so it's like kind of a new angle to look at things or why things work the way they do now. But with that being said, we can go ahead and jump over here to the platform. We got a few minutes left just to get your thoughts on a few of these positions here, Dr. Jim.
Man, what do you think about, bro? I need to get your thoughts, man. What's going on? What's going on with Oracle, bro?
Oracle, yo, I don't know what's going on. I have no idea what's going on with Oracle. All I remember is way back in the day, some company bought one company my dad was working at, and it was Oracle. And I just remember driving by that.
Oracle was the company that bought the other company, or Oracle got bought by somebody else? It had to be the first one.
I think Oracle bought the company that my dad was working for. This was like 15 years ago, maybe 15, whatever it was. But that was my first taste of Oracle, and then from there, that's the only reason why I know exactly what Oracle is, because I would drive by as a kid. I'm like, my dad works there. That's like you as a kid.
Well, so. Yeah. well, I mean, when we get to the platform, bring up Oracle.
Okay. Yeah. No. I mean, they've been popping off. I don't know what I'm doing in there yet. Don't tell me you had.
This isn't even popping off, dude. This is something else entirely.
Okay. Cool.
Like they're up 40% today.
Oh.
In one day.
What? Yeah, we can go ahead and jump over to the platform.
We're not talking about Ethereum. We're not talking about Solana. Like, man, we're talking about, isn't Oracle like in the Dow? Like that's okay. So they sold off a little bit, but they were up like 45% this morning.
I mean, they're up 83
That's
bucks right now. That's a 35% change right now, and they've sold off from the highs.
I know. That's crazy, man. That's crazy.
Give me the inside scoop, Dr. Jim. What's going on in here? What are you guys going to do?
So they had earnings last night, right?
Okay.
And I don't know all the ins and outs, but here's what else is really, really funny.
Okay.
And this is another good example that you have no idea how these stocks are going to react. Oracle missed on their revenue target. They missed on their earnings target. So they had a double miss. But everybody's excited about the AI infrastructure investments that they're going to make. It's like 500 billion or 500 trillion or whatever it is. It's some crazy number. And so that's what the market is kind of, and there may be some other things, but I think that was kind of the foundational piece. And so like, if you actually go back and look at the initial move on Oracle again was straight down. It went down like $20 or $30. Like on the original drop of the earnings numbers. And then all of a sudden, just a rocket ship higher. Just crazy stuff, man. Just super,
no, I
crazy
see this
stuff.
wait, that might have been over here. Yeah, so yesterday, it looks like, I'm on the 1 minute. It's all weird with the scaling. No, I see the wick down here. We had wick down all the way down here to 224, and now we're sitting at 325.
That's right.
Yeah.
That's right.
I mean.
Come on, man.
Imagine,
that's crazy.
RIP to whoever's stop loss was chilling down here on the wick.
Yeah, I don't know, man.
That sucks.
Oh, man. That's crazy.
We'll swing back
anyway.
around to Oracle, see if we want to do
what do you
anything in
got
there. Not too much in NASDAQ today. Honestly, NASDAQ was giving me some fits today. So down 17 bucks on the day, but this is after like 3 or 4 attempts of, I think I was trying to get long today. So I managed the risk really well. So really not much in NASDAQ. It was just kind of giving fits. And I know we'll touch on the active trader platform a little bit more today. But one of the things that I want to test too, Dr. Jim, and if anybody else has some cool ideas, let us know. But there's a lot of talking in the community about, don't trade the day prior to a CPI, prior to a PPI. I love all of that. But now I really want to put some data behind that. Like, how can we calculate the reduced range in volatility, or is the market going to be more choppy prior to a CPI? And it's like, what type of parameters can we put around that question? And then what will we come out with? Because like today, for example, it was a tougher day to trade. And I mean, it's prior to a day of CPI. So could that have helped me manage my expectations a little bit if we went a little bit deeper on the research on something like that? But have you heard that thrown around in the community as well too? Like CPI, a large binary event, the market could be choppy the prior day, or the market might not do what you want it to do.
Oh, definitely.
Right.
But you know what's funny about that is you actually also hear the opposite of that.
Right.
Which is, hey, don't trade news days. Like,
Right,
hey,
right.
Don't trade CPI, don't trade NFP, don't trade whatever. And so it's one of those things where if you look long enough and hard enough, you're going to find everything.
Right.
You're going to find all the things that you're looking for. And so that's why, you just have to be really clear on what it is that you're trying to do. Like if you're, a volatility seller, if you're looking to sell premium and high volatility, then obviously the news days are going to be good opportunities for you. The news days are going to give you a chance to sell that high volatility. Now, again, you need to remember that volatility is not just a number on the screen. Like it's not just, some random data point that doesn't mean anything. Like high volatility means it's going to be a bumpy ride. Like that means it's going to move a lot. And so it's all about what type of market aligns with what you specifically yourself as a trader are trying to, extract out of the marketplace.
Yeah.
And if you're selling premium and high volatility, I mean, these moments, these economic prints give us an opportunity to do that. So, but I do agree that generally speaking, the day before, the couple hours before, it's usually very quiet. I mean, like next week, for example, I think next week is FOMC on Wednesday. Most likely that morning is going to be dead quiet. Like from 10 o'clock to 2 o'clock Eastern, there's not going to be anything to do because the market's all going to be waiting to see what is Powell going to do, especially if this 50 basis point probability starts to increase a little bit.
Right.
And we do go in at maybe a 75-25 or even 80-20.
Yeah.
That's going to be really interesting, man.
No, I think so too. And I think that is another idea we're going to get into. It's like, can you quantify some of those ideas, especially when it comes down to the Fed? So I'll get back with you on that, and maybe we have another segment on those topics But with that being said, Dr. Jim, we still got some gold on in there. Gold's been an absolute beast. You guys haven't been doing anything in gold, right? But I mean, gold hasn't been quiet.
I think we just got short the other day, and it's thankfully it's up here, so we're doing okay so far.
Yeah. Gold hasn't done too much so far, but it's been on a tear the last week. But we got some gold in there. 37 days till expiration. Need to be a little patient in there. Google sold an out of the money call spread on there. I sold the 235, bought the 240, down about 50% of the credit received so far. Still got time in there. Going to be a little patient. I'm kind of right on the dance floor. One of the strikes is being tested, but not the one that I bought so far. So I'm going to be patient. Nvidia, I had sold an out of the money call spread, so I got short on there. This one has been pretty volatile. This has been one that has kind of just been chopping around. We'll have a pretty big down day, and then we'll put in a pretty big up day on something like Nvidia. So that's where we're at on that. It's kind of like a break-even trade we've been playing with. QQQ, I had sold a out of the money call spread, sold a put spread. I have one expiring in 9 days. That one is just a shorter term trade. Both of them are sitting in the money. Smaller trade, so not much I can do there. But I did sell the out of the money call spread as well. Sold the 580 on QQQ. Just to visualize, where's 580? So I mean, we're about a buck underneath the strike that I sold on QQQ. So pretty much what I'm saying here, Dr. Jim, with all the positions that I have on, it would be nice to get some type of sustained pullback in the market so I could at least wipe a couple of these off the table, or at least turn a couple of these around, because whenever we get just a slight down day, when you lean so short delta, it can be such a relief. But at the same time, when the market just keeps putting in highs, it can kind of just feel like it's just grinding with you and it's just taking you up. But other than that, we have the RKT. This was a risk to reward position with Gus and I. 9 days left to expiration. It was just a put that we had bought. And then SPY. Sold an out of the money call spread on SPY. I need the market below 640 on SPY. Down a little bit on that one at this time. And then we'll go from there. Maybe CPI is going to help us out a little bit, Dr. Jim. Get some volatility to the downside before we get bought back up to all-time highs again.
That's right. That's how it's going to go.
Yeah. But no, that's pretty much what we've got going on in the portfolio. Really nothing too interesting. You got me a little bit more interested in Oracle. I feel like we're kind of just floating up there, but anything else to add before we start to wrap for the day, Dr. Jim?
No, I think we're out of time. So yeah. I think we got to roll. But yeah, the Oracle move it's a crazy one, man. It's one for the history books.
It's definitely one for the history books. So we'll see what we get. Dr. Jim, that's going to do it for today. We'll come back, do a little bit more data on ES and NQ, see what we come up with. But thanks for taking the time to get your thoughts and insights on all the data and trades that we provide here today. Thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
news and an icy cold PPI. But I definitely sold into the strength, and that's worked out. So here we see the spider, which on an intraday basis was a lifetime high. Maybe a lifetime high close. If it closed right now, it would be. We'll see. The emerging markets, also green, not near lifetime highs, but they've had a very strong 5 days here. But this might be the end of it. I mean, the reason I was eager to sell into all that strength is because, I mean, how much more positive news could you get in terms of the rates getting cut? You know, unemployment is up. The jobs that supposedly were created have been slashed by almost 1 million. The PPI is deflationary. So yeah, you could easily cut 50 basis points. So all this good news for the bulls is out there, and they're having a little trouble keeping it up, even with that. NQ red, RTY red, YM red. Even gold's a little bit red at the moment. China red. And I shorted this yesterday. It opened strong, but did not get stopped out of that. My stop was 40.20. We got up to 40.10, saved by the bell, and then we got a bearish engulfing pattern now. So maybe that's topped out. That trend line is doing a good job. Peak yesterday tagged it. Peak today tagged it. As God intended. This is good stuff. So hopefully that trend line will be the end of that nonsense. I was also remembering Elon was, quite smitten with the president of Argentina some months ago and urged people to invest in Argentina, which was a pretty good idea for a little while, but it's really sputtered since then. Argentina topped out May 19, and it's down a lot, actually. I thought it was down just a little. It's about 20% or so. So that's quite the wipeout. So I guess the bloom's off that rosé. But my fixation continues to be the diamonds, which, bless them, have not exceeded their horizontal, and they have been weaker than anything else going today. So I'm less concerned with the CPI now that the PPI is out, but I am not an expert or even a beginner in the relationship between those two. I can only assume that there's some rough correlation between them, and we don't. I mean, what's going to happen with the CPI? Will it be negative as well? Well, that cat's already out of the bag, so this is still looking good. Now, Oracle. This was the huge news. And I want to pause for a moment just to celebrate stop-loss orders, because I was short this. And my stop was set to just above the high for Monday. So my stop was just above 242.42. And yesterday, kind of near the end of the day, it sneaked above that by pennies, and I got stopped out. And I was like, well, there you go. You're out of that position. And so I was less interested in what Oracle was going to do after the close, but I was still interested because I had been in a short position in it. And it plunged. I was thinking, boy, what a coward I am. I shouldn't have had such a tight stop, et cetera, et cetera, et cetera. 30 seconds later, I was not castigating myself anymore because it started climbing, and it is the biggest rally they've had in, I think, 33 years. You know, it's up. It was up like 40%. And 40% is huge for like a little biotech startup that just cured cancer. But for Oracle, which is this boring, big database company, that's jaw-dropping. And I think I read it. Larry Edelson's now the richest man in the world. So thank you, stop loss order. We try to be disciplined traders, and sometimes we let those orders be the discipline for us, and it worked. So I'd be a lot less cheerful today if I'd gotten killed by Oracle's explosive move, but no harm. Anything to do with AI, though, is celebrating as well, because Oracle, it's funny, the reason it plunged at first, and I was yelling at myself, revenue miss, earnings miss. I mean, it was a bad report, but then they're like, oh, but the future's going to be really, really good. Just you wait. And those forecasts were all it took for people to get excited. And they're like, wow, maybe there's something to this whole AI thing after all. So anything that also been at the mercy of the AI mania is doing well too. NVIDIA up about 3.25%. AMD also up. I got stopped out of this one too this morning, but I got back into it. Can't help myself. And it's profitable again, but I have gotten back into my friend AMD on the short side. And, you know, I also shorted the bejesus out of the cubes earlier today when they were quite strong. So all in all, it's all working out quite well. SMH, the semiconductor index, is green. It has not hit a lifetime high though. And naturally it's green because, you know, of Oracle, which is not a semiconductor company, but it's the good feelings from their rosy forecasts. Bull markets die on good news. Bear markets die on bad news. I can show you I've saved all the time in the Newsweek from March of 2009. It was the end of the world. And the covers, I remember so well, they showed a cover of this rope with like one little thread hanging and like this hand holding onto it. I think the title was like, hanging on for dear life. That was 666 on the S&P 500, like to the day. So news like, we're going to sell hundreds of billions of dollars worth of cloud services, and Oracle gets bid up 40%. That's good news. So it spreads. The cubes, which as I mentioned, I shorted earlier, a lifetime high today, intraday. Not a lifetime high close though. We've got a bearish engulfing pattern on these and a very big short position on that now. Selling into strength. The other reason for my relatively chipper disposition is palladium, because as I mentioned yesterday, almost in passing, I was actually a little uncomfortable even talking about it because I sold palladium. I sold out of my position here. And I was patting myself on the back here and here. Then it started to stabilize and gain strength again. And I couldn't take it anymore. I was just too worried that the long-term prospects of palladium were too good for me to sit out. So yesterday, I got back into it, which was not an easy decision because gold is not cheap. Miners are super expensive. All the precious metal stuff has gone berserk. And I was thinking to myself, you're buying this wistfully. And if all precious turns down, this is not going to sit that one out. Well, not really. Gold is down right now. Palladium is up $66. So that's good. And if you look at, for example, PAL, which is the instrument I use for this, volume has really been growing lately. So there's a lot more interest on it. Now, full disclosure, I did sell half of the position early today when it was up bigger because it was an irresponsibly large position. So I'm not going to get greedy about it. So I've sold half, but I will happily get back into that if we ease back some. So a little more sensible position now. Took some profits. As I mentioned, gold, by way of GLD, is not performing the way palladium is right now. Lifetime high on that remains yesterday. Got an inside bar today. It's just kind of hanging out there. This is very vulnerable to a sell-off, but I'll say it for the umpteenth time. If we can sell off to this gap, that is a tremendous buying opportunity. Maybe it'll be FOMC day, I don't know. Miners, GDX up again. I was short these, got stopped out at a loss, which seems to be, miners are really good at that lately. So I've grabbed that skillet handle 3 times in a row. I'm gonna stop. Miners just a crazy strong, an oft repeated idea that has been on this little segment is DRD, another great day. 5.54% gain on that one, and just this has been as a whoosh, just a tremendous run on this. So let's dispatch with this perma bear business. A lot of my better ideas are actually long ones. So yeah, that's doing really well. You know, not to toot my horn, just to beat my horn back into the ground. I'm the sort who would sell this way too soon. So if any of you held on to it, congratulations for not having paper hands, because this has been a really good idea. And then OUNZ, ounds, just illustrative, I think, of just how I don't want to use the word overbought, but how lofty things are now and how it could be prone to easing back to that gap, which again would be, I think, a very exciting purchase opportunity. Only a couple of minutes left. I'll go swiftly through a few of the mini shorts I'm in right now. Another great day for Accenture. I mentioned this one again and again. So that's doing very well. Meta, which for reasons I'll tell years from now, I think it's a great long-term short, but I can't talk about it at the moment. This is reversed away, so that's going the right direction. Boeing, another short there. Not as pretty a pattern, but a good long-term short. Cracker Barrel, Uncle Herschel, down again. So I've been riding this down. Chicken and gravy. Salesforce, also down nicely. 3 2/3%. DHI, I mentioned this one the other day with respect to that gap closure. Doing the right thing. Red, gonna hang on to that. And mentioned this one too a few times. Love this pattern. Global Payments, GPN. It's kind of inching its way down earlier. Now it's a nice, good tumble today. So that's cool. So all in all, a really good day. I am long IEF, besides Palladium, by the way. I've mentioned IEF dozens of times, but it's just a beautiful bullish pattern. I think it's got a good long-term future. And ratio chart to close the program with, one we haven't looked at before. This is the long-term continuous contract of Palladium divided by the spiders. It is a beauty. So I think that's, in a nutshell, what this show is going to be about for months to come. So, all right, well, that is it. I'll see you tomorrow after the CPI. We'll see how that turns out. And thanks for coming by. Good night.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Global markets never sleep. Explore them with forex on Tasty Trade. Get in on 80 plus forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school, what do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were gonna kill Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend, and I've said this before this week. I'm going to say it again. This is the worst down day ever. Even the S&P's up $8.75. NASDAQ did have a big reversal, a 200 handle reversal from 24.44 to 23.8 and change, where we sit right now, down 38. Russell down 10. That's one of your bigger movers to the downside, with the Dow down 278. Dow and the Russell have been weak. Russell has been weak. Dow's been the weakest all day long. Volatility finally up by a solid 7 cents. Sosnoff, 1847, about 10 cents off of its highs. Bonds up 12 ticks. They've been strong all day, although they are 10 or 12 ticks off of their highs. Bitcoin's hung in there all day. It's under 114,000 at 113.6, up $1,900. Ethereum up $17. Oil up $1.17. Gold down $5. This will be the first down day in gold in its history. Although ever so slightly, if we can get the down day today. But today was really marred by the equity side. Now, if I got to go to the top side first, you got AVGO up $31, which is about $5 off its highs. Reddit up 19.
But let's talk just with AGVO for a second. I mean, that stock just has rallied already. I mean, an insane move.
Oh, it was 300 4 days ago. It's up another 10% today at 368. Yes.
Yeah, I mean, the stock has rallied. I wasn't under 300. I can't remember now where it was before earnings.
Yeah, you're right. It got down around 290-ish or so.
Yeah. I mean, it's rallied over 20% this week.
Yeah, almost 10% today, 20% this week.
Yeah,
we're only 3 days into the week, so give it some time. Don't sell it short.
Okay, so the only thing I want to mention about that is because AVGO was a loser for us on earnings, but it was a small loser. But the reason we covered it was because the IV rank, if I remember correctly, got down into the single digits in there.
Yeah, it's 11 now, a little bit of an uptick today, but yeah, you're right. It was in the single digits.
Yeah, so that's one of the times when those IV rank, getting out because the IV rank goes down to single digits is the right thing to do.
Yeah, I mean, listen, I get emails like that all the time during the day. Like, do I stay in this? I'm at a straddle now. I've been working this strangle. I'm down X amount of dollars, $3, $4, $5, whatever it is. Do I stay in here and the IV rank is 5 and widen? I go, you can. Or you can use the money someplace else. Like if there's some other opportunity that you feel that buying power could be better served, then go someplace else. By all means, that's what you should do. That's typically what we default to do.
Yeah, but I mean, usually, so I was just going to basically present the tale of two stories here. AVGO had to move outside. I want to say it was on earnings, it was 2 times the expected move, a little over that.
Yes.
And now it's way up over that. It's almost a 3 standard deviation move from the beginning of the week, but the IB rank dropped into the single digits. Oracle today had this absolutely ridiculous move of almost 4 standard deviations. I mean, remember, the expected move was, I think it was $22 or $23.
Yeah. It was in the
moved
20s.
at 1.100, which is basically a 4 standard deviation move. Now, the only difference in Oracle is that the IB rank's still 60.
Yeah. The rank is hanging in there. I guess on such a big move like that to the upside, it's going to for sure.
Yeah. So it's just a little bit different. That's it. That's the only thing.
Maybe a post earnings trades for option trades today, every Tuesday and Thursday coming tomorrow. So maybe you can find out what traders are doing in Oracle post earnings.
Well, the one thing I'll say about Oracle post earnings is that because the IB rank's so high, the juice stayed in there. The only problem in Oracle is I don't think you're going to get the volume and the tight markets that you had today tomorrow.
Oh, you got 15-cent wide markets in a $300 stock. Today it's good. I mean,
today it's good. I'm saying tomorrow, and normally Oracle's okay.
Right.
And the weirdest thing about today is with Oracle up 90, how's the NASDAQ down?
Oh, that's a good question. I can give you some of those answers. So I don't know if by going to my high option volume list and looking at
it's obviously Apple and Amazon, but
and Meta's down 12, Netflix is down 10. You just mentioned Amazon and Apple both down around 8 or 9 a piece. Chewy down 7. They're taking that dog out to.
I don't think Chewy's matters to the NASDAQ.
No, but it's a almost 17% move to the downside. I mean, it's a big move on a $34 stock to lose 15% on earnings. That's
I mean, Apple, the move in Apple's the big move on their big release. Obviously, they didn't impress people with their skinny little phone and and crappy price.
You don't make friends with a skinny little phone, Sosnoff. Remember that.
I like a skinny phone, but that's a story for a different day.
And a flat arse. Yes, you're correct.
Flat arse and a skinny phone. Yeah, I'll take it.
Adobe down 5, Circle down 4 after catching a bid yesterday. Affirm, Coin, they're all down, and your beloved Chinese stocks like Bob.
What happened on that IPO today? I wasn't watching Klarna. I already forgot the symbol.
Me too. I'm sorry, I don't have it.
Oh, because I think they went public today.
Yes, but I don't remember the symbol. I'm sorry. I don't look at stocks I can't trade or don't want to trade or won't trade.
Okay.
Uh-huh.
All right, what else you got?
Well, that's so we both thought that today was a little bit, volatility had been selling off a little bit, but both looked like it felt like it was getting a little bit heavy up here. You started selling them not too far off of the high side, about 10 handles off of the highs, but it was a death trade.
Oh my God! If you could hold out,
there was no velocity to the move. You got a 1.1 million E-mini S&Ps. That's about average.
I mean, if you could step in front of that NASDAQ train today, you had to have some pretty big balls this morning with Oracle up 90 points.
Right.
Step in front of that NASDAQ move.
But Apple opened lower all day, long. I mean, there were a lot of stocks.
It looked heavy to me, but
yeah,
I'm short a little Reddit. It's up $18. It depends. It's pick and choose. But I saw how heavy the NASDAQ looked all day, but I couldn't get out from the Oracle debacle.
Yeah. I didn't realize you put on you like trading Oracle yesterday.
Unfortunately, yes.
You got a little more complacent than you normally do.
I got a little frisky. Didn't pay off. I got slapped. It happens. I haven't been slapped in a while, so I guess I was due.
I don't know if anybody's due, but yeah, if it had to happen to somebody, I'm glad it happened to you. You can afford to have it happen to you, so it's better that it happens to you.
I don't like that logic.
I'm just using your own logic back at you. That's all.
All right. Other than that, let's see what else would. The only other negative we had today was Reddit.
RDTT. Let's take a look at Reddit. Sorry. RDT. Reddit up $18. $258. Another 7% move. New all-time highs. New highs.
And nothing. That stock never even downticked once today.
You're right. It opened at 245 and just continued to climb all day. Got up to 261.
Yep. Also, another stock that was down big today was Costco. Well, we did an iron condor in there, but
Costco down 23 and change. Yeah, Costco's lost a little bit of its bloom as of late.
Yeah, you're right. It has lost a little bloom.
Costco has earnings coming on the 25th of September, so I don't know if Ivy rank at 31 right now.
Can't save it. I don't think they can save Costco.
Yeah, I don't think so.
But anyway, looking at all the other stocks today, not much. We had a little bit of a loser in TTD. I don't know if you trade that, the trade desk, whatever the hell it is.
Yeah, no, I try to get you into it.
Yeah, it's a crappy stock. It blew up on earnings last time, went down to like, from like $75 or $80 down to 50. And today it broke down to 45. It just looks like duty.
Down $7, a big 14% move. Ivy rank of 26. Yeah, you are right. This is not does not look pretty.
Yeah, I got a bunch of crappy ass positions on in there. Just leftover positions from earnings. I'm not proud.
I don't think you should be. I don't think you should be.
Not a proud camper.
I wasn't proud of you last night when I saw Oracle. I just didn't take a look at your position in depth. You sure do like your Oracle.
Liked. I thought it was a layup to make a little bit of money. I was wrong.
Yes.
Every once in a while, the market needs to teach you a lesson. Let's see, what else did we do today? Let's see if there's.
You didn't make a ton of trades today. You weren't that active. Like I said, it didn't seem like there was a lot of opportunity.
No, I only made 40 trades, and I had a little trouble in Reddit, but I had a lot of trouble in Oracle, and that's about it. Oracle now, I'm short the 295 calls and the 440 and the 340 puts. And I guess for the rest of the week, what I'm hoping is Oracle just lands right here, I guess.
Yeah, and volatility come out a little bit.
Yep. No hero crap, Oracle.
Yeah.
Stay right around 330, 325 and just close there. And let us escape with our dignity. Let us escape with our pants still on and our dignity, and we'll move on.
You remind me of that movie when they're arresting somebody. The guy says, "Let me put my pants on. Let me put my pants on."
They don't let you put your pants on.
As they drag you outside.
Nope. They don't let you put your pants on. If you're about to be arrested, do not go to the door naked or in your underwear, because they will not let you put your pants on. It's a little word of advice, okay? If you're harboring a fugitive, little bit of advice.
If you're harboring, always be dressed. Always be dressed.
Yeah, or your mom used to tell you all the time, make sure you have clean underwear in case you go to the hospital. I never understood what that meant.
I know. We had similar moms.
Yeah. I don't think moms say that anymore, but that's what they used to say.
No, yeah. That's what they used to say. I think they still say it. I don't know. Maybe they're a little bit more optimistic.
A little more optimistic. Yeah, because kids today, if they go to the playground, they have to wear a helmet. They have to. We had playgrounds that were actually over concrete. Now they have playgrounds today. They're like you can, they're soft.
People that catch you.
They catch you. They have people that catch you. Make sure you take your catcher with you. Okay. And God forbid if you go to the park with your kids and you come home with an injured kid, you get thrown out.
It's true. It's true.
My dad used to come home. He'd be like, yeah, he needs a couple stitches. He broke his head open,
and rub some dirt on it.
Today, if it was my wife with a kid, she goes, "You come home with one of those kids injured, you're on the street."
Don't come home.
Oh,
was it ACKY that stock? Well, that was a different one.
ACKY.
ACKY, Vista Shares, Target.
No, that's not it. It was Klarna.
I don't know. Sorry. You're talking about Ackman's stock, right?
Oh, I couldn't care less about Ackman's stock.
Oh, I don't know what you want then.
Well, Klarna.
What's that?
Klarna.
Oh, Klarna. Sorry.
I don't know the symbol. I'll look it up.
I don't think you can.
Can't be that hard. Obviously it is.
Klarna stock is KLAR.
Got it. I already got it.
No, you didn't, or you would have said it. You're fibbing. $46.81.
I'm pretty sure the stock came out at about 40-ish?
I believe so. It traded into the high 50s.
And then somebody woke up and goes, "What the hell's going on here?"
45 million shares traded so far. No, no options, obviously.
Yep. Well, as we rally into the close, which I didn't think we would do, again, this will be day 4 in a row rallying to the close.
This will be the third green bar, but it could be the fourth rally of what looks like 6 up days in a row. Sadlov.
I know, but this is the 4th straight rally into the close.
You know what that means for tomorrow?
Rally into the close.
Absolutely nothing. Absolutely nothing. Hey, breaking news. Shark Jeev is back from China, Sadnov. Just want to let you know. He made it home safely.
It's a long way.
It's a long way. It's a long way.
I don't know. I don't think, China's not on my short list. It's not on my short list. I mean, if I ever go there, great, but I've never been there. And there's so many places I think I'd rather go. First. I mean, do you want to go to China?
No, I get it. No.
Yeah. I mean, I don't think I don't know how many more around the world trips I have in me, but I don't think China's on the short list. That's the only thing.
Well, not on my short list either. I agree with you.
Yeah. Yeah. All right, let's do this. Let's see, what time is it? We got 2:50. We can quickly go through. There's no earnings trades tonight.
Yeah, no earnings trades for tonight. GameStop, Oracle, and Chewy were the night before. The only one we haven't talked about was GameStop. It's been up around $1 all day long.
It did nothing the whole day. Chewy was the ugly one. GameStop was inside, and Oracle was the really ugly one. If you had an Oracle position on, people wrote to me and said, "What did you do?" I just rolled the puts up.
Are you inverted now? I haven't looked at you.
Oh, yeah. I'm inverted by almost $50.
Yeah.
I'm a $45 inverted. I know.
KLAR IPO'd at $40, you are right. Above the $35 to $37 that was expected. Never traded there unless it was on the opening.
Yeah, so I'm going home pretty short S&Ps. I didn't cover any today. I only covered what I sold today, but I didn't cover any that I've been short. They got down. They never actually went negative on the day.
Even the S&Ps? No, the NASDAQ, the Russell, and the Dow did.
Yeah. I was hoping the S&Ps went negative by about 20 or 30 handles. I was going to say that it looked
we haven't seen that in recent history.
What I was going to say is that when they got back up to those record highs at 65, 50 something, whatever it was,
they sat there for a while.
They sat there and they eventually sold off to 65.20. So they were down 30 off the highs. And I thought, okay, maybe they take them down, Virgil, type thing. But they
volatility upticking for the first time, ever so slightly. Give you any hope?
I think today's number was about as safe and non-eventish as you could have. And with Oracle doing what it did and everything else, I was surprised at any point today the NASDAQ wasn't super strong. But, again, you had Apple and a few others.
Sure.
Yeah, I think there's...
You got CPI coming out tomorrow.
Yeah, I know. I think there's a
jobless claim,
reasonable amount of risk tomorrow morning for just a trade.
You're going to sell rallies tomorrow?
If you have a chance.
It'll be okay if we miss them.
If you ever have a chance again to sell a rally, I don't know if you ever will. Yeah, I don't know if you'll ever have a chance to sell a rally. What's so weird is that you laugh about this stuff, and then once you have a couple of down days in a row, you're like, I hope they rally so I have a chance to sell.
Of course. You always want what you don't have.
Right? Maybe, yeah. All right. Well, let's see what we got here. We can, because we have no earnings place for tonight, which is good because I can't handle another earnings night back to back. And
so you don't hurt yourself, yeah.
So I don't hurt myself. I'm not allowed to play with knives or guns today, just so you know.
I don't
No
blame you.
knives or guns.
I don't blame you.
Because I don't feel like I can do that without hurting myself. And
You want to go? You want to go to the overtime crew?
yeah, but I don't think what I was going to say is I don't think that there is. When I look at this market, I don't think that there's an overnight play for, like for CPI. That I just
We're in a holding pattern. Nothing's going to happen overnight unless they leak the number to the people in the know, like people like you.
Oh, I got the number. You want it?
I wouldn't know what to do with it, Thomas.
CPI? What do you want to know?
I would
Consumer Price Index. I'm going to go 99.732.
I wouldn't know what to do, but one of my guys like Chris Ilya might. What's up, gentlemen?
Gentlemen, how goes it?
Good. How are you?
Much better now that stocks have come off the highs.
Yeah.
Okay, forget that. CPI is 322 right now. If it comes in at 99, we got prices are down 67%.
No, I have no idea what CPI is. What is it supposed to be?
It doesn't matter, Tom. It's very unhealthy that I know.
Oh, okay. I think it is. If I had known what CPI was, there was something wrong with me. So I don't know.
And there is with me. So there you go.
There you go.
And we got Mr. Radigan too. Mr. Radigan, how are you today, sir?
Well, I was better earlier.
Dylan and I had a discussion.
I'll bite. Care to elaborate?
No, I can't. Just take me at my word.
Okay, I take you at.
So Dylan and I had an interesting discussion about the state of education.
When I was better.
What?
When I was feeling better, yeah.
Oh, okay. When he was feeling better. So we had an interesting discussion. So if you want to go back and listen to Truth or Skepticism, you can comment. So boys, today's PPI was overshadowed, obviously, by by everything that happened in Oracle overnight and by this huge kind of very strange move in the NASDAQ today. Some stocks up huge, other stocks down huge. What the hell's going on? I haven't seen that kind of,
Kind of the fringe players taking over here a little bit, Sosnoff. I mean, on top of
well, Nvidia's not a fringe player. It's up 6.
No, and no, and neither is Microsoft up, $2, or Palantir up $4 and change. But you do have Amazon down $8.
That's not a fringe player.
No. I'm going to get to them. The ANETs of the world up $9. ETN, which is Eaton Corporation, up $360. Stocks that make up the indexes that usually don't kind of bring us to the promised land are doing that a little bit today. So I don't know if there's a rotation into these fringe players or not. I don't think so. But that's what helped the NASDAQ, even though NASDAQ is basically unchanged.
I think it's interesting that you get this kind of news from Oracle, and it's such a big, huge move in the stock itself, but the index ultimately can't do anything. That's
from all-time highs.
That's curious.
It can't do anything from all-time highs.
This guy. So he'll never be happy. This guy.
They got the inflation data they wanted. They got a great AI story. Shouldn't we at least be managing an up day?
Ilya, Chris, I'm feeling bad for you here that you have to listen to Ilya like this, but I'm going to tell you, you're my new friend Barry. You're not happy unless you're unhappy.
I would be much happier if this thing were actually falling, because then I'd have to think about what I'm going to do for CPI tomorrow. But it is curious, that you've had for a month now all kinds of good news, and we're still in a range.
Well, we're at the
high end of the range, the highest end of the range.
Right, but
Can I start drinking before overtime, guys? Tom, Tony, please.
Ilya, I have to give this to Tony. This is not a range, okay?
I mean, we haven't gone anywhere since August 12th.
Well,
that's not even a month ago when we were at highs. A month ago.
Right. So for a month, we've gone nowhere. Microsoft, all of the Mag 7s beat their earnings. Meta blew them out of the water. We got explosive news from Oracle overnight. All the inflation data has gone the way of more Fed rate cuts. What's there to be upset about? and we can't make a high for a month? This is a strong market?
Yes, it is. It's a strong market.
I give me one piece of bad
dude. I'm bearish.
Or bad news of any kind.
I'm short. This is not a bad market.
I mean, how does it not go up then when all the news is good for a month straight? How does it? How doesn't it make a new high?
Get him checked out, Sauna. I thought I was going to be the first one. We got to get him checked out.
I may have to have him institutionalized. I don't
is
know.
perfect.
I don't know if our insurance covers it, Ilya, but you need help. All right, Chris.
This
There's
is,
any sign
by
of a
the
top.
way-
This might be it. That's all deriding Ilya
By
for
the
being
way,
mentally
this
ill.
might be the top right here.
Okay, no, but
Sentiment-wise.
there's the breadth in this
I love
market
this.
isn't good today. The breadth in this market isn't good today though. Like 53% of stocks in the NYSE are down. Equal weighted Nasdaq is underperforming the market cap weighted. But also today's not the kind of day where ahead of a CPI report people lay out capital. So do we really care about today's price action?
I don't. I mean, I cared about some of it because it wasn't very good for the good kids, but there were some brutal stocks today. So I care about the price action. It's just, the overall market. It just, this is the fourth straight day where they're basically goosing them and closing them on the highs. This is a tough one.
Yeah.
If this were not the day before CPI, which is obviously a thing that people don't want to front run to at least some extent, I would be a lot more confident. I don't like that there's still event risk tomorrow because you might get a moderately soft CPI number and they run with it because the event risk is out of the way. Maybe, but I don't know. You can't seem to find enough good news to make a new high for a month. That seems like it's struggling for dear life.
If this is struggling
You're right.
for dear
Even
life,
the S&Ps were only up 400 this year. It's not. I mean, it's not like they're blowing
This
the roof.
year, no, sure. But in a 45 DTE cycle, are you a buyer or a seller here?
Lord, give me the strength for the next hour.
I know I'm a seller.
I'm gonna let you get that straight.
I might have to break out the procession of the rosemary if this keeps up.
I mean, if this is struggling, I don't want to see it when it gets ugly.
Exactly.
Ilya's right. They sold off $2 right on the close there. They're only up 18. We're gonna take a 90-second break and come back.
Ciao for now, boys.
With the overtime.
Here, bring out the rosemary.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade. Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like in horse racing, they would call it wire to wire. And in trading, they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is. Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Soft PPI, but markets give up gains. Precursor for CPI tomorrow. It's Wednesday, September 10th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, Here to take you through the rest of this hour as the futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade, on the website, tastylive.com, come on over to YouTube. Tell us what you think of this market today. Were you trading Oracle? I wasn't. Serious FOMO over here, Ilya, as a bull.
Yeah.
Dylan, talk about the AI supernova. Their revenue forecasts the next few years are outrageous, and the market rewards them handily with a near 40% gain. Other than that, though, a day of distribution. Not exactly a strong market all around. While the S&P 500's up and the Nasdaq's above water, technically, it's only by 0.01%. Otherwise, the Dow, the Russell are leaking lower here. Crypto off of its highs. You had gains of north of 2% for both BTC and ETH earlier, and now that has been more or less snuffed out. Silver did rally, gold did not. The dollar looked like it was heading into a bit of weakness, and by the end of the session, reverses all. The Aussie does run a little bit, but we have an ECB rate decision tomorrow. And of course, there's just a lot of crazy news going around at the moment. So, Dylan, Ilya had his time on last call to tell us why we're all idiots.
This guy.
Oracle here. I wouldn't have gone as far as Tom and Tony would have gone because I find myself whenever I deride the Bears like that, I ultimately wear it on my face or in my wallet. But Oracle got as good as it can get. Best performance since 1992. Is this just further evidence of your supernovas?
First of all, obviously, yes. Second of all, what part of the word supernova do you not understand? Do you think that the supernova is some sort of modest and humble phrase to represent a marginally interesting adjacent market phenomenon? Or do you think it's a sort of phenomenon that can cause multi-decade, multi-gajillion-dollar technology companies to behave like pink sheet stocks with gap opens that moves in the hundreds of billions of dollars in a single day? I mean, despite the pleasure that I take sometimes in giving Ilya a hard time, I think he actually brings up a really consequential point, and I almost wonder if we're going to see a lot more of it now, which is that, okay, like we've obviously a few years ago, we saw the NVIDIA madness.
Sure.
Obviously, we saw the Oracle behavior today and the gap yesterday after the close. But it is, I think Ilya asks a very important question, which is how is it that we can have so much economic velocity into the equity value of the companies that are directly exposed to the so-called supernova, at least as some people call it, and have it basically have little or no ripple effect beyond itself? And is that in and of itself a red flag that really what AI represents is the largest wealth consolidation in history into a world that has really little or no benefit to anybody else? Is it sort of the ultimate indictment of late stage capitalism where capitalism, which is supposed to increase if the three of us create something of value, it's supposed to increase our relative wealth in a commensurate way to the amount of value we create for others. So if we create a cure for cancer and we cure cancer, that has a big value for a lot of other people. And so as a result, because we cure cancer, we accrue a certain amount of additional value for ourselves. And then you're like, oh, why are Dylan and Ilya and Chris so rich? Like, oh, they cured cancer. Oh, well, that's nice. They helped 7 billion people. And other people received value from the capital that we use to cure cancer. That would be sort of the idealistic version of capitalism. The current expression of it is almost like, how much money can I extract from the system for my own personal enrichment, either to the detriment of everyone else, or at least with no benefit to anyone else. And that, to me, I forget the moral or the social aspects, which are substantial and troubling. I just wonder if the stock market is actually reflecting the social and moral aspect of that and showing that, okay, this is really good for Oracle, or this is really good for Google, or this is really good for Meta, or, pick any of your favorite sort of supernova names, but it has no value for anybody else. And if anything, it's a liability. And you could make the case that if this was truly valuable beyond those who own the rights to its immediate deployment, that the market should be behaving in a way that is more broadly participatory, and you're not seeing that.
Well, and one might say that it's not that the problem you're describing is the mismatch between what the supernova is eventually and what the supernova is now. And this sort of comes back to this whole conversation of what is it that we're watching? Are we watching the broadening tide that lifts all boats? Or are we watching the sort of build out phase getting ready for the tide that lifts all boats? And for now, the people making all the money are the people making the preparations, which is why it's not a broader story. And so maybe it's a time thing where it's, well, the supernova will be the supernova eventually. But what this is for now is the, as we've been calling it, the picks and shovels phase. This is the .com bubbles telecom build out before then the 10, 20 year sort of growth of the internet that uses those pipes and broadens everything out later. And is this then sort of the most kind of straightforward argument for saying, well, okay, MIT is telling us companies aren't making money on AI, but someone obviously is, like Oracle, like Meta. Are they making money on building what will be later? And is this why it's not broadening? And is this sort of what the setup is for a .com 2.0 type of thing, which has happened with every major transformative technology like this, that essentially resets valuations, and then you get the long arc, which, by the way, I am fully on board with. I agree with Dylan about the supernova-ness of this whole thing. That isn't the question for me. It's, is the market valued correctly for what we know about it now? Or do we need this kind of a reset of valuations before the long arc commences? Much as we did the .com bust, much as we did the blow up in railroads, much as we had the blow up in South Sea warrants, whatever, name a bubble that ultimately turned out to be the real deal, just on a longer view.
I mean, the question is whether or not today's price action actually matters.
Yes.
In the grand scheme of things,
Fair
obviously not. No single day matters at all. But this is a market that reacted somewhat favorably to PPI.
Very
coming in
favorably,
soft.
and exactly the way you would expect. Stocks up, bonds up, rates down, dollar down. Gold was a little circumspect, but that one was the odd one out.
And the
everything
biggest
else fell exactly in line.
The biggest contribution to PPI, Dylan, producer prices, was portfolio management fees, which are directly tethered to the level of the indexes, right? When the market goes down, the amount of fees that you're paying goes down, relatively speaking, because it's based on assets under management. So higher index level, higher portfolio management fees, to think of it simply. So the reason why...
And the biggest downdraft was the trade services component. So wholesalers' margins, again.
I guess the question is, are we going to be looking at a hot CPI report tomorrow?
Maybe.
Right now, the Cleveland Fed's pointing in for one, but does it matter at all?
We are. Let's just, obviously there's inflation. The tariffs, I mean, just walk outside, okay? Go to the grocery store. Let's assume that the CPI at the very least will not be modest. Does it really matter when you know you're going to get rate cuts anyway?
I would argue that it does, because the rate cuts aren't the object of speculation.
Oh yeah, tomorrow, 34.98 points priced into the end of the day tomorrow. And yes, this is less than what we saw the day before the Fed meeting, the day before non-farm payrolls.
Yeah.
Which I'm saying, you know, you're going to get rate cuts. So even if it is a hot number, who cares?
Well, this is the whole thing. I think if you get this now, after this PI number becomes an interesting conversation, because if you get a hot PPI number, it'll be why did you get it? And did it come from the good side more again? One of the interesting things in this PPI data is, yeah, okay, the PPI data overall surprised on the downside. Why? Because wholesalers' margins got squeezed. Meanwhile, the goods side of the ledger went up for the fourth consecutive month. It slowed, but it went up again. So this data might be telling us, interestingly, that the tariff inflation thing is happening faster than wholesalers are able to pass it on to consumers. And that's why margins are getting squeezed. Because we watched them pass it on in July. It's not like they have any qualms anymore. So that's not a good thing for American business. It's not a good thing for earnings. It's not a good thing for any of that. So we'll see, I suppose, where the CPI uptick is going to come from, if it's a meaningful uptick. And if it's happening on the goods side, then you maybe extrapolate out and say, okay, the Fed is not going to endorse the market's dovishness for next year when they update the forecasts next week. I think those forecasts are the real news. The rate cut is a given, unless it's something weird like a 50 basis point cut or some such thing. But if they don't update the forecasts, if they say, no, we're going to stay at only a quarter point cut for next year, I think the markets hate that.
VIX is pinned at 15.35, so it's not exactly the sweetest of sweet spots. Below 15, low volume, high technical drift. Don't do anything other than be long the market. So it does reverse a bit today going into CPI tomorrow. That said, this is still nothing territory, Ilya, right?
Yeah,
there's no material difference between a 14.99 and a 15.35 VIX.
No.
So Dylan, I think the observation there, if we know the rate cuts are coming, and going back to the S&P 500 options chain, the Fed has told us, big picture, 2018, 2019, their literature suggests that the effects of Trump's first trade war were transitory. Is that the right word to use? But inflation goes up on a path, it adjusts higher, then it continues along the previously scheduled programming. How many months have we been saying that here on the show, guys? And so to that point, if that's what the Fed thinks is happening, and there's clear evidence of weaker labor markets, then inflation is going to be a small bump because aggregate demand is coming in. And PPI today in deflation territory kind of gives people a reason to think, yeah, if it's hot, who cares? If it's hot, who cares? Because we're still getting cuts. Dylan, I saw some posturing today, though. Folks like Rick Ryder over at BlackRock and David Zervos with Jefferies were saying that after today's PPI data, the Fed needs to go 75 basis points.
Oh, for the love of God.
Is that just people trying to get a job?
That's just trying to get headlines. That's nothing more than old school media manipulation. That's nothing more. That's like me saying on the handoff, I'm not that. It's just a standard issue provocation.
Seems like it. 75 is not being priced in at all.
Deserves any sort of, it should be treated as what it is, which is just a way to grab attention.
But the question is whether or not we could get 50. That is the more realistic of those two outcomes. The question isn't like
maybe we could get 50.
Ilya, if the Fed saw a run rate of jobs growth that was not 147,000 jobs a month, but was 71,000 jobs a month through March 25, would they have already cut again this year?
I think you get the sense that probably the answer is yes, but and by the way, let's just be very clear. The markets have been telling the Fed they should have been cutting already. This is why you get from May onward, which it's really like the symmetry in these markets is amazing. Take a look at the continuous contract for ES. And let's just go back to the beginning of the year. Let's just do a little narrative making here. So if you back up and you say, okay, here's the top in February, go ahead and put a horizontal line underneath the range that got broken down at the beginning of the year. There it is. Now, when you recover from the Liberation Day kerfuffle, right? You're somewhere sort of going into June in the second half of May. So you've erased all of the breakout. That's the point at which you reset Fed policy expectations from 50 basis points, where they were in that range at the beginning of the year, back to 50 basis points. It has since held about there, give or take 5-10 basis points in a direction, and hasn't gone anywhere. In other words, the markets went, oh, that was a spook. Okay, reset. Since then, what has been responsible for the remainder of the move higher from late May into these record highs where we've been hovering for about a month now? It's been a build out in 2026 rate cut expectations that have gone from essentially next to nothing in the sort of vicinity of, let's call it 25 basis points. In May, the outlook for next year was just about hovering in the vicinity of, let's call it 35, 40 mid-May. So one cut with a chance of two. Where are we now? 75 basis points, at least. And so the object of speculation has been next year for a while now. And this build out has been the markets screaming at the Fed, you should be cutting already. You're worried about the wrong thing. So it's not like the Fed hasn't known this is where the markets have already been going. But the Fed has to operate on the data that it has, I suppose. It has to somehow justify on the basis of BLS data and BEA data, whether it's CPI or PCE or the jobs report, as they present themselves. But the markets have known this. This is not shocking. And so the big question for me is, if the huge rise in stocks from about mid-May onward really is just about there being an expansive rate cut cycle that's been increasingly priced in for next year, what happens if the Fed doesn't endorse it?
Oh, and that's a lot of thinking for me for one day.
And
Do they need to?
And we know what thinking does.
Does the Fed need to endorse what the market's saying, or does it need to give the market a hint that it's going to be
just a hint,
ameliorate their concerns?
Just a hint. Just a hint.
So how low is this bar then, right?
50 basis points for next year.
So
markets got to go up. Markets got to go up a cut.
They got to go up a cut. You go up 2 cuts, you go up 3 cuts. All of a sudden, the market says, "Oh gosh, the Fed is late."
Now you freak everybody out.
They freak everyone
you go
out.
Up a cut.
No one wants that. But
yeah, you go up a cut. You go from 25 basis points to 50. Markets are going to think, they're moving in the right direction. They're just slow and annoying. They'll make it 75 basis points in December, whatever. Fine. They need to see motion, though.
Could we talk about how bonds look like they're bottoming? I know tariffs and yada, 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 but chart's a chart, Elia.
I mean, I love it. This position is working great at this point.
No matter how you slice it, ZNBZB. Dylan, if rates go down meaningfully and we don't see a dip into recession, which the Atlanta Fed GDP Now update for today tax us on at 3.1% for the third quarter. You know, a month from now, Ilya, you and I will be having the conversation. Hey, is this GDP tracker the ballpark? Right now, we still look for just the directional impulse, but it's holding up at high levels. So if this conversation's going on October 10th, it means that we're probably looking at 3% GDP for the third quarter.
Yeah.
So the Fed gives us 25 or 50 basis points of cuts, and we still get that 3% GDP. What wins out? The concern And Dylan, you first. What wins out, the concern over forthcoming recession, or is this going to be a market where we're still innocent until proven guilty, until the boogeyman comes and scares everyone?
This market, I believe this market and maybe this will mark the top. So call your friends, call your neighbors, call even the people you don't like. I believe this market is invincible. I believe any decline in this market should be bought. I believe the combination of the rate cut dynamics and the supernova make a material, long-lasting decline in equity prices a historical relic. I also believe that the robots, which are now fueled by a never-ending series of buy orders from mindless, stupid money that just comes in every day through the 401k and retirement system, creates an automatic bid in this market. And the combination between the financialization of the retail environment to institutionally create a never-ending flow of buyers, combined with a central bank that will intervene to the point of trillions in money printing in the event of any legitimate catastrophe, combined with the supernova, render consequential declines in equity values a thing of the past.
I love hearing that.
I mean, if that doesn't mark the top, I don't know what does, Ilya.
Like I said, I love hearing that.
Even I want to get short after that.
I love it. any sort
but you know what I'm saying is also easily at the surface is very easily viewed as true.
Yes. And I think it's very easy to have hindsight bias in this sense, because it's not like the market is up for reasons that don't make sense. It's up for reasons that do make sense. And so it's very easy to logically look at this and go, well, none of the reasons have changed. So why wouldn't we just keep going? And that's the same question that I ask myself when I look at this and go, well, we haven't really gone anywhere in a month, but all the news is good. And all of it continues to feed those things that have gotten us this far. So have we just reached a point where everybody that had to be long on these reasons is already long? And there's not a place to go near term. Nobody is saying that, certainly I'm not, that the promise of AI is not real. Of course it's real. That's not the question. But all of the kind of things that people sort of say, oh, well, the Fed, easy money, blah, 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 blah. Let's go back to 2022. We don't have to go far. The Fed goes on a massive rate hike cycle, the biggest one in 40 years, and the stock market's down all year long. So we don't have to overthink this. We know what happens if the market doesn't get the cheap money that it wants. And we know that this Fed has no issue taking away the cheap money if it so deems, including in back-to-back 75 basis point clips. So the question for me isn't that the AI thing is bad, wrong, a false dawn, all of those things. No, it's none of those things. The question is the market done baking in and extrapolating that narrative for now? And is that why the indexes are so soggy? I mean, sure, they're soggy at record highs, la-di-da. Well, the market is...
Now listen, you're being a little bit...
the market, what kind of an engine is the market?
When you're saying la-di-da to the world's largest capital market, a multi-trillion dollar, the deepest and robust,
but exactly right, yes.
Significant reserve of resources known in the galaxy.
Shouldn't it be rallying then on all of this good news?
I mean, it also has the tariffs. It does have It does have, in the face of a slowing economy, in the face of a nutbag president with tariffs and all the rest of it, I would say
hasn't held it back since April.
Well, but we don't know how good it could have been were it not for the nutbaggery, do we? We can't live in a second.
The nutbaggery is a strong headwind. There is no question.
So, I mean, we don't know what it might have been if there weren't so much nutbaggery.
Sure. I think we learned, though, that, let's call it from April onward, the market has significantly discounted nutbaggery as a threat.
But we still don't know how much more robust the economy would be if it was benefiting from the velocity of lower cost of goods.
Of course,
because
no way to know.
The cost of all operations was raised by 15% or more by
no way to know that.
The nuts in the bag of the region.
Of course. For me, it's simpler. It's obviously from April lows up until, let's call it, mid-August, we rallied up a storm. And since about mid-August, the velocity of the move higher has basically gone to nothing. And so the question for me is very simple. The price action liked it all and now seems to be much more circumspect. But the news hasn't generated anything that you might point a finger at and say, well, this is why they're circumspect. It's not like we grew a new war. We haven't. We have the two that we were paying attention to. It's not like the president has done anything materially different on tariffs. He's been doing the thing that he's been doing. It's not like the Fed has become less likely to cut rates. No. Conviction has been greater. It's not like the earnings from these names have gotten worse. No, they've gotten better. In fact, Meta was explosive. Oracle, obviously, overnight is an avalanche of AI optimism. So why isn't the price action responding commensurate with the news flow when it was obviously very happy to be responding over the preceding 4 months? And what does that say? Because the price is always right. We can make any kind of argument this way or that, la da da, but the price action is the price action. Market's going to do what it wants to do. And what it's not wanting to do is make a new high, especially for the NASDAQ, for a month now. Why? That's my only question.
We're allowed to have periods of distribution where people take turns being the leadership group.
Do we have
NASDAQ
that?
The NASDAQ was super hot and charged out of the gates of the April lows, and the S&P 500 closed at a new all-time high today.
Closed, yes.
Now you're pissing him
break
off.
the high.
Now you're really creeping up on it now, Ilya.
I'm just saying, what is it that's wrong?
Nothing.
I mean,
the whole point.
Are you looking at a different chart than I am?
No,
because I think we're looking at the same one.
I'm long, yes, and it closed at a new high today. As a bull, that's what I want to see happen. New highs on the close.
It couldn't even close above its swing high from 3 days ago.
Gosh.
I'm not saying that this market is collapsing. It obviously isn't. There's no question. My question is, you have all the positivity you could possibly want, including over the past 24 hours.
What's all the positivity? This isn't a market of positivity.
Not a positive piece of news for this market, and neither is PPI.
Yeah, no, that
sure
is PPI
like it is.
Is a sign that we're getting deflation a good thing, broadly speaking?
I mean, the markets rallied on the data. They couldn't hold it, though. I'm just talking about the price action. Forget what you think, what I think, what Dylan thinks, what anybody thinks. Let's not think.
Let's not be
look at the price action.
Let's not be talking about thinking.
Yeah, just look at the price action by itself.
Line closes at highest level line closes at ever. Ilya?
Do you not? I mean, is it not obvious that the change in momentum here is fading? Because you can look at your slow stochastics here. You could look at your MACD. They're nice little lines that measure momentum. Are they pointing up or down?
Well, stochastics just got back to overbought as we broke out, which is nice. But I would argue that during the sell signal period in MACD, right, as momentum comes off, we get a sell signal here, on the 19th?
And this
at the
is
close
NASDAQ now.
Yeah, this is NASDAQ. 23,469 is the close that day. We got a buy signal back yesterday at the close at 23,874. So if you went short on momentum falling apart from one of these indicators, you actually lost money between the signals, which I think when you see that happen in a market, right, it shows you that we're correcting in time, not in price.
I mean, maybe. I'm certainly not opposed to that as an idea, but we don't know it. And we don't know it until we break the high. So what's the risk reward thing to be doing? You and I don't know if it's correcting in terms of price or if it's correcting in terms of time. We know that momentum relative to where we were rallying off those April lows has died. And the question is, has it died in a way where the market is going to consolidate sideways, then break higher? Maybe. Not opposed to that idea at all. But it hasn't occurred yet. And instead, we're getting the market unable to rally on unquestionably good news.
So, Dylan, there is the whole point when the chat has called this out before, when you, me, Tom, and Tony all get on Ilya's case, and I have that stupid smug look on my face, which is a direct quote from someone in the chat.
Especially when you're wearing two shirts.
I'm not wearing. I've upgraded to a sweatshirt. So
same principle. I don't know what to tell you, pal.
I'm wearing 3 pairs of pants today, but you'd never know it because you're too distracted by my 2 shirts. Right? So we obviously, so we CPI comes out really. What's the worst case scenario for CPI tomorrow? Like, let's just get a little playbook tomorrow. If CPI comes in on the nose,
there is no worst case scenario.
So if it's, let's say it's 1% month over month. Right, we're gonna get a 4% year over year reading. All of a sudden, we jump from 2.9 up to 4. That's not going to scare the stock market.
That'd be bad.
I mean, you're being extreme.
I am. So, like, where's the line in the sand? If we ignore anything, we just ignore anything and everything. Buy the dip no matter what.
We know they're going to cut rates. What's your problem? Just calm down.
Yeah, you're right. I mean, after all,
it's going to be difficult, but it's like they're going to cut rates.
No, they're going to cut rates. There's no debate there.
What are the best hedges against inflation?
That's not a bogey for markets.
What are the best hedges against inflation? Real estate, stocks, and apparently gold. That's something that we keep hearing about. Although gold is about to flip the S&P 500, which is really fascinating. It might actually have been outperforming the S&P 500 since the October 23 lows. Ilya, this is a small pullback today, but we do bounce up and basically close flat. 0.1% is nothing. Is the gold rally ongoing? Was this the setback?
Get off this boat.
You're still holding on long, which is a delight to hear.
I'm long gold. I'm long bonds. Both are working tremendously here, and stocks haven't gone anywhere, which on the whole makes today a very kind of successful and profitable day. Because if your position in stocks has been the risk reward is better to be short at the highs than it is on the other side, the market hasn't punished you for that view because it hasn't gone anywhere. And in the meantime, if sort of the flip side of that was being long dollars, which are still, despite some recent setbacks, attempting to bottom from the lows in July and haven't revisited or even thought to revisit those lows, except for the Aussie, admittedly, today, where they failed. But if the thinking has been long bonds, long gold, long dollar, all of those things for the past, let's call it 3-4 weeks, are working. Gold and the bonds explosively so, especially today.
Bonds, gold, silver, flagging. Dylan, all right, now's the time. I want to point out the technicals in this. I did this with Thomas earlier today, but we go to a 4-hour chart and let's look at the number 41. 41 being a line in the sand where Ilya, bullish engulfing bar key reversal.
Yeah.
Okay, pin bar, bullish engulfing bar key reversal, bullish engulfing bar key reversal. I'm going to go out on a limb and say 41 is the line that we should respect in silver until, well, at least for the month of September. Okay. With that said, if we break through this recent range, we're talking about 41 up to about 42. We want to do it on a closing basis. We can say 42, a buck. $43 at a minimum seems to be in reach right now for silver prices, assuming this is a bull flag. If this is a bull flag, right? Breakout, consolidation, here's your flag pull, there's your flag forming. It could be a double
I don't
top.
think there's anything unreasonable about that.
Right? So if it's below 41, you treat it like a double top, which means you look for a flush to 40, and that brings you right back into the highs you had in July. And if you break through 42, you're now looking for a move up to 43, just continuation and simple measurement. So Dylan, volatility is low. It's a 12.2 IVR. I'm still playing in the long silver market with my own 42, 43 call spread here, which if you were to put it on today at 48 DTE, it's still almost a 2-for-1, risking 1 to make 2. Is that something that I could entice you in, even if this isn't a typical tasty kind of trade?
I believe you can. I believe you can. Yeah, you can. I'm feeling very sort of risk on these days, so I'm not hard to entice into much of anything. I'm very, between the metals move and the supernova, I have very limited issues with market risk in either one of those things at this point in time.
Yeah, we got that company memo where Tom said that we have to start calling you Dylan Dangers Radigan, like Austin Powers.
That's me.
So I assume that's why that conversation's been going on.
That was why I think it was in the employee handbook.
It's incredible how important it is for the business, generally speaking.
Central to the entire undertaking.
It's the reason why we keep the lights on. Okay, so we were talking the past few days about a move through 114 here in Bitcoin, talking about a potential turn. You're not going to see it marked on the close here on the daily chart, but with the post-close move, we've started to poke up through the 114 figure here.
Yeah.
So gold, silver, Bitcoin's now bouncing back, right? It's 3.5% off the lows since the start of September. Ilya, is this all anti-fiat posturing? Is this all, I know the dollar is not losing its place, but incrementally, is this more evidence that maybe the anti-dollar trade is getting back on if metals and crypto are finding their footing again?
It's interesting that gold is doing what it's doing and the bonds are doing what they're doing. And crypto obviously looks very, very different. I mean, yes, of course, we have a nominal kind of creep higher in crypto since the beginning of September. But if you had to kind of rank your anti-fiat sort of animals, and let's say we'll just take gold and Bitcoin as sort of versions of an anti-fiat animal. One of them has a clear sort of risk appetite exposure, and one is gold. Which one appears to be a chart that's pointing from the bottom left to the upper right, and which one is a chart that appears to be the opposite? And what does that then say about the state of risk appetite? So if you take two assets and you say, well, this one is sensitive to risk sentiment, and this one is just anti-fiat. Just anti-fiat is just killing it out here. And Bitcoin obviously is not. Now, maybe we got a breakout today. It's a little bit narrow for my taste. If you take a look, I think, at a daily or even a weekly chart, there's a really sort of clean line in the sand on this thing. And you're right, we might have to go to the continuous contract here. On a daily or a weekly, I think you can very clearly see kind of where the underside is that we're testing. It's tough to say that it's broken. It's getting there, maybe, but it's still kind of in a fuzzy spot, which is not, I would think, unusual. CPI is tomorrow. That's a big input into all the things that Bitcoin cares about, be it anti-fiat things or risk sentiment things. So maybe this is a kind of early nod. It's certainly doing better than stocks today. There's no question about that. We'll see. But it's not doing nearly as well as bonds are or gold. And the dollar is holding up. So I don't really put the metals and this in the same box. I put this and stocks in the same box. Maybe this and silver are a little bit more adjacent, because silver is another one of these things that has kind of both sentiment things and anti-fiat things going for it. And silver is not looking as good as gold either. So if you wanted a little bit of confirmation there via a different asset, it looks like in those things where anti-fiat and sentiment are mixed, the sentiment is the drag.
I see a market that hit former highs and broke through back in July and has pulled back into those former highs and is now rounding out into a little bit of a former resistance turn support kind of situation. So if BTC, I mean, like that's
maybe
we're going to keep spending the money, aren't we, Ilya? We're going to keep spending the money.
It's entirely fair. The question is, where do you go here? Because just as you are retesting former resistance as support, on the top side, you're testing former support as resistance. And you have both of those lines on here. And it's tough to say whether you've kind of cleared this way or that. So this is a test, and we'll see.
It's a test. It's happening. Ethereum not quite as strong, but likewise getting a little bit of a bounce today. Once more, failing around 4,500, not quite able to climb through that zone there. Dylan, what's the most interesting piece of news in the market right now? What's the thing besides the supernova, of course, which I actually brought this up, but we never touched on it. More and more companies reporting, citing AI in their earnings, Q2 versus Q1. Infotech still 65 or so, but financials up by, just a casual 60%. Industrials, healthcare. Curiously, I found this interesting. Utilities aren't mentioning AI all that much, even though you'd think data centers would be a big part of why the utility companies have been so strong this year so far.
I mean, I guess that's kind of where I was going to go when you were saying a sort of non-AI and sort of just split the difference with you. But what is your opinion? I would say this, I'll put this question to both of you, for that matter, to the chat, of the sort of power generation, energy consumption, the sort of electricity slice of this entire thing. I forget, there's some names that I'm not going to remember right now, but there's a couple of popular publicly traded names that are really directly related to this storytelling, which they're not a cryptocurrency. Obviously, they're not a Mag 7. They're like a power generation company, or they're like a power, storage company, or a power transmission company, or that's. I'm just interested in whether you sort of get.
Yeah, I was just pulling up my list here. Yeah, so you have companies like Vistra, which was one of the top. This was one of the top performers in the market last year. Dominion Energy was another one of these companies. This is Devon. I want Dominion. Dominion Energy has been another one of these stocks that's had a pretty good 2025. We start the year near 54, up to 59. You could go over to Constellation Energy, CEG, CHEG. This is up to 320, and we start the year closer to 220. There's a few more here that were on the list. NEE, Nextera Energy, not quite as strong. Exelon, which has been my thing since the start of the year, so not quite near the highs, but certainly better than the $37 or so where we began 2025. And then Talon. These are all the big AI utility names right now, which interestingly enough, again, if you're thinking about like long equity exposure for companies that may not have anything to do with AI, I bring up this FactSet chart because energy and materials companies, they're not part of the bubble right now. Like the companies that are riding the AI wave are infotech, financial, healthcare, consumer discretionary. Everything else is still feeling it out. figuring out their footing in the space. So you talk about what companies are over levered to the narrative right now, Ilya. If I wanted to short AI, it'd be Infotech. If I wanted to get long stocks and avoid any AI headaches, materials, energy, I question utilities, why it's so low on this list. Rather, but thinking about number or percent of S&P 500 earnings calls citing an AI, Infotech, 98%. Finance, 70%. Communication services, 67%. On the other end, consumer staples, 38%, right? Materials, 31%. Jamal has this whole thing that when the staples discretionary ratio gets to a certain threshold, you typically see a reversal in terms of valuations. And, if they're thinking about defensive positioning here, instead of shorting out the index outright, let's look for some potential exposure. Could be like short puts in some of the more defensive names, which took a beating today, quite frankly. But if the market does go down, you'd figure those would be the ones going down a little bit less and have a little bit more stability. That's not my game, though, Ilya. My game is just simply staying long because I'm not thinking. I'm not allowed to think. Dylan reminds me every day, no thinking allowed.
Thinking is banned.
So at the show ends, I just sit here and stare blankly until the show begins the next day. But yeah, right. I hear you. There is part of me that's like.
I just want to go back to that sort of that set of bar chart you just had up. Isn't that what risk on looks like?
I think so.
Yeah.
I mean, for individual names, clearly. I mean, let's look at a chart of Oracle. Let's look at a chart of
financials, services, real estate, and then staples are, that's risk on in a nutshell.
Yeah, I mean, sure. When you look at the individual names, and that sort of speaks to what we were saying at the top of the show. I mean, look at Meta. When you look at individual names, it's all there. You'd think.
Well, and financials have been in the steady uptrend.
That's sort of the weird thing here. That's why it has this kind of grasping at straws kind of vibe.
I don't know. When the nation's largest bank is holding up the way that it is, Dylan, it's so hard to get bearish on the broader market when everyone is looking at banks and treating them sacrosanct like they have been.
I mean, again, put a line at the August high. Like, this is not
the August 24 high.
No. This past August high.
Because we've rallied quite a little bit from last year.
We have. Just go ahead. I mean, have we gone anywhere? Have we gone anywhere? I mean,
legendary hater, Dylan.
This is my question. Why aren't we going anywhere? And is this just a rising wedge?
The answer is we're rotating around inside of ourselves, establishing a new, unprecedented higher level for equity values that's as within a smidge of the highest possible level.
I think that's completely fair. The question is, let's prove it with a clean start of the next leg up, and I'm with you. I think that's a completely fair assessment. But it is an unproven one, or at least one that has not been validated by the price action yet. And maybe it's just a matter of yet. But it hasn't yet.
Dylan, we got a few minutes left here. There's obviously some terrible stuff going on in the news today, and Overtime doesn't shy away from stepping on the thorny topics. I'm absolutely enraged. I mean, earlier this year, we had the Minnesota State Senator, Melissa Hortman, and her husband killed at their home. And today, apparently, Charlie Kirk was shot and killed, as President Trump just said on Truth Social.
It's been confirmed now?
Apparently, which is 31 years old, two kids under the age of 5.
This is
when are we putting the genie back in the bottle, Dylan?
Charlie Kirk murder today is the latest indication of the most dire consequences of political extremism in America, and it is horrifying and tragic. And we can all go back to these different examples, including the attempt on President Trump's life during his campaign, for that matter. Gabby Giffords, to go back to the more distant past. I mean, this is a call for all leadership in the United States, whether you are a politician or whether you are a church leader or academic leader or a corporate leader, to not just advocate for moderation in temperament, but to model it in public. People do not behave as they are told, they behave as they see leadership behave. And so it is a call for all leadership in all layers of our society, from the churches to the schools, to the companies, to the government, to model a more patient, tolerant, and moderate point of view, because injecting this type of intolerant and extreme political energy, which comes from both sides, creates, on sad days like today, the worst possible outcome, which is murder. And that is a virus that must, I want to make some grand declaration. That is a virus we have the power to influence in the way that we behave ourselves, in the way that we interact with others, and in the way we behave with each other in public, starting with the president and working its way down through the entire society. So I really hope that the Charlie Kirk murder is a wake-up call for collective moderation from the left and the right.
Collective is right. Because
the
the same people that would come out here and say, well, this is a direct consequence of the ratcheting up of combative rhetoric from, let's say, the White House side of things. This is the same ratcheting up that you have in celebrating people like Luigi Mangione. There is just no excuse for any kind of celebrating of this kind of thing on any side ever.
It's a sad day for America that our political culture and our intolerance has reached such a level that murder is now part of the equation. To Ilya's point, whether it's from Luigi or for Mr. Kirk, and I think all of us, our heart goes out to his family.
Absolutely.
Yeah, I'm thinking of his wife and kids. It's terrible. And if you're shooting people in America for political reasons, you're not a patriot at all. So overtime's out of time for today. We'll be back tomorrow. Same time, same place, 4 p.m. Eastern, 3 Central. For Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. More Tasty Live after this with Ilya and Macro Money.
See you there, everybody.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you had to swap jobs with somebody else in this office, who would you pick and why?
Oh, if I had to swap jobs, I kind of like the idea. I might go for Tori's job because I really want to be the one responsible for ordering lunch. I would love that responsibility.
Maybe somebody on the other side, on the brokerage side. I'd probably swap jobs. I'd probably swap jobs with Clink. Clink has a lot of cool looking tools that he looks at day to day, a lot of that risk management stuff. It's kind of interesting to me. I'd probably be honest.
Oh, I got to go Scott. I mean, he's only here a couple months, goes back to, Arizona, plays some golf, Tokyo. I mean, that's a great gig. Why? How do I get that one?
Oh, I think Ryan Sullivan's got a great job, man behind the camera. He does a lot of cool stuff all around the office, from videography to written content, so he's the man.
Ryan, would you want Glenn's job?
Absolutely.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it. Again, they teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Stock markets get the inflation data that they wanted, at least to start, but they struggle to make hay of it. What's going on, and will we finally get a little bit more conviction when we see the same, perhaps, or at least when we get to the other side of the big inflation news coming up in the next 24 hours? That's what we are going to tackle here on Macro Money. This is Ilya Spivak, head of global macro here at Tasty Live.
And not surprisingly, we are going to concern ourselves with the story that is emerging here in the next 24 hours, the U.S. CPI report. We got the wholesale version of inflation, the PPI report today. So we'll start with breaking that down and seeing what the markets got out of it, if anything, and where things might be going next. As the CPI report, the bigger of the two and the more influential one for Fed policy expectations, what that is likely to do, or if in fact this is even still relevant. So let's begin with a look at where the markets landed today. And as ever, I took these snapshots through the settlement period at the end of the day for futures markets. So if there's a little bit of fuzz in these numbers subsequently, that explains why, but this should be fairly representative. And the thing that you're seeing here, that the thing that certainly jumps out at me as I look at this, is just how shallow these bars are for the news that we ended up with. The S&P is up not even 0.3%, a little bit over a quarter. NASDAQ is flat. Yields continue to come in, especially at the long end, down 0.9% for the 10-year. Basically standstill at the 2-year level, although we're down a bit, 0.28%. Crude oil up 1.76%, but again, that same range that we've been looking at here still broadly holding. Crude oil still hasn't gone anywhere outside of it. If we consider, we've basically been oscillating between about 61.5 and 66 essentially since the beginning of August, so over a month now. But the broader story is that we've had a midline of, let's say, around the 62 figure on the WTI benchmark, and that's been a sort of center line for a broader range between about 54 and 74, and we've been pinned at that center line, give or take, essentially since July. And so there's a swing here, but there's not really anything to make of the swing from a macro perspective where you could point the finger and say, well, this is what's going on. This is a reflection of a broader story. No, crude oil seems to be off by itself, doing its own thing, and that's been the case for weeks now. It continues to be so. Gold, nowhere. Euro, nowhere. Yen, nowhere. So the dollar a little bit stronger today across sort of the anti-fiat alternative as well as its major counterparts. In fact, just a touch stronger. And all of this starts looking very interesting in the context of the actual news that hit the wires. Before we get there, though, consider the week so far. Stocks certainly on the whole higher, about 0.75% apiece for the S&P and the NASDAQ. Front-end rates, though, a little bit higher. The 2-year up 1.05%. Gold a little bit higher, 0.7%. The dollar on the whole stronger. So that's not exactly lining up with a broader dovish narrative. And the rates at the long end, that's where you seem to have the heaviest pull, down 0.6%. So the markets, as relative to where they were last week, are not all too different and seem to be somewhat coasting. The view on equities is certainly a little bit better than how we closed last week. That much is clear. The likelihood that we're going to get a Fed rate cut next week seems all the way baked in, because if we see what's going on at the front end, it isn't following through on last week's losses. Crude oil is up, but it's up in the context of a larger decline last week, hence the range. Gold is perhaps the one that's holding up best, up another 0.7% after last week's almost 4% surge and the prior week's almost 3% surge. Bitcoin is up, but again, in the context of a 6.9% sell-off before it, it's sort of clawing its way back to erasing that decline rather than seeing some meaningful upward trend development. Now, we got a little bit of a preview of what's going on with this week's major narrative, which is, of course, the inflation story. And what we ended up with was data that meaningfully landed in the risk-positive camp, or so you would think. Unexpected decline here in both headline and core PPI for the month of August. And the numbers really quite impressive. We end up seeing that even the prior month, the July surge here, this right here, that was a 0.9% rise at the headline was revised down to 0.7. The year-on-year rates down, and the prior numbers revised lower. The headline was 3.3. It got revised down to 3.1. The expectation this time was we'd get 3.3 again. We ended up with 2.6. So on the whole, all of this gave us weaker wholesale inflation than anybody bargained for. Where the weakness comes from is also incredibly interesting. If we take a look here at the final demand services component, services but for trade services, which measure wholesalers' margins, actually rose in price. But as we can see here, we have a significant decline in that margins component. So overall services actually posted a decline, but everything but this subset of it actually rose. Now, what is this saying? Well, it suggests that, once again, either wholesalers are choosing to shoulder input costs from tariffs and insulate consumers, or perhaps the rise in those tariff costs is occurring faster than you have the ability to pass them on, because clearly margins get squeezed significantly here. This is, in fact, the biggest hit to margins for wholesalers since July of 2024. We can see the same thing at the front of the supply chain. This is intermediate demand for trade services. So earlier in the supply chain than final demand. That's right before you get to retail. And here you get a negative reading as well. We should point out that the goods side of the ledger has had a fourth consecutive monthly increase. So where the tariffs actually hit on the goods side of the ledger for the product itself, that continues to go up. The thing that's getting squeezed here, the reason that PPI is down, is because margins are getting eviscerated. And most importantly, they're getting eviscerated at the end of the wholesale supply chain. That is to say, either wholesalers aren't able to raise prices fast enough relative to what's happening to their input costs, or they are so worried about the weakness of demand that they don't want to pass the costs on, which is certainly a very interesting set of circumstances, either way you slice it. Now, the initial reaction to this data was what you might expect. Stocks popped higher, bonds popped higher, yields declined, the dollar declined. But as we can see, by the end of the day, these moves were erased, if not completely, in the case of the S&P 500. They certainly were erased completely in the case of the NASDAQ. And that's, by the way, despite an absolutely mind-blowing surge in Oracle, which you'd think would benefit the tech-heavy index. But NASDAQ ends up going nowhere. Dollar ends up higher on the day. Gold ends up erasing all of its gains. All of the strength seems to be lingering in bonds, but more so at the long end, the part that's less sensitive to immediate policy expectations. Not the part that's the most sensitive to what the Fed's going to do next week. There, yields are actually somewhat resilient in relative terms. And so this sort of head scratcher makes for an interesting kind of readout before we get into the big news, which is that CPI report. So let's consider, why is the front end so sticky and why could none of this really go anywhere? Well, here's the probabilities for what's going to happen at next week's monetary policy meeting. You can see from yesterday into today, not a whole lot going on here. Things relatively stable around that 90% likelihood mark for one cut. Notice this was the likelihood that rates would be at standstill. This right here is a month ago. And this is a week ago. That's a month ago. That's a week ago. And you can see a month ago and a week ago, there was still likelihood that maybe rates would stay unchanged. That likelihood is not on the menu a day ago, and certainly not currently. So if you look at what's going on here now, the only thing that's really happened as a consequence of what the market saw from this PPI data and sort of the range of numbers that came out was the likelihood of a rate cut at 25 basis points went from 93% down to 92%. And the reason it did that was because the likelihood of a 50 basis point cut went from 7 to 8. So the likelihood that there's a smaller cut went down by about 1% because the likelihood that there would be a bigger one went up by about a percent. And that's it. So there really wasn't much impetus to price in really anything into the front end of the curve, but the back end of the curve, that's an interesting story because that's the only place where there was conviction. Which brings us back to this story here. The idea that the markets and the Fed have been basically in line since we recovered from April's lows. That essentially, we've been sitting in and around the Fed's 50 basis point, give or take, forecast since mid-May. And that with these likelihoods for change at the 25 basis point increment hovering in the 90s, there's really not a thing to speculate on. The markets know that this is going to happen. And if it doesn't happen, then all hell might break loose because everybody is so thoroughly discounting it. So one might be forgiven for saying, well, the rate move next week is kind of a given. It's a foregone conclusion. It shouldn't be anything that should inspire a price response this way or that you get data in favor of that outcome, as the PPI data was. The larger issue, and this is why this sort of differentiation between weakening demand, which is not what we saw in the PPI data, versus squeezing margins, which obviously we did, why that distinction matters.
because it doesn't extrapolate neatly into what happens next year, where the big discrepancy seems to be, and where the real event risk for next week's policy announcement lies. The Fed is going to update its summary of economic projections. They said in June there's only one rate cut coming next year, and the markets think there's at least 3. So there's a big, big gap. Moreover, if you look at the way that this has evolved relative to the S&P, we can see here is the recovery from the lows, both in sentiment and in rate cut expectations. It runs through mid-May. In mid-May is where you rebase to where you were on the stock market, which broke out here, and on policy expectations for this year. Here. Full reset. The big difference is then what happens on the outlook for next year, where things move all the way out to this expansive, dovish view, and which seem to explain how the S&P 500 has found itself here. Because if they're moving together here, the policy outlook and stocks, because the scare is growth, and once the growth scare goes away, they both rebound, at least until this point, everything that follows is divergent and seems to reflect hopium for cheap money. Interestingly, the US dollar, of course, declines as all of this is occurring, but as of July, it stopped falling, even as the outlook gets more dovish, seemingly suggesting that something here is amiss, that for whatever reason, this is not a growth story and more a sentiment story. And this is perhaps why the dollar, a go-to safe haven, outside of this spook right here, which obviously the markets have now moved through, that's what you'd think would happen. You'd think cash would be relatively well supported, if there were, in fact, a sentiment concern. And if this melt-up was mainly a sentiment thing and not a reflection of sort of hard-nosed fundamentals. It is with this in mind that, of course, we focus on the big data. August CPI report. The expectation is that we're going to get a 3.1% year-on-year core rate, and that the headline will go up to 2.9%. Now, this is interesting in the sense that if we look at what this means for the headline, it does mean a rise. That would be the highest reading since January, 2.9%. Whereas for the core, it would be unchanged from July. And so perhaps this is the kind of thing that the Fed can say, well, you know what, we care more about the core than we do about the headline. Surely we have no agency over global food and energy costs. So as long as there's nothing untoward occurring here at the core, we can justify these cuts. And again, the market thinks the cuts are coming, so that part isn't controversial. It's really the risk that there is an upside surprise in this data that then throws off the Fed's ability to come the market's way on the outlook for next year. Now, if we look at the way that this has behaved recently, we can see, especially if we squint here, there's a narrow outperformance on realized data here at the headline. This is the blue relative to the Cleveland Fed's nowcast. We can see, of course, these things fall very, very closely. That nowcast is quite good. But we can see that for June, for July, the results have been tending to surprise a little bit higher. We can see that there was a bit of an underperformance at the core relative to expectations over May, June, but it seems to have evened out in July. So if anything, there seems to be a slight bias to surprise higher at the headline,
but not in any kind of a catastrophic way. Moreover, if we look at the numbers here for the sort of 6-month annualized, 3-month annualized dynamics of inflation, something the Fed looks at closely, we can see here the trend really since the beginning of the year has been toward the breadth of this cooling, even as from March onward you get a pickup in monthly increases, both headline and core. So you go from very low readings here, even slightly negative on headline, to obviously meaningfully higher ones, but momentum in inflation hasn't seemed to pick up on the whole. So ostensibly, the Fed can justify this cut. The question is, can they justify more next year? And so one might wonder if the Fed goes up to 50 basis points here and is instead looking not at 3.6, but perhaps again back to 3.4, well then at least the markets have had some movement in their direction without there being a scare. But if that doesn't happen, and if the CPI data suggests it won't happen, well then this starts to look like perhaps a revaluation is going to get forced. Now, positioning wise, nothing has changed for me. Obviously, the bonds have worked well, being long that, and so I'm still sitting in these TLT verticals, these call verticals, as and until. They're still working so far. Same thing for these short put vertical exposures in gold. I'm still long the dollar, which certainly didn't go quite as planned with the PPI data today, but the fact that it's not selling off harder and that it still seems to be bottoming appears to be an interesting thing, despite a setback today. In fact, the euro kind of pointedly, as did the yen, erased its earlier gains. So either the market doesn't have conviction in this and it's going to go the wrong way on me tomorrow with CPI and then I'll have to get out, or the dollar is trying to hint at bottoming regardless of all of this, and then perhaps this is a trade that's going to work better. I'm still up on it on net, but certainly less so than a few weeks ago. And I'm still looking at a risk-off outcome here on the sentiment-based assets, looking at still put verticals in the NASDAQ, as well as in S&P, and a little bit in Bitcoin, looking for the markets to get ultimately disappointed in what they see from CPI tomorrow, or at least taking the risk-reward view that that's the more interesting bet, no matter what happens. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what may happen thereafter. I'm writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
All right, we're back. Tasty Crypto Show. I'm Dan Cecilia, and with me today is my sidekick, Shelly.
Hello, Dan.
How we doing?
I'm doing well. How are you?
Good. I'm good. Yeah. So what's going on today?
It's Wednesday.
Yep.
We got Donna Ski in the chat. Big Deal Donuts.
What's up?
Who else is here? Say what's up in the chat. We're also streaming live on X, so shout out to anybody over there. I'm trying to get all the chats in order so we can keep an eye on everybody. I'm over-caffeinated, as you are aware.
I'm repping Tasty Trade today.
Me too.
Yeah.
Kinda.
Yeah, get in the company spirit here.
Crunchy.
Repping the brand.
That's right.
So let's get into the show. We put together a quick research on research analysis.
Because shoulda, woulda, coulda
Yeah.
is I have a question for you in the chat. What is a shoulda that like haunts your thoughts?
Should have bought Bitcoin, a lot more Bitcoin in 2017.
Yeah.
when I first started working.
Because you were there, right? Like you
Yeah.
could have.
Yeah.
You just didn't.
I didn't put enough in.
Yeah.
You know, but I think it's interesting, and that kind of brings us to our analysis here and what we got for the show, because you actually didn't need that much to put in at first. So if we go to the next slide, we're going to discuss DCA because, you know, I think a lot of people try and time the market in crypto, or they don't, some normies, if you're not deep in crypto, you don't pay attention enough and you're like, oh, it's 120K, it's all-time highs, I need to buy in. And then next thing you know,
you bought the top.
You bought the top, or, you know, you're not consistent. So DCA.
So what is DCA
So
for
what
anybody
is it?
not in finance?
Yeah, so do you want to read it, or?
I can't see it, so I mean, I know what it is, but if you want to read it.
All right, so DCA, dollar cost averaging. It's an investment strategy where an individual buys a fixed dollar amount of an asset at regular intervals, regardless of its price. And I think that's the key, is regular intervals, fixed amount, regardless of its price, right? So this reduces the impact of volatility and kind of your emotions getting the best of you, which, as we know,
It's an accumulation play.
Yeah.
Like, I just want more of this thing at a relatively good price.
Right.
Like, I'm not trying to buy the bottom. I'm just trying to get a position
right
over time.
And almost like not pay attention to it and just stay consistent, right? Because you're not worried about the price, you're not worried about volatility, you're not worried about the day-to-day or even week-to-week swings. You're just saying, I want to hold this asset long-term and I want to accumulate a position. Completely takes out, it's automated, completely takes out your emotions, and, you know, allows you to build a long-term position in this. So, you know, this was an interesting conversation. I mean, you were talking off the side of the desk. We were like, what if we did just invest $10 since 2017, you know, when I first kind of really got involved in Bitcoin, which was 2017.
How much Bitcoin did you hold at one time, like in the early days?
Nothing. Like,
really?
Yeah, like really, I was like one of those people that was like interested in it, but couldn't pull the trigger to a large enough extent. I mean, I didn't have a lot of money then. I was just coming out of college, so it's not like I had, you know, tens of thousands of dollars, but I think I put a couple grand in.
Yeah.
You know, but I not enough. So, and there wasn't a lot of tools like this back then. It was barely even accessible on regular platforms. So
my biggest shoulda, woulda, coulda is I had like probably half a Bitcoin at some point, but I spent it.
Really?
Well, yeah, because I got into ordinals and I was literally using it as a currency, and then was like, yeah, I should have just held that.
Yeah.
So, oops.
Yeah, I bought into the whole like collectibles on Bitcoin thing, and then somebody said to me once, they were like, yeah, but don't you just value the Bitcoin more? And I was like, you're right. It wasn't
good point.
Yeah, like, what if I had just held Bitcoin instead of buying these like stupid pictures? NFTs didn't feel the same way though. I felt like in ETH, it was like, yeah. So different. It was a different feeling, you know, a different kind of thing. But anyway, you know, it kind of made me wonder, what if we just do kind of a quick dirty analysis on what if you DCA'd $5 a month into Bitcoin since 2017? So I think that's a really reasonable amount. You know, maybe we're cherry picking a little bit the time frame, but I thought 2017, that's when I first really got, you know, deeply involved and, you know, understood Bitcoin. So it was like, what if I did put $5 in a month? So if you did do that, you would have had total investment of $525, 105 months times $5. You would have owned 0.0603 Bitcoin at an average cost per BTC of 8,713. So if you had just set up a recurring purchase, DCA in $5, didn't even think about it, that's, you know, basically $500. If you just were like, I'm going to consistently buy $5 over 5 years or whatever, 9 years, you're basically investing $500. You'd own 0.06, and your average cost basis is $8,713, which is the original idea of this, is where it's kind of like lowering your cost basis or smoothing out your cost basis, rather. Like you don't need to time the market, essentially.
Because you're buying the highs, you're buying the lows, you're buying the mids, you're buying everything.
You're buying everything. And it doesn't matter. And I think, I just want to pause before we kind of get into the returns and value of this, but I do think that's a big mistake I see newer crypto investors make, is they have, maybe they do have $500 that they can ape in at one time, but they do that at all-time highs, right? Like,
I think it depends on the asset too. If your strategy is to trade volatility, then okay, that's a different play. But like if you're just trying to accumulate something that you're bullish on long term.
Yeah.
Yeah.
Well, I mean, I just think like if you want to dip your toe in and you find it a compelling asset, you're not willing to go and do DeFi stuff, or you don't trust like ETH or any of these other tokens, and you're just like, all right, Bitcoin makes sense to me, but I still am, I'm a little wary. Don't try and time the market. Don't try and just throw a bag in, and you'll end up kind of crashing out, I think, because possibly. Because I think what I see, the mistakes I see is just from my friends or people that aren't deep in the space like me and you, is they always come to me when it's all-time highs. It's never when it's pulled back 40%, or everyone thinks it's dying, which is when you're supposed to invest, because it's oversold. Yeah, buy the dip. It's always when it's all close to all-time highs when they start paying attention, right? So to avoid that, I think this is a pretty easy way.
Great option, yeah.
Do you have any DCA set up on?
I do.
Okay.
I have a couple set up through Tasty Trade.
Okay.
For Bitcoin and ETH.
All right. So before we get to the returns, let's if we could go over to the platform, we should show how to set this up, right?
Yeah. But do you want to? Oh, you're gonna. Oh.
I want to show the returns after this.
He's in the returns.
Yeah.
Got it. Hello to the people on X. We've got Pensive, Chepe. I'm saying that wrong. And Jay Horizon is with us. So what up, friends?
What up? If you are, if you are in the chat, are here with us, just shout us out. Some TC token holders there, I think. But yeah, so we added this recurring purchases feature to the platform very recently. To find it, you can just bring up Bitcoin. It's on the left-hand tab. It's below watch list. So it's this invest tab below watch list. So to get to the crypto recurring purchases, left-hand tab here, invest. We'll only have it set up for crypto right now. Eventually we'll have other assets, but right now it's just crypto, which we love. But if you do want to do $5 a month Bitcoin, really easy to set up. Right over here on the right-hand tab.
Or more. It's not limited to $5.
Yeah, but
let's make that clear.
The study, I think, is $5, so I can show how to set that up. You can do it monthly, right? So here's the frequency: weekly, bi-weekly, monthly. Choose monthly. You can pick your start date. I got tomorrow, September 11th. You can start at any time really, but it'll start it from the date you select your account, and then you can fund it from your buying power, or you can actually just do an ACH in and buy it from your bank account. So you don't even need,
to hold it, to balance.
Yeah, to hold a balance. But so pretty easy to set up. You can see the chart here. It'll give you the overview. $5 a month, monthly, starting tomorrow, Thursday. Estimated total cost, $5. Buying power effect, commissions, $0 commissions, obviously. So you can submit that, and or you can go back and edit it. So I guess I'll throw it in. Set up a $5 purchase.
Nice.
I also have Aave and Link set up because those are two tokens that I'm trying to accumulate.
Accumulating.
Yeah. Is there any other tokens you're looking at?
So,
what do you have set up?
I have Bitcoin and ETH. I had Sol, and for whatever reason, I turned it off, and now I have regret because I want more Sol.
Not too late.
It's never too late. I'm gonna get in there and turn a bunch on. I might just throw like $5 at everything.
Yeah, right.
Why not? So let's see the results of if we could go back in time, shoulda, woulda, coulda.
Okay.
In 2017.
All right, so let's pop back over to the slides here. And let's get to the returns. So, what do the returns look like if you DCA'd $5 a month since January 1st, 2017? Mm-hmm. And real quick, I want to see what was the price then? Let me see if I can quickly pull it up. Just go over to Trading View. I just want to see what the price was when you started.
What up, Fred Arm? Good to see my Metaverse homies in the chat.
Are they here?
Mm-hmm.
Nice. All right. Let's see, January. Okay, here we go. January 2017, Bitcoin was at $6,000. So if you started this January 1st, 2017, you'd be buying $5 worth of Bitcoin at Bitcoin $6,000. It's currently 113,000. So let's see. You'd have a total return of 1,202%, which is an annualized return of 34.4%. Total profit of $6,311, and your portfolio value would be $6,836. So you're basically like 12xing your portfolio value. That was like an original $500 investment over that time frame. You're basically 12xing that, which is a crazy compounded return, 34.4% per annualized. So yeah, if you literally just said, I'm going to buy $5 and not look at it for 9 years, 8 years, 9 years.
Not a bad passive return.
Right. So I think that's why we wanted to show that, because that shoulda, coulda, woulda. If I could have just said, I don't need to think, I'm okay. Hey, if Bitcoin went to zero in that time and I lost $500, I'm okay.
Not the end of the world.
Yeah,
it hurts,
for me at least, it hurts, but yeah. So I do think that it's a pretty compelling argument for DCAing, right?
Yeah, absolutely. And I think for a lot of the assets, especially since we're starting with crypto, it just makes sense to start filling your bags if you have long-term bullish, or if you don't have the time to stare at charts and you're like, I want to get in on crypto, but I don't want to pay it that close of attention. It's like, okay, this is a great option.
Yeah. I shout out the product team for launching this. This took a lot of work. We've seen some great success with it too. So a ton of people are doing this. And I mean, I am as well, weekly buying some of these tokens, because I don't always want to look at the charts, and
even though we are,
but like, I think this is like my hedge, right? I don't need to be emotional about this. I just need to stay consistent, So, yeah, I think it was just an interesting conversation that turned into like, hey, let me ask AI what this would look like. So, pretty compelling results here. So, yeah. So what are you trying to set up for recurring buys? Because I think Chainlink is one that's slept on.
Yeah.
That's one I'm trying to just accumulate, because I'm like, I don't even want to look at this. I just want to buy it and see where it goes.
Yep. Okay.
Yeah.
I'll do it too.
You can do Chainlink?
Yeah. What else we got? Oh, you already set one up.
Yeah.
And then let's take a peek. Can we take a peek at the TC token and just a little bit about, for anybody here that is not familiar with the TC token, it's a token Dan and I launched on our show Beans. If you're not paying attention to Beans, we are live every Friday on the Tasty Crypto YouTube channels and X channels. So if you're not subscribed to the Tasty Crypto YouTube, please hop over there, subscribe. Also, get on our newsletter, pinned to the chat over here on YouTube.
People are trading this thing.
Look at that chart.
Yeah, this chart's kind of crazy. Let's do 5 days here. So we launched this, August 27th, I think, 2 weeks ago.
Yeah.
Pretty.
We don't even know the birth date? Well, you can look.
I think it was like the 22nd.
Okay. It was the 22nd, because I remember 2/2 was like, ooh.
So we hit an $85,000 market cap today. It's been a little bit there's been some volatility, some big sellers, some big buyers. It's currently sitting at $70,000 market cap. 240 holders, $22,000 in liquidity, which isn't too bad, given, the way we launched this.
Yeah.
I just got it verified in a couple other platforms, so that should bring some more attention to the token. Community's helping out a ton too. Shout out to everyone here who's a Tasty Crypto holder, token holder, and has been tweeting at us and helping us kind of get things going with this.
Yeah, just talk.
Yeah.
The content is fantastic. And if you're on X, go to the Tasty Crypto channel account.
Yeah.
Wow. And hop in that community, because that's where we'll be posting a lot of updates. There are a lot of internal conversations going on now. So I think that's all we can probably really say.
Right.
But we'll be live on Beans, checking the LPs, and sorry, go ahead.
I mean, we have more plans for it that are outside of just looking at price. Like this token isn't, we're not trying to just look at charts or pump whatever, like trade it. This token is supposed to be used, within our ecosystem and help people learn DeFi, I think, and get involved, right? So if you were a little skeptical about on-chain crypto, doing things with a wallet, and you want some TC token, just hit us up. You can email us, you can DM us. I'll send you some if you set up a Solana wallet, and you can kind of, I guess, have a part of the brand.
We support the Tasty fam.
Yeah. So just wanted to take a look at that. I think it's interesting to watch some of the trading activity on it. There's some pretty big holders in here. People are catching wind of it. We've had some tweets, some tweet threads about kind of what Tasty is and how it's related to tastylive and some of the stuff we do. So it's just fun to watch that kind of grow organically. And the holder count's been going up. So we were at 200 last week. We got an extra 40, or we grew by 40 this week. It's been fun. It's been interesting. We have some more stuff we're doing with it.
Definitely jump in the Discord too, because we've got some more like just fun community activities.
Yeah.
I'm going to turn Dan into a cherry GIF. Before we leave today, we forgot to do that earlier, but we need good daylight because I want your eyes to really shine in natural sun. So it'll be...
You're going to make me look like a cherry.
Oh, yeah.
Yeah.
Uh-huh.
Okay.
For the gift game.
Yeah.
Mm-hmm.
Fair.
Yep.
So, hey, maybe this is time to do a recurring investment in a Tasty Crypto token.
Can you set that up on Jupiter?
Yeah, you can, recurring right here.
Nice.
So, well, who knows? Maybe $5.
Hey.
Maybe it's worth it. $5 a month, Tasty Crypto token.
Coulda, shoulda, woulda.
Yeah, right. So, I like looking at it. Try not to look at it every day because we got a lot of work to do with it. But again, if you want to participate and have some type of, I guess skin in the game, so to speak, buy a little bit or reach out to us, send us your Solana wallet. I'll send you some. Mm-hmm. So again, not an investment, it has no value to anything. It's just a content token we launched and it's a fun experiment. That's all.
Yeah, absolutely.
So got a few minutes left. What, anything in the chat or anything else you want to?
Pensive Chepe says, regret is another issue us traders suffer from. Yes.
Yep.
Yes. Awesome DCA tool. Let's see, YouTube chat's popping off. Look up Ash Finn. Is that Bags founder, yeah?
I've been messaging him in DMs. He's a busy man, so.
Very busy man.
So
for anybody who's wondering, Bags app is how we launched this token. It's a Solana coin generator. Probably not the right word.
Yeah.
But we are in DMs with Finn and hope to get him on the show just to have a very fun chat about what's planned, what's going on that platform, because things are changing quickly. Even every time I open the app, I'm like, oh, this is new.
Yeah.
Yeah.
I'm just trying to go through the chat here and just see.
Hello, Jacob. Jacob's here.
Jacob is here?
Yep.
What's up, Jacob?
So yeah, Friday show, we'll do another burn, token buyback, we'll claim the fees. So lots of activities.
Yeah, if you really want to know a little bit more or get involved with the TC token, we're doing that on our Tasty Crypto channel Fridays. We'll show you how to LP in DeFi. We'll show you how to buy the token in DeFi.
Sure.
Anything you guys want to, do that's crypto native on chain, we're doing that on the Tasty Crypto channel. So definitely vibe with us on Friday. I like that show a lot. I like doing that.
It's a ton of fun.
That's our...
Oh, that's funny. Different Ash Finn. I don't know that what is his first name? I'm now commingling two founders' names. There's Finn.
Ash Finn, who is that?
But I was thinking Ash Connell from HyperFi, and I just melded the two.
I have the
Hi,
video
Dad.
coin on Tasty Live events. Not sure that's the same. No, Big Deal Donuts. That's a little bit different, or not the same thing. This is an actual crypto token. I
On
think
Solana, yeah.
Yeah, on Solana. That's not sure. That must be tied to some of the content they do on Tasty Live, rather. It's nice that you've all built an interesting community around learning about crypto apps and investment. Thanks, Donna. We appreciate that. That's been the goal all along. We're glad that you're here with us and
Learning with us.
Learning with us, yeah.
Even launching this token has been a learning experience. Like,
Yeah.
Dan's launched projects, I've launched projects in the space, but every time it's like, whoa.
Right.
But it's always all about the people.
Yeah.
Like, isn't that the common denominator in crypto?
Yeah.
Community
The community, like
is everything.
and getting them involved like early, right? Imagine if you could have helped us build Tasty Trade 11 years ago, 12 years ago. So, yeah. Any other questions from the audience? Anything you guys want to know? Drop it in the chat. We can go over it real quick. We got about 2 minutes left.
Mm-hmm. But throw that slide up for the newsletter, just because if you're not on it,
Or set up your recurring investments.
do that.
But
Not financial advice.
Tasty Crypto newsletter. Sign up at tastycrypto.com. It's literally the first it is the landing page. Just enter your email. We send out a weekly newsletter.
2 a week.
2 a week.
Midweek market update.
Although
Dan's like, I forgot about that. It's Wednesday. Ryan is out because he had a baby boy. So it's just Dan and I. Lawrence is also out. So just Dan and I for a couple of weeks. So things are running on a little bit of a skeleton crew.
Yeah.
But yeah, typically
They left-
2 emails a week.
they left me and Shelly in charge, and they shouldn't have done that. No, I'm just kidding. But yeah, we'll send an email out. It's our analysis. We send it out normally 2 a week. We'll send one out on Saturday. Sign up. We do some deep dives there. I'm going to start adding more DeFi plays because I think people want that, I think, or at least I find it interesting. So if you guys want some more serious crypto plays other than kind of just buying stuff, we go into some deep analysis there. And yeah, so any final thoughts from you?
Just come on over on Friday. Friday morning, 9 a.m.
9 a.m. Central.
Beans, where we spill all the crypto good stuff.
Yep. All right. Well, that's it for today. I'm Dan.
Hold on.
We got some.
Data trader. Can't be Daniel Master Lock without the lock of the week.
I haven't been doing the lock of the week. That's so true.
But shout out to Data Trader, because that's like
Yeah.
a loyal reader.
Yeah. Al, how can I ask for some tokens? Come over on the show on Friday, 9 a.m. Join us. Drop your Solana address in the chat or shoot us an email with your Solana address. I'll send you some. I'll send you some.
Streams live on Tasty Crypto, X, and YouTube.
Yeah.
And then one more real quick. I just lost it. Oh, how's Solana different from XRP and other coins? Solana's an entirely different chain. It's a layer one.
Solana has real users, okay?
Whoa.
So it has real users and real volume, and it's fast. So
That's a hot take, Dan.
just XRP is useful, but Solana has users. Let's just put it that way.
Mic drop. All right. Thank you, everybody, for being here, and we'll see you Friday.
Yep. Peace.